Good morning, ladies and gentlemen, dear members of the International Bankers Forum. It's a great honor and pleasure for me to welcome you to our European Payment Conference. I do hope that we have chosen the right topics for this day. Before starting with the opening keynote, I would like to take the opportunity to thank our sponsors for supporting our conference. My special thanks goes to FS Financial Solution, who are also leading the payment sections at the International Bankers Forum. A great thank you goes to Bearing Point, Giesecke & Devrient, and Banking Circle. Many thanks also to all the speakers who are going to share their views with the nearly 500 participants of this conference. I now would like to give the floor to Dr. Carsten Lehr. He is Deputy CEO of FS Financial Solutions and member of the board of the Frankfurt Payment Network, who are also supporting this conference. I trust that we all will have an insightful event today. Dear Carsten, the floor is yours.
Thank you, Nader. Ladies and gentlemen, it is a great pleasure for me to open this conference on the key trends in the European payment landscape. Today, you will be able to follow very interesting discussions on topics like sustainable payment, Phygital banking, Coopetition between FinTechs and banks, financial services based on blockchain, central bank digital currency, and request to pay. Payments are indispensable to our daily lives and to the functioning of our economy. They allow money to fulfill its role as a dependable means of exchange. Therefore, ensuring the smooth functioning of payment systems must be the task of all relevant market participants. Payments are undergoing fundamental changes, driven by the digital revolution and its impact on the demand for new forms of payment, the provision of innovative payment services, the response of public authorities, and the future consequences of the current geopolitical changes. Banks, fintechs, and central banks have a key stake in the digital transition of payments. They are adapting their policies to ensure that payments remain resilient and efficient. In my opening remarks, I would like to address the transformation that is taking place in the European payment landscape. The European market is registering progress due to the digital revolution. However, the transition to a digital payments market may create inefficiencies and risks that require an adequate response by European authorities and market participants in order to ensure that payments continue to serve citizens well. Digital technologies are changing our economies. They affect the way people consume and the way companies produce and sell goods and services. Radical innovation and new players are shaping the market. They have the potential to bring more choice and efficiency to payments. But an uncontrolled transition could lead to more complexity than necessary, higher concentration, lower standards, and a reduced autonomy of European payments, generating risk for consumers and maybe financial stability. All payment experts have and must have an inherent interest in accompanying the digital transformation so that payments remain safe and efficient. They must be alert and respond to at least 3 trends that are shaping the payments landscape. The first trend is the evolving preferences of European consumers and businesses. While cash is still the main way people make detailed payments in the euro area, its role is diminishing. Cash increasingly accounts for a smaller share of point of sale and person-to-person transactions in the euro area. The parallel expansion of cashless transactions has been largely driven by card payments. The trend towards cashless payments has been accelerated by and will not diminish after the pandemic. The second trend to be considered is the increased risk that would be associated with dependence on foreign payment instruments and technologies. Openness to global competition is crucial to foster innovation. But excessive dependency on foreign digital means of payment and technologies could lead to adverse effects. These relate, for example, to the ownership of critical data or issues of traceability in the fight against money laundering, terrorist financing, and tax evasion. Also, A payment market that relies on technology designed and controlled elsewhere may not be fit to support the EU single market. The market could be vulnerable to external disruption, such as cyber threats. Moreover, if the bulk of deposits are denominated in foreign digital assets with weak links to the euro, European monetary and financial sovereignty could be weakened. The euro system, therefore, has a key role to play in ensuring that innovative payment solutions offered by new players benefit European consumers by preserving European monetary and financial sovereignty. The third trend to be responded to is the evolving structure of the payments market, which risks becoming both more fragmented and more concentrated in each segment. On the one hand, there is a risk of excessive concentration and insufficient competition in each market segment. Europe is already experiencing the dominance of certain payment service providers. In the future, concentration might be exacerbated by the ability of global technology firms, the so-called big techs, to leverage their large customer bases and offer payment services in Europe and globally, initially bundling them with their products and gradually extending them to a broader use cases online and in shops. Given the strong network effects in payments, these firms could acquire excessive market power. On the other hand, the acceleration towards digital payments is adding to the diversity of payment methods, but it is also increasing market fragmentation and complexity. New fintech players increase potential competition and innovation, but only a fraction of their innovative payment solution is usable for the most common transactions. Moreover, domestic card schemes are often not usable in other member states. The risk is that payments are not as simple, efficient, and affordable as they could be. The Eurosystem must respond to these risks by facilitating market entry and diversity in the supply of payment services, in particular by European players. This would foster competition in all parts of the payments value chain, ensuring that Europe can be at the cutting edge of innovation and efficiency to the benefit of customers. Faced with a changing payments landscape, the Eurosystem has put in place a comprehensive strategy to foster a competitive market that is capable of responding to changing consumer preferences and is rooted in the EU framework and our single currency. Furthermore, the Eurosystem's retail payment strategies aims to foster competitive and innovative payments by providing cutting-edge payments infrastructures and supporting pan-European solutions. A fundamental component of this strategy addresses the need for pan-European initiatives that allow consumers and companies to have easy access to efficient payments. Any such initiative would need to fulfill 5 objectives. First, pan-European reach and seamless customer experience. Second, convenience and low cost. Third, safety and security. Fourth, European brand and governance. And fifth, global acceptance. Initiatives by the European players to create unified pan-European payment solutions are not only highly welcomed, but also strongly required, taking into account the rising appearance of at least 2 payment hemispheres on a global level. Keywords are here SWIFT and the CIPS, the China International Payment System. The recently launched European Payments Initiative, EPI, seeks to replace national schemes for card, online, and mobile payments with a unified card and digital wallet that can be used across Europe. To succeed, it will need to overcome the existing fragmentation of national card schemes with a view to covering the whole EU and offering a credible alternative to global players. Another key element of the EU strategy is the fast development of instant payments, which allows householders and businesses to get access to their funds immediately and in central bank money, eliminating any financial risk for either the payer or the payee. In 2018, the Eurosystem introduced a powerful platform for the continuous settlement of instant payments, TIPS, the Target Instant Payment Settlement, putting the euro area at the forefront of retail payments. The EU retail payment strategy was also updated to embrace the objective of fostering competition and an innovative European ecosystem for payments. This includes actively supporting European fintech companies and promoting the use of pan-European harmonized electronic identity and signature systems in retail payments. In fact, the European Commission's retail payment strategy is setting the stage for European legislation to contribute to objectives such as making instant payments the new normal and making cross-border payments easier, faster, and cheaper. At the root of these oversight activities lies the principle of same business, same risk, same requirements. ECB's new oversight framework for electronic payment instrument schemes and arrangements, also known as PISA, extends this approach to all relevant sectors in the payments markets, including the big tech firms. A properly designed oversight framework is necessary to guarantee competition and innovation in the payment market, while limiting the risks that new products and new players may generate. To avoid regulatory arbitrage and ensure a level playing field, it is critical that issuers and service providers of significant cryptocurrencies are also regulated, supervised, and overseen at a European level. The European Commission's legislative proposals on crypto assets, MiCA, are an important step in this regard. Together with its proposal on digital operational resilience, DORA, and the ECB's revised oversight framework, they will address the broader risks and threats posed by new products and players. The euro system, the euro area, work on a digital euro is an insight into the future of retail payments. A digital euro would make digital central bank money accessible to everyone. It would provide access to a simple, costless, risk-free, and trusted digital means of payment that is accepted throughout the euro area. A digital euro would both shape and promote the digitalization of payments, in turn supporting the digitalization and modernization of the European economy. If properly designed, it would allow banks to build new business models and offer their customers cheaper and innovative services. It would increase privacy in digital payments thanks to the involvement of the central bank, which has no commercial interest related to consumer data. A digital euro could become necessary in a number of scenarios. For example, if people would become reluctant to use cash, if other electronic payment methods could become unavailable owing to natural disasters, or if foreign digital means of payments threaten to largely displace domestic money. But introducing a digital euro could pose challenges. Some are technical, such as cyber risks and the protection of privacy. Others are related to the possible impact on the activity of banks, on financial stability and monetary policy. A properly designed digital euro would need to address such risks. The euro system is carefully examining the economic, technological, societal, and strategic implications of the possible issuance of a digital euro. Let's hope that if and when developments make it necessary, the ECB will hopefully be ready to issue a digital euro that meets the needs of Europeans. As the speaker should exhaust the topic, not the audience, I would like to conclude as follows. First, European authorities must be attentive and ready to respond to the ongoing transformation of the European payments landscape. They must ensure that digital payments are underpinned by a competitive and innovative market capable of meeting consumer demand while preserving European sovereignty. Second, to reach these objectives, the Eurosystem has set out a comprehensive strategy based on the complementary elements which range from the provision of cash, the promotion of pan-European payment solutions, the fast deployment of instant payments in the entire euro area, the introduction of a new comprehensive oversight framework embracing new products and players, and the preparation for the possible issuance of a digital euro. Third, the action on these fronts will help to foster a resilient and innovative European payments market. It would be wonderful to know what the future might look like, but we simply do not know what the future holds. The best, perhaps even the only way to predict the future is to create it. Let's build this future together. Please enjoy today's conference, and thank you very much for your kind attention.
Good morning, ladies and gentlemen. I'm very pleased to welcome you to our first session today about sustainable payment, the new eco and purpose-driven consumer. We have a very good group of people discussing that with us. The introduction to our keynote will be given by Mr. Rummer. You know Mr. Rummer, he is member of the board of DG Next Solution in Wiesbaden. Before he joined the board of this very strategic company, he worked for another very strategic company for Diesig and Gavrion. And we also have some other participants in our group today from Diesig and Gavrion, which will join our discussion later on. Not to make up too much of our time, I would like immediately to ask Mr. Marco Rummer to give us his keynote, which will be a kind of frame of our discussion. Mr. Rummer, the stage is yours.
Thanks, and also a warm welcome from my side. I'm really happy to give some insights what we are thinking regarding on sustainability, especially, of course, in the financial sector regarding the payment industry. As said, I'm working for DG Next Solution, and they are part of the cooperative world. And I joined the cooperative world a couple of months or 1.5 years ago. And of course, I had to learn to understand the real value and the DNA of this organization topics. And what I see now is there's an unbelievable perfect fit regarding sustainability. And we shouldn't only focus on the E, also on the social and governance topics when it comes to the cooperative mindset. And that's why I'm really convinced that this topic is interesting, and we see we are linking this, of course, with business, and it's successful. So sustainability necessarily doesn't mean only investing. And what you can see is there is a chance to win customers, to keep customers, to convince, to be aware, to convince customers that they have to be more aware on their carbon footprint and topics like that. So we have a chance. Of course, in a couple of years, it will be a hygiene factor and not a differentiator anymore. Yeah, regarding the headline, sustainable payment, when it regards to banks, the task is a bit more. The first thing is we shouldn't only focus on the E, but what's currently, of course, in the headlines in the newspaper, it's more the topic of economy and ecology. But also the social topic regarding inclusion, security, bringing awareness, education. Also the topic of inclusion. There's much to do, and the banks are in an unbelievable, perfect fit role to drive these changes directly or indirectly. Because they also do credit allocation, and they do asset management to invest into the right companies. And they have, of course, when it comes to consulting, an unbelievable educational topics on, and of course, their own carbon footprint and their own behavior is also relating. And that the banks are close, local, regional, and they are supporting the supply chain topic regarding supporting local infrastructure, local supply, and local development. The consumer decides. Yes, of course, the consumer are pushing and asking for solutions and offerings they want. So they are really convinced. We also see in studies that there is a big price elasticity, but at the end, also the solutions must be there. The banks have to integrate FinTechs with the right solutions, maybe sustainable solutions. And at the end, there must also be the right framework, and the regulators and the politics are working tough and hard on regulatory topics. But we have to be careful that they are not too tight, and that they leave open space for good ideas and development, because what you can see also, we are very, especially in Germany, very black and white. So this is a green company, this is a good company, this is a brown company. Oh, they don't get credits, they have to pay, but we have to value the transformation. That's a very important step. And currently, I don't see this valuing the transformation. Yeah, so ESG is, of course, the topic sustainability, and I don't think we have to rephrase the necessity of being more sustainable. If you look at the Kyoto Protocol, the target was to reduce until 2050 our carbon footprint by far. And what happened the past 20 years, the curve is getting higher and higher. So the point where we have to come to the target is getting, of course, far more ahead. And to achieve this, it's getting steeper and steeper. So the problem is we don't have an awareness problem. I'm pretty sure we have an execution problem. We have ideas, but maybe not combined in the system. There are ideas, there's regulation, there's a demand for it. And sometimes you have to decide, there we are still lacking of execution and changing, but we don't have an awareness problem. And I think the banks are in a very good position to drive these changes. And of course, everybody is shouting on banks, oh, they're doing their profit. And of course, they are in constraints regarding interest rates and all these topics. But and now the politics are asking for banks, please support us. It's interesting, but at the end, I believe there's also big business and sustainable business also on the economical side for the banks. So the role for the banks will be enormous, and there's already something going on. So, and when it comes to ecologic topic from the ESG, there are already a couple of different cards outside, plastic cards or less plastic cards, recycling ocean plastic, wooden cards. The complete payment transaction is getting less energy consumption. So the POS infrastructure is there, it's secure. So also the S side, the social and the governance side is there. So it's secure. It's cheap, especially in Germany. So the transactions in Germany with the Girocard system are really perfect fit. And but there's much more. I think you can hear it later from Matthias. We have now to integrate solutions that also, when it comes to the social topic, that increase the awareness of the buying behavior. When it comes to the payment, and you see in your statement why when you do the transaction or later and in your bank statement, it's perfect to see your carbon footprint consumption. And these unbelievable good ideas, they have to be integrated into the core of the banks. And then, of course, we also don't only support the ecological topic, also this social topic. When it comes to governance, as said, the view in Germany is that the banks with their footprint in the region, in the local area, is still there with the Sparkassen and of course with the Volks- and Raiffeisenbanken. So they are very local. They are supporting local and regional marketplaces. Of course, everybody's talking about regional ecosystems, but they are really supporting this, and they are kind of transaction melting pot in the middle. So I think the banks are, as said before, they are in a crucial and important role to drive these, and they can, of course, do business with that. I think one really good example is the cooperative brand, because you see there's long tradition, maybe sometimes not the sexiest or the fast mover, but at the end it's sustainable. We really see good progress, and of course a good mixture of social, economical, and ecological KPIs and success. When it comes to theory, a lot of people are talking now about regenerative capitalism. So the KPIs in the world are changing from a bit more from revenue, EBIT driven to additional KPIs. And I think this is something that changed the world and is a bit of a layer or umbrella function that has to develop. So we are on a transformation base, and the banks valuing these KPIs as well, and not only the profit and loss statement. I think they can really participate in the change. When it comes to purpose, the people are really demanding, especially the younger people. So we made a study and we see really a price elasticity. And second, we also see they really take it serious. They really take it serious. So it's not enough to say we are ESG conform. No, they really want to see the carbon footprint when they do the ETF. So in a company in the ETF. So we have high demands regarding to union investment that your sustainable ETF is interesting, but I want to see each company, I want to see their carbon footprint, and I want to see their ESG ratio. So it's unbelievable. When I was 18 to 20 years old, of course, I wanted to do a bit of money, but that's it. But they really take it serious, and I think everybody experienced this. Maybe not worldwide, but especially Germany, Europe. I think we are really ahead, and hopefully without the too tightened regulatory, we really can do and make the path. At the end, as said, the bank is in a crucial individual role, because with their capital allocation and their asset management, they are supporting companies, they are increasing awareness, they are supporting educational topics or local actions. So it's not only the banking and payment sector, but there's of course a lot happening. Yeah, so they have a huge lever, and we have to focus on that. And at the end, of course, we all have to do our business and be successful. But as you can see, and we have one bank in our group, that's a GLS bank. They are far ahead in their sustainability ratio. It's unbelievable, and they have one of the highest growing number in our group. So that's a sign, and they have a lot of new customers each year on year. The payment as itself is, if you look at the ecological topic, of course, there's a discussion what's happening with the bank card. There's, I said, sustainable bank cards. Then it comes to digital cards. Are they more sustainable? Of course, there's higher energy consumption, but at the end, the infrastructure is there. So that's one thing. But having only a digital card is not enough, because then it comes with the S and the G. So it must be for elderly people accessible as well. You have to get your cash. Currently, you don't get your cash without a real bank card. So it should be less plastic or a wooden bank card. So there's it's a complex topic, and we are on a transformation, and we shouldn't focus only on digital first and only digital. I think we have to develop the path and be there for everybody. And that's why we, and with colleagues, of course, are also working on biometric cards, because some people have security reasons, or elderly people, they prefer something like biometrics, or even cards that are supported with an app for people who can't read or are blind or whatever. They get support with their mobile to do the transaction and get the security and trust to the merchant. So there's a lot of topics going on. At the end, we should be careful, not only focus on ecological topics. The bank should be a driver and has a benefit out of that. There is a window of opportunity to win new customers, to keep the customers, especially, and the young generation. They really have a big demand. And at the end, it's a kind of system where everybody has to contribute. So the consumer is asking for that. We need to integrate as a bank good fintech payment solutions to derive this demand. And at the end, we need a good regulation and support. And at the end, it's a system approach. Everybody should be balanced and supported. But of course, that's a huge task for all of us. But let's get even faster started. So thanks from my side.
Thank you, Mr. Rummer. That was a very good introduction, which opened us a big room for discussion. First of all, I would like to ask our audience, if you have any question, please forward your question into the chat, and we will try to introduce your question as soon as possible into our discussion. What I think is also very interesting in your introduction is that we have to be careful not to become narrow-minded again. So narrow-minded again, as I said, when I started as a professor, everybody talked about maximization of profits. And now everybody talks about minimization of CO2. And that is definitely not sustainability. Sustainability is much, much broader. However, I have sometimes the impression that narrow-mindedness is just exchanged by the next narrow-mindedness. What is sustainable? It's not only depending on our CO2 footprint. Sustainability has also a lot to do with people. And when we talk about people, we really have to think about what kind of processes can be sustainable, what kind of business models can be sustainable in order to convince young people to work within your company, to convince older people to stay your customers, as our topic is sustainability and purpose. And when we talk about the purpose, we have to talk about what the heck I'm doing here, what the heck I'm using a payment system here, what the heck, why I'm working here in this company. And we will discuss whether this will make a difference along the entire line. Now I would like to introduce our other speakers, and I'll do it step by step. First, a very warm welcome to Dr. Carsten Wengel. He is head of sales and distribution of global cards and digital payments with Giesecke & Devrient, I mentioned before. And I already recognized that Carsten and Marco, they know each other for quite a long time. So, Mr. Wengel, also you knowing each other for quite a long time, I assume you will make also a small difference in your opinion, what it means sustainable payments. So please tell us a little bit what you think about this topic.
Well, thank you so much, and also welcome to the audience. Yeah, I mean, we do actually know each other. We work with each other. I also know Matthias, who will come on later on stage here. So we are actually forming quite a network already on topics that we both hold together. And I would just like to add a couple of things, because Marco Rummer, I think, gave a quite broad overview of the topic. And first of all, you mentioned I'm Dr. Carsten Wengel, so my background is physics. I'm actually a theoretical physicist. And I want to make one statement at the beginning, which may not be so well known to the audience. Matthias knows what I'm talking about, because we talk about awareness. So there is something we need to change in the way we act in life to protect planet Earth for future generations, right? That's basically, if you want to speak really broadly when it comes to sustainability, you know? And it took mankind over 120 years actually to come to that stage, because the discovery of the connection between carbon concentration in the atmosphere and the temperature that results from the carbon concentration, the law, the mathematical law was invented, or was discovered actually already 120 years by a famous physicist and chemist, Svante Arrhenius, actually coming from Sweden. And he also won a Nobel Prize of this. So it took mankind quite some time to get their act together. And I fully agree with Marco that we do have not necessarily an awareness problem. There have been conferences in Tokyo, and I think last one was here in Glasgow on the World Climate Council, and documents have been written by millions. So we clearly have an execution gap. We clearly have an execution gap and not an awareness gap. And when we talk about, so who needs to act now? I think the first thing is, Marco talked, of course, about the financial service industry and also what banks can do here. But I think the main thinking is here, of course, there are many constituents who need to act. It's the politicians, yes. It's regulation, yes. It's different industry players, yes. But what about myself, right? What about myself? How can I act, right? And do I have the necessary means also to act and be aware how I personally are contributing? And if you think about, if 8 billion people who are currently living on planet Earth would act just a little bit, what a high impact it could have on sustainability. Now, coming back to the banking environment here, because this is the International Bankers Forum, that we do have an execution gap was very visible this morning when you opened the news. So World Wildlife Fund has told us today that in Germany, on the 4th of May, 100 days into the year, we have basically absorbed all of our resources that can be renewed in a year's time. So on 4th of May, we have already absorbed 100% of the resources that would be actually available. So in effect, we would need 3 times Earth with all the resources it supplies to get there. So, and that shows actually how dramatic the situation is. And on a last comment, and then I will hand over to Matthias, because I think we can really wave in this. I think financial service institutions can play a really strong role in this topic. And why do I say this? Well, first, it starts always with the own aspiration. You talk about purpose, Jürgen. So what's the purpose of the bank? Of course, you can say you want to make money, you want to distribute, you want to provide financial inclusion. But now this is changing. You can also be a means to drive a sustainability agenda into society, because banks are a mirror of society, right? They are connected to people like me, like Matthias. So whatever is happening currently there in society is also reflected in banks. Now, banks can offer a lot of tools to do this, right? ETFs were sound. So there are a lot of ETFs now, which drive carbon capture technology, solar industry technology, reforestation programs, clean water, right? So a lot of investment money goes into this thing. And the more investment money goes into this sustainability process, better. And banks can play to this role, right? Banks also now more and more have their own chief sustainability officer, so it becomes part of the board. They are giving themselves KPIs that then are audited in the yearly report to say, okay, did I reduce my carbon footprint as a bank? And last but not least, I think also financial offerings to consumers are changing, right? Marco mentioned ecological cards. So if you just not do PVC cards anymore, but we completely reduce PVC, that would save us a lot of oil. Plus, then offerings are becoming visible where, hey, you do a transaction with your bank account or with your card, we plant a tree for this, right? So here also the spectrum becomes much broader, and there are lots more social investment ideas that are becoming visible. So I do believe banks can really be a strong driver here and also potentially differentiate into the market for their benefit going forward. That's my incoming statements here.
Mr. Wengel, thank you very much for your statement, and also for bridging me immediately, as you told, that Swedes are sometimes a century ahead in thinking. So I'm very glad to move over to Mr. Matthias Wikström. He is the CEO of Dot Economy in Stockholm. So, Mr. Wikström, as your company is very well known, nevertheless, maybe without making a marketing part, could you also give us a little bit a statement where you are positioned with your company in this specific topic?
Yes, thank you very much. So a few words from the future then. I'm very happy to be here, of course, and extremely inspired by the very insightful statements by Marco and Karsten. And it's quite hard to come in as number 3 and try to sound equally as as smart. But I think it is also, not only do I agree with all of their input, but I think it's also in itself carries value. This conversation we're having right now, the people on this panel that are having the conversation, the knowledge that we would like to share, and the position the financial services and the banking industry can take. This panel wouldn't have existed 4 years ago. We wouldn't have had this topic. And I know because 6 years ago, we created the Åland Index methodology with the Bank of Åland. And one of the greatest findings, coming back to the economist's position, I think is quite simple. What it comes down to is to providing with ease through one source to many, the Economy Impact API, providing everyone with reliable impact calculations on transactions, products, lifestyle, and data. Looking at the basic notion, the third law of Newton, right? Every action has a reaction. And I love what Karsten is saying around the fact that we can always push the problem to a greater entity. It's not me, it's my village. It's not the village, it's the town. It's not the town, it's the city. It's not the city, it's the country. It's not the country, it's the region. It's not the region, it's the planet. And we can do that, or we can start where we're at. And that's why I think it's so important for the economy to provide actionable tools and reliable insights, working with the best partners there is in the world. because this topic is the most important topic there is. And I think Marco opening up with the Kyoto Protocol, and Kyoto Protocol to some extent, as it was not completely ratified, it was a strong signal, but maybe also a bit of a signal of many challenges to come. And challenges to come, you face best together. At Economy, we know what's ahead of us, but we appreciate much more who is by our side. Working with G&D, for example, in regard of getting these abilities out to the many, working together with Inca and IKEA, coming back to the statement of the many being one of Ingvar Kamprad's quotes. We would like to see a democratization of impact. We would like to see the world moving from financial inclusion to climate inclusion. We would like to see the academia educating the skill set needed to reach the 2030 targets, the 2050 targets. And I completely agree to your point around the narrow-mindedness. Let's not get lost in a carbon tunnel vision. This is not about carbon. This is about interconnectivity. And that's why I think that the ESG component is such a beautiful component, because it takes into consideration the cocktail effect of things, the positive cocktail effect. And I'm not referring to Mai Tai or something like that, but it takes into account the positive cocktail effect of the environmental perspective, the social perspective, and the governance perspective. And what industry in the world is equally as efficient in working with the governance structures as the financial services system, as the banking system? If I were to pick one industry to save the world, it would be banking. And that's why I think these conversations are utterly important. And I also think that the enablement of seeing the full picture, being careful with language, being careful with excluding people by using too much like narrow language around impact, locking people out from understanding the actual effect. I think academia has a role to play. I think media has a role to play. But we all need to be able to play this role on the foundation of solid impact data metrics. And that's where the economy comes to the table. But we come to the table not wearing black tie and a hat. We come to the table in a t-shirt and in sneakers saying, guys, every action matters, every action counts, because that's what we do.
So, gentlemen, you brought me into the same dilemma I have now for almost 20 years. Having good people on the panel means I just can throw away my preparation before, because you bring up so many good aspects, which I try to manage now a little bit. Let me start with a straightforward question to Mr. Rummer. When we talk about purpose, purpose also has the meaning of I want to make an impact. And as you mentioned, when you have been young, you also looked for a good job. I think my young students still do that as well. Nevertheless, we want to make an impact. We want to change something in the world. And when we now talk about especially transaction business, payment is part of transaction business. Is there already a technical possibility, for example, to follow the CO2 footprint when I go shopping, when I use the means of transaction banking?
Yes, yes, there is. There are fintechs out there. Some of them are already integrated in the banking landscape. So a close relation to the bank account. This is one solution. So in your bank statement, you see what happened the last month on your bank statement, and you see the carbon footprint consumption or CO2 consumption. And there are also other solutions. They are more linked to the merchant. When you come to the POS, to the point of sale, then you see directly in your electronic, or of course in your paper statement, what is the carbon footprint of the product you bought. So there are solutions out there, and I think they have an unbelievable huge impact, because it shows, I think it's like the same like calories when you're buying food. I think just seeing every second word after water is sugar, then it shouldn't be healthy. And if you see the carbon footprint in your statement, in your bank statement or at the POS at the merchant. I think this increases the awareness, and then you start to change your shopping behavior. And at the end, payment is then much more than just the transaction. Then it really has a big impact on, of course, ecological topics, because you change a bit your lifestyle. And secondly, on the social and governance topic, there's a big educational part of that. And at the end, of course, as I said in the morning, awareness is not a topic that we have to do something, but awareness, what can I change and how can I change, this makes it happen. And that's an unbelievable and good tool to really drive changes.
Mr. Wikström, you mentioned that banks are, no, it was actually Mr. Wengel who mentioned it, but you picked on it, that banks are always a kind of a mirror of society, and that banks have an important role to make this changing, which are ahead of us. Let's go a little bit more into the technology, which we just mentioned by Mr. Rummer. How do you have to understand it? Are you really going on to transport those informations, for example, in the XML format, along the value chain? What kind of CO2 footprint is in the situation? How do you do it technically? And then I will add this question as well to Mr. Wengel.
Thank you. So I think it is quite clever to use the banking industry and transaction rails as the distribution format. It's like the blood vessel of the world, you know, and you have some of the most trusted brands in the world today are the ones that make sure that they transport your money from one place to another. And you trust for that to happen as it is a transaction at the very core of consumption. So it's the best place to inject this transparency-driven sense of responsibility. And the way we do that is in four steps. First step, make it easy for everyone to understand little. And the final step, make it easy to understand very much about one specific thing. The first step makes use of the merchant category codes in the transaction data. And we use the best financial market data in the world, the same data that is used to do multi-billion-dollar deals, provided in collaboration with S&P Trucost. So we're putting a CO2 emissions intensity factor to each and every of the merchant category codes, scoring your spending's representation in that category's carbon footprint. The next level, and that entails that we can calculate the footprint of you buying flowers in a flower shop, because we know where you have bought something, and your spending's representation, the spend-based representation, as one of few factors in the greenhouse gas protocol. Spend-based representation in that category, but we do not know if you bought tulips or if you bought roses, which in the future can be another conversation around integrity and privacy, but let's leave that for now. Next layer is merchant ID, connecting it to the specific company's carbon footprint, calculating that with an intensity factor, making it comparable for the consumer. Who should I really be spending my money with? Should I go with these dirty guys polluting the world, being 10 euro cents cheaper? Or should I go with these guys trying to make a positive difference, being 10 euro cents more expensive? That's for you to make. And I'm not judging anyone. I'm just saying that once you know and are aware, you can choose to do something or you can choose to do nothing, but you're still aware. That's, by the way, a Jean-Paul Sartre quote. The third layer would be product category impact, so that we get down on SKU level, line item data. That's where the challenge kicks in out of another perspective, because then we're no longer talking about the transaction data being the best form of distributing this knowledge to everyone with a credit card in the world. And there is plenty of credit cards, and the G&D team is working hard to make more and more of them out of a sustainable or recyclable material. However, we need to connect that to the cashier system. And when we've done that, we can dig down on the fourth level, which is line item data connected to specific brand. In order to do that, you need to have two things: the connectivity to transport the information and the information to be transported. Unfortunately, today, the rails to do this, that's just tech that can be done. That, you know, we're working on that. The other part is the data side. How can we make sure that we make it easy for each brand to calculate the carbon footprint on product level in a consistent way so that it becomes comparable? Because data today is like opinions. Everyone has some. And that's one of the challenges. Comparability is lost, consumer is confused, action is diluted. To battle that, we developed a 2030 calculator enabling every brand to calculate the carbon footprint cradle to gate on product level, building the largest database in the world called the Global Carbon Files, where everyone can access brand connected to product to impact. That might be 2 years away, but we are now at level 2. So I think we're moving fast. But coming back to my earlier point around partnerships being one of the most important strategies of the economy, we know that this challenge is by far larger than what one company can tackle. We need to find the change makers in the world to stand on their shoulders, both so that we can get seen working with G&D, but also to see far. And one of those partnership priorities has obviously been to initially engage the many. And once you have their attention, coming back to Marco's comment earlier around engaging everyone and understanding their individual impact, then we can start enhancing. So first you engage, then you enhance. If you succeed in doing that, and if you succeed in having banks understand that this can be a profitable business, saving the world will be saved in no time.
Mr. Wengel, you already shown one of the devices which we'll discuss later on, but you also introduced yourself to be a physicist. So maybe you can give us a little bit more of insight than transaction banking, which payments is all about, will be used for much more than transferring money from account A to account B. It will be real having and making a difference. Could you give us a little bit more of insight what maybe your company is providing in respect of technology of making that possible?
Sure. And I would really build on Matthias' actually great technology stack that he had just explained. Because one thing, I think there's a general truth we all need to accept. Changing behavior is super difficult, right? People don't want to change behavior, period. Yeah, they want to do it things like they used to do it yesterday, right? And I think the topic of here making people aware what my behavior has an impact on Earth is now a first starting point. I mean, I'm grown with a management theory. You can only manage what you measure, right? You can only manage what you measure. And now being able to manage my personal CO2 footprint is really having a great impact going forward. And I think the way we look at this now, together with companies like Doconomy, is that we need to enable financial service industries who are managing transactions by the billions to give them opportunities or possibilities to integrate really a solution that makes it super visible to each and every consumer. I was talking about the 8 billion people we have on Earth, how their behavior is having an impact on what is happening to Earth and how they then can also change it. So this wonderful example, do I buy my H&M t-shirt, which comes from Bangladesh and it's super cheap, but has a CO2 footprint of X because it was shipped around the globe in order to come here into my store in Munich? Or do I take the t-shirt from the Swabian Alp by a famous owner, right? Many of you in Germany here know, right? The one with the ape. And the CO2 footprint is just a third, but of course, I pay twice as much for the t-shirt, right? And that is a very practical way to do this. And now we're going further. So we just announced, my company just announced last week, a new a partner in our ecosystem called Patch. Patch is a company from California. So now you know personally, I, Carsten Wenger, now what my CO2 footprint is. Now I can, with Patch solution, which is integrated in my payment device, I can say, okay, I want to donate a certain amount of money and I want to donate it to organization X to reduce my personal CO2 footprint. I can donate it to a carbon capturing initiative. I can donate it to a reforestation program in the Central African Republic. So, and these donation potentials are audited. So it's not just that there's something happening and the money is gone, but I have no clue. No, there's an audit trail behind it. So I know when I do this, I really reduce my footprint. I'm doing something good, right? And I can also personally maybe feel good about this because I made a change. I changed also way of my behavior, right? And what we in our company especially do now for the ecosystem, we are offering not PVC cards anymore. We are trying to change this also. We are going to 100% recycled PVC is one offering. We go to so-called PLA cards, payment cards, which are based on cornstarch, so regrowing materials that are not based on oil or any other thing that you once used and then it's over, right? Or we are working with Parley for the Ocean, a company which organizes ocean plastic capturing. So people go to beaches or even far out to the ocean and they get the plastic in, and it's then being reused and refurbished, and then you can produce new products out of it. A famous sports company in Germany, for example, is doing this and producing sneakers out of these ocean plastics. We are doing the same now for cards, right? And just to give some flavor to it, last year, G&D, so globally, there are 3 billion payment cards produced every year. Last year, G&D shipped 5 million recycled PVC. You would say it's nothing. You know how many cards we're going to ship this year? Over 50 million. So it's an exponential curve going up. Banks are becoming more aware. They want to also change the way they interact, and they want to go onto this idea. And the money or the amount of oil you can save with these kinds of new technologies and also new card systems, which we are offering, is just tremendous. And now you see how it's all becoming integrated. So in the physical world and in the digital world, we're trying to build solutions that, again, companies like the ones from Marco Rummer and others can then use in order to then work on their purpose when they interact with the consumers. And I think that's how it comes together. And to Matthias' point, that's how we are also creating ecosystems of partners or a coalition of the willing.
Gentlemen, I think this is a very, very important aspect you mentioned right now when we talk about the reusability of the material we're using, and it's also very often discussed about energy consumptions. However, those topics have been covered in many, many conferences before. I would like to pick a little bit more on these aspects of using payment systems as a marketing instrument, which could be transported much more than the information about the purchase price. As you mentioned before, within our rails, which we have built up in our banking society, where it's highly secured, which we have high-speed railway, we also could transport informations like, for example, additional information, for example, the CO2 footprint. We could also transport other aspects which might be of a very important aspect for the consumers to make a decision whether they buy the good product A or B. And there I would like to phrase on an idea which I've seen the first about 22 years ago by my colleague Javier Santomás from the IESE in Spain. And he mentioned at this point in time, he said, a modern payment system has to be a marketing instrument, similar like price, similar like package. And now I would like to forward these questions to Mr. Rummer. So when we talk about the next generation of payment system, the next generation of data transportation, transaction information systems, which payment system is all about. First of all, could you really imagine that this would be a boost for this kind of instrument, that it will say it is much more than just transporting the price information. We will put in much more information along the value chain. And the second one, as you mentioned at the beginning, you say the young people really make a difference. Could you really imagine that the banking infrastructure, the payment system, will be almost like a marketing platform where we can get the higher values included?
Yeah, thanks for the question. That's an interesting question because it's relating a bit to our cooperative DNA. Let me explain this. Of course, there's there's a payment infrastructure and it's running, it's secure, so that's stable, but including data is the one thing. The second thing is also something like a green bank account. And now we have all the components. We have the card, we have additional information, we have electronic contracts that's running through, so there are no paper printed out and stuff like that. Then the carbon footprint consumption might be related to a local, I say local because of course we support local projects, a local wood or forest project or whatever. And then it's the awareness and also the social topic or governance topic, strengthening the local area. So a green bank account is now a big more value and a marketing instrument. And this is also when we have all these data and we, of course, data lake is interesting, but at the end, what should we do with this data? I think there might be different business models based on these data to increase the local supply, because we believe in the regional or local ecosystem. So a bank as the driver of bringing customers and suppliers, so companies and private consumers together, and then increasing the relationship and then the supply from producing groceries and bringing it to the customer in a kind of virtual marketplace. Then you need data for that to increase the business and to make it transparent and to make it efficient. The second thing from digitization, it's a bit in the future, but relating to Carsten's ideas, when it comes to the mobile, there is a big topic, or two big topics. The one thing is, how do I do my asset management? And when it comes to cryptocurrencies, of course, there are the high energy consumption cryptocurrencies, but there are a lot of stable coins or ideas out there with less energy consumption and with a purpose, coming back to the consumer-driven purpose, with a real purpose to support projects or to support sustainability. And if not only looking on ecological topics, when it comes to inclusion and security and maybe also speed and transparency, we have also to talk about digital currencies. So the initiatives of a digital euro, that's coming definitely in 25. In whatever form or style, whatever, but at the end it will come. And this is maybe not in Germany or in Europe driving the inclusion, but it's driving the inclusion worldwide. And this is also a very important big component of the ESG, so of the sustainability. So it's data driven, and it's of course new digital payment models or asset management models like special stable coins, cryptocurrencies supporting the sustainability or investing in sustainable solutions or developing of sustainable solutions.
Mr. Wikström, you mentioned before that we need a kind of a democratization of the impact. What does that really mean? Does it mean that we will have always a new bubble going through our market? Now we had this idea of CO2 footprint, and now we have the idea that we have to help the people in the Ukraine. So I'll give you an example. Just last week, I have seen in my, not before in my entire life, that we have been possible to grant a scholarship in a dimension within 1 week for a young lady from Ukraine, which was not possible before, because this is now a new topic. Is democratization of impact, does it really mean that the society will need a kind of a space where they can express their most modern ideas more rapidly? And our banks have to be ready with their operational infrastructure to give the community an opportunity to reflect on their most important issues?
Well, I think the world will not be saved by banks, but the world cannot be saved without banks. Banks are critical to this. But my definition of democratization is about what democratization is all about. A functioning democracy is about each individual part accepting the responsibility to contribute to the greater good in decision making and adhering to regulatory efforts. Why is that important? For many reasons, for many obvious reasons, but also looking at where we're going with 3.0 and where we're going with the metaverse. So to me, 3.0 can be a full distribution. No responsibility. It's completely distributed all over. No connectivity. And the metaverse could actually be full illusion. Why would you want to be in a world that's going insane? Let's step into another world instead. And unfortunately, we are not trees. And as we are not trees, we can change our location. So if we don't like where we're at, we can go somewhere else. And if we go somewhere to avoid a challenge, that is not adhering to the democratic principles. That's why impact democratization comes with a pro and a con. It comes with a pro in regard of understanding, in regard of being provided the tools, in regard of being provided with the insights necessary to both make better informed purchase decisions that we're working with at Economy, but also to make better educated demands. Because on brands, you're voting every day, on politicians, we're voting every 4th year at best. So that's why I think democratization is critical. And I think that the infrastructure of banking is one of the most efficient tools to enable a functioning democracy in that perspective. Now, this might sound like 2 glasses of wine later kind of conversation. That's not what I'm after. But what I'm saying is that the functionalities safeguarding all of our tomorrow, adhering to, trying to engage around each and every IPCC report coming out, all of the trajectories, all of the target impact goals in regard to the 2030 and the 2050, with the 1.5 degree lifestyle. That is today commercial entities. The regulatory is lagging behind. The commercial is ahead of the game. And banking is always at the forefront, because where there is money to be made, there is transactions. And when there is transactions, there is trust. And where there is trust, there is banks. That's why trust is one of the most important cornerstones of the banking industry to begin with. And I think that there is a lot for banks to do in this. But I think it's fair to say that management teams at banks would be surprised if you were to tell them that they are at the forefront of impact democratization. However, coming back to the cocktail effect, not focusing only on the environmental perspective, but also on the governance perspective, utterly important, and the social component. We cannot have a world that is healthy unless it is also safe and free for the many people. And that needs to be governed according to a structure, and banking is one of the most efficient structures that we have at hand.
Mr. Wengel, we very often hear on those conferences this impetus that we have to change something to the greater good or to the common good. But nevertheless, at the end of the day, we are living in a society where payment systems are not only transporting money, we are also living in a society where payment systems have to make money. Do you really believe that in the broader sense of sustainability, which we have just discussed, that this really can make a difference when we talk about profitability?
Yeah. So you're alluding to the topic that here's a dilemma. I don't buy that. I don't buy that at all, right? If you see where innovation takes place, let's just take one of my favorites, photovoltaic and solar industry. Yeah, we see a huge uproar and investment for money going into this. If I drive here my Autobahn from Munich to Stuttgart, I can see on all sides of the fields new solar panels and gigawatt production sites being built, right? And it's good for both things, no? I mean, if you have 1 gigawatt from solar panels, we know that after 1 year, the carbon footprint of the production is absorbed. So after that, it's just energy that is carbon neutral or even reducing because you can cut off others. And it's a good investment, right? People make money with this stuff. And the financial service industries, I think it's not the same. Financial service industry, as I mentioned earlier, can enable these developments, these innovations that we all will need in order to survive the next decades and centuries. And even if you see currently what's happening, the investment level of asset groups into, for example, a carbon-based power plant on coal, it's reducing, right? It was good money for banks maybe 30 or 40 years ago, maybe even 10 years ago, but now it's changing, right? So the investment classes are changing. And so from that perspective, I don't see a dilemma at all. Maybe, Jürgen, if I just allow me, I want to make one point, because you hammered the topic of purpose a couple of times. And I know we are living in a purpose-driven world. It was a wonderful invention by marketing roughly 20 years ago. Every company now wants to have a purpose, right? And you also mentioned, is it not a marketing tool? The issue is, and here I'm coming again to the topic of metaverse, is if our messaging for marketing is such that people, normal people like you and me believe, oh, everything is already good, everyone is already working on this stuff, I have to do nothing more because it's in good hands, then something is wrong. So marketing of companies, also in the financial service industry, has an obligation to also stay sort of truth, right? What is really going on. And I think systems like what Matthias is developing that calculate the real carbon footprint, for example, is something that is necessary to remind us every day on our own accountability and our own responsibility, how we can contribute every day with our families to the reduction of this goal. And I'm just looking here parallel on my second screen on the Süddeutsche Zeitung climate thermometer. So we have 7 years left, 7 years until the 1.5 degree goal is over. And it looks like at the current structure, it's not going away. So sustainability, carbon footprint is not just another buzz that is coming from a marketing department and it's just hyped up now and it will go away. No, this one is going to stay. And if we don't take action on this, we all know something bad is going to happen, unfortunately. So we better take action. And the good news is we can still do so.
Mr. Rummer, I would like to give you our final statement. And it's about a topic we probably could spend another hour. We all talked about that we have no longer awareness gap, we have a gap in the execution. However, when we talk about execution, we have learned that payment systems can enable the consumers to be much more sensitive in respect of buying and shopping. But what can be done, according to your opinion, in order to improve the leadership in banks, to improve the execution power in the regulatory world?
I think there is currently a lot of topics going on. So I think there's also not an awareness topic, and I'm pretty sure they are all aware that they have to find the right medicine, so the right rules, guidelines to not make it too narrow and to keep it open, but also to have a clear target working on that. And secondly, when it comes to leadership in banks, I think they are what we see, especially in Germany, everybody is installing a sustainability department, not only someone driving it, and they are all of them are located close to the board. So there's a lot of work going on, and they are different companies, banks that are already integrating carbon footprint reduction in their internal target system. So I think also different educational universities supporting these, and I see a big, I already see that everybody's working on that. And I think we are also there on a transformation, but the awareness is really high, and the willing to make some changes and to do it in a structured, strategic way is already on its way.
So thank you very much, ladies and gentlemen. I have to watch the time. We are almost 1 minute over time. I would like to switch immediately the topic now to our next session. And hopefully we gave you some impulses to think about it. As Mr. Winkel said, this topic is not going away. Thank you very much.
Thanks.
Good morning, ladies and gentlemen, and we're still in the European Payments Conference. And in our first round, I think the focus was a bit wider. Now we go more into payments. And actually the title of what we're going to say is Omnichannel meets payment, phygital journeys. Now, you may wonder what we're talking about. And that's why I will tell you maybe for the next 3 or 4 minutes before we then get into the round of people. My name, by the way, is Hans-Gert Penzel from Universität Regensburg. So let's start. In many cases, let's be honest, there are specific payment solutions where you think it's kind of the solution is there, but it's looking for the problem. And many of these solutions actually are the third or the fourth or the fifth same solution for a problem that may not even exist. In our session, we would like to turn that around. We would really look into problems that are in desperate need for a solution. And one of the big problems here is omni-channel payments don't work as they should. What do we want to do? In an omni-channel world, which means a world where we jump across channels, and in the background, there's even the metaverse somewhere, where it gets even more so. We want to buy goods, we want to buy services, and we want to move seamlessly from one channel to the next, one sales channel, one service channel to the next, back and forth. We don't want to switch formats to this extent. We do not want to enter data again, which are available in one channel, but not on the other channel. And ideally, we do not want to feel the pain of payments altogether. You know, payment is such as a little thing on the side, and you may not worry about that. That's kind of the overall approach. Now, in order to make that a bit more specific, I will give you one example. I don't give you the example Amazon Go or Uber. This is areas where it works in an environment of limited complexity. Let's take the following example. You like I do, do-it-yourself stores. It's kind of Baumarkt, Bauhaus, Obi, Tum. And I need urgently a hammer and a screwdriver. So I reserve this thing, then I go to the Baumarkt, I pick it up physically, or for some reason or another, I pay cash. But I want to have an online receipt for that. And this is where the problem is. There is no chance to get an online receipt for that. I want to have it in my personal finance management system to enter it directly, that I know how many expenses do I have in my do-it-yourself things. It will not be possible in most cases. Let's take the other way around. I check the tools physically in the Baumarkt, and then I go home. I want to order them from home and pay them electronically, all fine. But after checking them physically, to order them from home online is a pretty cumbersome exercise, because I go into their page, I look for the product again. Why not just photograph and take the thing and then order online? Difficult to do. Most don't offer it. Or one more case. I get it shipped, and I want to pay when the postman rings twice at my door. I want to pay it online with my mobile device. Doesn't work normally, because there's no reference to what is just with a postman at this point in time. Or I have paid with cash at the Baumarkt. I take the thing, it's wonderful, but it doesn't work. So I have to return it by mail, and I want to have a refund, and it should be online. It doesn't work. I have to give additional data, get the process up again and running. So it's cumbersome to move across channels. And this is just one example that hits me not every day, but maybe every week, because as I said before, Baumarkt is one of my preferred places to do things. And that's what we're going to talk about. We are 4 participants here in this round. There is, first of all, Rüdiger Vogt, Head of FinTech and Neobanken, Giesecke and Devrient. In his LinkedIn profile, I've read next-gen payments made easy. That is his thing. So he's directly in the payments area. Wirtschaftsingenieur from Technical University Darmstadt. His stations are Siemens, Infineon, Qimonda. And since 2015, he is with Giesecke and Devrient. He will do the...
actually.
2018. Oh, I got that wrong. But you have gotten so much experience in these 4 years, as I've experienced when we discussed beforehand. It sounds like 7 years. So this is Rüdiger Vogt. And before I give the word to him, next one is Claudia Klein. She's key account manager in Coopetition here in Frankfurt. I'm also sitting in Frankfurt. Educated in Fachhochschule Wiesbaden, and then also several stations in payments, First Data, PayDirect, and since December 2020, CompuNet. I hope this is now correct with December 2020.
That's right. Yes.
Okay, that's fine. And then we have one which I don't have to basically introduce. It's Manfred Schuck. He's the president of all of us, basically. He's the president of the Frankfurt Payments Network. Long history, Commerzbank, EDS, DZ Bank, Equens, and now looking at everything, actually around payments. So that's the third one. And I'm the fourth one, Hans-Gert Penzel. Well, how would I explain my role best? I'm a retired Director General of the European Central Bank, and I'm active researcher at my own research institute, EB Research, with a long history in various senior management positions, also in other banks, Hypo Bank in Hewlett-Packard, but that doesn't matter here. So that's who we are. And we are now going to discuss, actually not start with the discussion, but start with setting the scene. And in the first round, I would call Rüdiger Vogt with his Giesecke and Devrient perspective to give us a little bit of an insight what has happened and what's going to happen in all these omni-channel things that work more or less good. The stage is yours.
Thank you very much, Hans-Gert. Actually, I would like to zoom out a little bit, although we will come to the payment part very soon, but I would like to zoom out a little bit and talk about the Phygital experience first of all as well. You've already mentioned one when you were talking about the do-it-yourself stores. Let me give you another example here. So about 6 months ago, I traveled 50 countries in 2 days together with my family. How did I do this? It was with a Phygital experience around the Expo World Exhibition. And my journey actually started at home when I was downloading the Expo app, virtually checking out the 200 country pavilions and what they offered. And we as a family then put together our top 50 list and optimized the travel time between the countries we wanted to see on the exhibition side. And we booked the best tickets online, paid for them with our credit cards, and then scouted for the best time to visit. Then finally, we flew to Dubai in the real world, in the physical world, and joined the thousands of Expo visitors on site. And over there, you can wade through a lake in Brazil. We learned about urban farming in Singapore, hiked on the Foggy Mountaintop in Switzerland, so all in the physical world. And we had wonderful drinks in Colombia and a great dinner in New Zealand. And we also gazed at the digital art installation that was there on a huge video wall in the Kingdom of Saudi Arabia. And we walked with wolves through an augmented reality forest in Estonia. And my daughters collected physical stamps from all these countries in their paper Expo passport. So that was a wonderful souvenir. And every day, the Expo app was highlighting the top events to us. We were posting our adventures and we rated the experiences. When we got back home, Instagram kept us up to date and kept feeding us with more impressions from Dubai. This, to me, was a real great Phygital experience at its best. Now, we are all going through customer journeys every day, sometimes as exciting as traveling the world in a single location, and sometimes as sobering as closing my minor daughter's share deposit and checking account. It recently took me about 2 hours in 2 different bank branches to do this, and it reminded me how much used to apps and instant gratification I've become. So a key question for us to answer in today's panel will be, how can we create a customer journey that is easy, exciting, and creates stickiness to a bank or fintech? Before we do that, let me invite you to join me on a brief exploration of the Phygital side of payment and banking. First, let's circle back to the retail industry for a minute. The term omnichannel has been used here for a long time. It describes an approach to sales providing customers with a seamless shopping experience, whether they're shopping online from a PC or mobile device, by phone, or in a brick and mortar store. We saw the research online purchase offline trend grow big, and Amazon opening physical stores, as you mentioned. Those are cashier-free using AI, deep learning, and sensor fusion. The customer scans their QR code when they enter. Any item picked is added to the virtual basket, and the charge gets auto-deducted from the customer's account. Now, Phygital uses a combination of physical elements and digital devices, platforms, technologies, extended realities, and so on, and goes beyond omnichannel. It adds more elements to offer unique, interactive, holistic experiences that allow customers to feel stimulated and emotionally engaged. And functional and symbolic values that customers experience from digital to physical and vice versa are being integrated. So Phygital transformation is not an IT strategy. In essence, Phygital focuses on making the 3 I's a reality: immediacy, ensuring things happen at an exact moment in time; immersion, the user is becoming a part of the experience; and interaction, to activate the physical and emotional part of the process. In the retail banking world, going to a branch to transfer money for investment transactions or to close on a mortgage used to be normal. Limited remote access was possible through phone banking and later the first online banking offerings. Then the iPhone came along, and apps and neobanks and specialized fintechs for mortgages, trading, foreign exchange, remittance, you name it. With new ways of communicating with the customer opening up, creating a striking Phygital experience, also, but especially in payment, needs to become a priority also for banks. Immersive and putting the customer, not the product, at the core, exactly to your earlier example. So where are we today? First of all, COVID has led to a dramatic increase in the adoption of digitalized services. When we look at the banking sector specifically, for example, 93% of US consumers under 55 say they use a mobile banking app, and 2/3 have increased their use of mobile banking during the pandemic. Many neobanks are so successful today because their digital models are built on the customer experience. Yet the Phygital experience is not quite there yet. In public transit, for example, digital ticketing and payment can still be a challenge. You have to download the app of the local transit provider, pick the right fare, good luck with that, enter your credit card details, and set a password. Transfer to London is showing how to do this customer-centric. Simply tap in and tap out at the reader with your bank card, mobile phone, or smartwatch. The fare is then calculated automatically. Even maintaining physical bank branches doesn't help if the software they run on is ancient and it takes 2 lengthy appointments in 2 locations for a simple task, basically, to complete, like in my earlier example. 70% of millennials state they would rather see a dentist than visit their local branch. While simplification is important, a whopping 72% of customers rate personalization as highly important in today's financial services landscape, according to a recent Capco study. Take the card issuance customer journey as an example for payment cards. The card client can nowadays create their individual payment card design in a mobile banking app. Then they can get a virtual card right away to use it, for example, for online shopping. While the physical card is being produced and shipped, digital updates will be sent securely via the app. The new card comes a few days later with a personalized carrier with targeted content. That has a QR code that will take you to an augmented reality experience for activation and to learn about the benefits of your plan. During this process, the bank can unleash the creativity of the customer and make use of the data they have available to create a unique and personal customer bonding. That's right. Banks can leverage advanced analytics by applying them on the data which is generated every day through digital banking and customer transactions. They can get crucial insights on customer behavior to tailor and target their offerings more precisely. Banks can also identify interesting value and growth customers by using data mining on their online behavior and spending patterns. With all they know about me, my bank can do so much better than sending me a "Dear Sir" or "Madam" letter asking if I've ever heard of ETFs. However, a survey by Banking Hub found that only 27% of banks in Europe have a unified record of customer interactions via any channel or touch point. And only 24% of financial institutions have the technology and data capabilities required to enable and incorporate an omnichannel experience. So still a long way to go. Which brings us to an outlook on the future of Phygital. So I've already highlighted the role of emerging technologies in creating Phygital payment solutions. An Uber app, for example, will identify you via face recognition, Amazon Go via palm vein, and Mercedes via voice profile. This reduces friction and frustration, and as a consequence, boosts customer loyalty and revenue. The act of payment even disappears when calling a taxi or leaving a store or charging your car. And connected with advanced technologies such as artificial intelligence, machine learning, and big data analytics, new personalized offers can be created that enhance this experience further. In the future, true phygital experiences will also feature an advanced anticipation model. Banks might want to copy the likes of Netflix, capturing data and over time, learn and understand the client's preferences to make helpful suggestions that point you toward the things that will be of most interest to you as a client. According to the World Economic Forum, consumers will carefully pick and choose how to spend their time interacting in the new normal. Old-fashioned bank branches will struggle to grab a share of this time. So also here we can expect continued change. We will see more banking kiosks that are co-located within other businesses and embedded experiences orchestrated in a way in which technology matters and makes a difference. First examples for this are Eagle Labs by Barclays, who are converted formerly closed branches in the UK with shared networking, mentoring spaces where you can also get SME banking advice, or Capital One cafes, where you can do your banking and financial planning with coaches and use the co-working space. Banking will move to physical places where people choose to spend their time: department stores, car showrooms, real estate agents, museums, tourist destinations. Now, the latest hype is about banks entering the metaverse, as already mentioned. A completely virtual world in which you can find shops, movie theaters, schools and universities, gyms, beautiful nature, and teleportation to other planets. To enter, simply put on special glasses or a VR helmet. The concept emerged long ago, but it became popular when Mark Zuckerberg proclaimed that Facebook's main goal is to transform itself from a social network into a metaverse. According to Bloomberg Intelligence, an $800 billion business in 2024 already. JP Morgan is already present on the platform Decentraland with a digital space called the Onyx Lounge. HSBC signed a partnership with the Sandbox to buy digital land to engage and connect with sports, esports, and gaming enthusiasts. Right now, the experience is anything but exciting, I have to say. For example, last time I checked, the Onyx Lounge had a wall with a few videos and a tiger bot that was not very useful. But there's huge potential in the metaverse. For example, the emergence of new ownership and asset classes, virtual rental agreements or mortgages on metaverse real estate. American Express has already filed trademark applications related to NFTs and the metaverse with the US Patent Office. One is for the provision of an online marketplace for buyers and sellers of digital media. Another one for assistance with electronic transfers of money and banking services in the metaverse. And the US challenger bank Zelf is building an embedded banking system for exchanging value from virtual worlds to the real world in connection with a bank account. In order to be successful in the metaverse, financial institutions should make the experience really meaningful for customers and have a clear strategy and value proposition. And then based on MVPs and experimentation, step by step, build their presence. For example, with crypto wallets, gamification related to their offers, or a metaverse credit card. The key point for creating a phygital customer journey are valid also here. Human first, so the customer is at the center of your strategies. Enhance the continuum around different channels, and understand and integrate the contextualized usage of technology by consumers. So let me finally come back to the starting point of my keynote. A month after we got back from Dubai, my kids made me aware of an expo post on Instagram. Coldplay was doing a concert on the center stage of the expo. And I jokingly asked my kids, "Are you ready to go back?" So my younger daughter replied, "You know what, Dad? Mentally, I never left." Now that is stickiness. So on that note, back to you, Professor Pencil, and I look forward to discussing how the customer journey in payment will change and what will be the challenges and opportunities to create striking phygital experiences in payment in the future. Thank you.
Yeah, thank you very much, actually, because I kind of put some problems on the table, and now you've added the next two steps, which is formalized requirements. How should things be differently done? But also a number of elements of the solution. And this is certainly something that we're going to discuss now. Before we do that, just one remark. what you've shown us very clearly is there is a long customer journey, and there are few points which are, however, extremely important where you do the payment. So the payment is just an element in the journey, and it's in terms of time span, it's a very short thing. So let's keep that just in mind. Now, what I would like to do with you in the discussion panel, but also with our audience outside, go through kind of 3 rounds of discussion. The first round will be, we will look into existing solutions. And in a moment, I would give Claudia and then Manfred the floor to tell a little bit about their experiences there, what works, what doesn't work. When we've done that, we want to do the next step and go into the second round of discussion, which is then, what can we improve short term? What are the small things that would improve our experience enormously, maybe? And then, of course, there will be a third round saying, and what about the future, the great new world, the metaverse, and what's going to happen there? So let's start. And by the way, not only for those here on the panel, but for all of you outside, please ask questions. You can do so. I've been encouraged that there is a straight-through process where you put questions and they are passed to us, and we can see them in the chat and we can answer them. So take the opportunity to do so. But first round now, Claudia, how have you come across the problems of omnichannel management and omnichannel payment? What can you offer with Coopetition? But also, what would you like to see? And maybe tell us a little bit about your CV by this and how this fits into the overall story of omnichannel management.
Yes, thank you. Before I start with a short recap about myself, I would like to say thank you for this opportunity being here, and thank you to the audience for your attention. And yes, in a nutshell about me, I've been in the payment industry for more than 20 years now, and during my professional career, I had different roles and gained a specialist knowledge of payment with a background in sales and product management, marketing and design. And yes, as a designer, as I'm originally, I'm an enthusiast for innovations and for out-of-the-box thinking and for first principle thinking. And I really love innovations which really meet the needs and add value to ideally for both sides, for consumers and for retailers. And let me mention one example. This is interesting, and because it is an example for the DIY industry, and it is the Scan and Go app solution from Snapple. And this is in 2019, I was personally involved in the market launch from this solution to the German market. This was for a German DIY retailer. And this is a self-scanning and self-checkout solution, which is, from my perspective, a really good example for the first principle thinking, because it, in fact, solves a problem. And in fact, standing in a line and waiting at the checkout. And yes, how can we help? Or what is Coopetition doing? Coopetition is an owner-managed leading global payment service provider. And we have an own payment gateway, just one payment gateway. And we process all payment methods as e-commerce, mobile commerce, and POS via one pay gate. And this is really interesting because in this way we really enable omni-channel payments. And this means from a consumer perspective, to ensure it really moving seamless from one sales channel to another, and for and backwards, and make it easy and secure with a minimum effort ideally. And for examples for this are click and collect, and of course in-app payments. And for our merchant, sorry, when I say merchant, we always say merchant, I mean retailer. We offer a wide range of solutions and products, and often also tailor-made solutions to boost their business. Yes.
May I ask one follow-up question? And that is, obviously you offer a quite interesting solution that you've just mentioned. To what extent would the merchants come to you and really ask you to provide omni-channel solutions? So are they aware of the customer needs, or would they say, we don't care too much? I mean, we have a physical outlet, we do one solution, we have an online outlet, this is another solution, and what the customer does with it, okay, we don't care.
No, we can see that we get more and more requests from our existing merchants or clients or customers, that they really want to offer these for their customers, these omni-channel solutions. This is really common now. Also, we can see it in a lot of RFPs.
Okay, so there is a need for in search of a solution.
Exactly. Yes.
Okay. Good. Let me move very much. Let me move on to our president, Manfred Schuck. Manfred, with your extensive background and with the lots of experience you have from the banking side, as well as from, of course, from the consumer side as well, how would you kind of explain your CV in terms of how have you come across that? What has hit you? What don't you like? Where would you like to see improvements?
Well, good morning to all the participants, and to answer your question, Hans-Gert. When I moved from my consulting role in the mid-80s, so roughly 40 years ago, into Commerzbank, taking the responsibility for, at that time, their electronic banking solution, as it was called. Apart from cash, there was only one solution on the private customer side to pay cashless, and that was a paper slip called Eurocheck. And to show that you are the rightful owner of this paper slip, you had a little card called Eurocheck card. So that was the means of non-cash payment at that time, so for any channel. Shortly after, we had a really innovation to announce. That was the introduction of Bildschirmtext, BTX. So that was the first time that a consumer could initiate an electronic payment from their home or from a SB terminal standing at a third-party place, be it in the office or being in a self-service unit of a bank or wherever. So that was quite a limited offer. And I was really hit when 12 months ago I closed my apartment in Frankfurt town. I checked out with my electricity company electronically via the internet. And a week later, I had an envelope in my mailbox. I opened it and I got a paper check for the residual money from them. So 40 years later, I had the déjà vu receiving a paper check. So that shows that despite of all talks on omni-channels, still the let me say, old payment types, not only cash, but also checks, still exist. And there are still huge players also in the omni-channel, multi-solution world, still stick to it. And I saw that on many other occasions during my career, being it with the cooperative sector from the beginning of the 2000s, with the DG Bank / DZ Bank, and then when we took the payment services business out of the bank into what was at the beginning called the Transaktionsinstitut für Zahlungsverkehrsdienstleistungen AG, later well known as Equens. There was a wider possibility of providing both sides, the consumers and the merchants, with other means of accepting, generating payments. But nevertheless, it still was, and to my experience up until today, it is quite difficult to see in one business process to change from one means of payments to another, being it force or being it back. So the way you started a payment process usually is the one you have to end it. And even if you have to reverse or return, it has to stay in the same channel. Also with means like PayPal, if you pay with PayPal, you receive any reimbursements on PayPal only. Yeah. Regardless whether they then transfer it to your personal account or credit card or whatsoever. So you are stick and bound to the channel you once choose at the beginning of a payment process, even more times, even at the beginning of the business relationship. Yeah, when you are asked, how would you like to pay, you take a decision, and then you are bound to this decision at least until the very end of this certain payment process. So omnichannel is something which sounds good, especially from a marketing perspective, but in practice, both, I think, from a consumer side and also from a merchant side, it's a kind of a one-way street from the very beginning when you enter the street until you come to the final cross. Let me use this opportunity to just say one word to the Frankfurt Payments Network, as you mentioned me being the president of that. So the FPN, which also is a cooperation partner on this conference, and you heard Carsten doing the intro this morning. He is a member of the board, and also Claudia for a number of years was a member of our board. We are a physical network in a digital world, which at the moment, due to the pandemic, is more also virtual than a physical network. But the means is on a personal level to provide a network for the exchange of means and sorts all around payments. And thus, I'm happy that we can contribute to this conference last year for the first time and this year for the second time.
Thank you very much.
Yes.
I could be heard for a minute, I say. If I may add one thing on the Frankfurt Payments Network, we had one experience together which was very close to Omnichannel, and that was a wine tasting, which was really a combination of a electronic exercise, but it was of course undermined, I must say, by real wine that was sent to us. So that was close to a real omni-channel metaverse environment, and I can only recommend these things. That was very fine. But Manfred, as you have said, there is a big difference between multi-channel and omni-channel. And many people don't get these two things straight. Multi-channel is just parallel channels, and omni-channel is I fully combine it. I fully combine the data, I transfer the data, I do not start again from zero with the next process, but I really run across the channels. This was kind of the startup for us. Now let's look into a round of discussion where I would say it's an evolutionary view. What can we do short term to improve the situation and make it just easier for people without investing billions of euros? And I would just put up a few very concrete cases here in the round and would ask each of you to comment as you like. One thing is we have our Giro system in Germany and we are proud of that and it works fine. And then we have things like Apple Pay and Google Pay. Now, why does it not work that Apple Pay is fully integrated into the Giro card, except for the savings banks where it works more or less? But this seems to be kind of a special enterprise. So what's the problem about that? Could we do something about that? Any one of you has an idea on that? No.
I would.
Sorry, I can probably start off on that one. So of course, Apple Pay is very convenient, right? And if I can couple it with my existing Giro card, that's also very easy to handle. So from the user perspective, it's a great payment instrument, especially with the wide acceptance of contactless these days. I think that bank customers that are Apple users will see the access to Apple Pay as a hygiene factor that their bank eventually must support. And there's of course also a competition, because for Google Pay on Android, I can use my PayPal account. And on that PayPal account, that gives me the full flexibility on debit, credit in the background. The danger for the banks in principle is that this way of payment is easily interchangeable in this model. So today it's my Giro card, tomorrow it's the credit card where I get hotel points or whatever. And the brand in front of the customer is now Apple or Google / PayPal. And banks have to find a way to stay relevant for their clients. And that's coming to the other point, which I think is critical here, not even to mention that the fees that go into the GAFAs in a model like this, right? So I think it's a combination of how can a bank stay relevant and at the same time also the quite high cost and fees involved with it. So I think these are the two things to consider there from my perspective.
Which is the bank interest. And then of course we have the other side, which is the Apple interest, but they also say, okay, should we really open up our NFC interface fully? And we know that the EU is now following up on Apple on that, because also from their side, not everything is being done that could be done. Claudia, you wanted to comment as well, or did I get that wrong?
Yeah, that's right. Yes, we as Computop, we offer this solution. We are one of the first movers for this solution in Germany. Our merchants can use it since July last year, and from our perspective, it is a very good solution, and it brought together. It's from my perspective, it's also a good example for this phygital journey, as it brings together the physical Giro card world together with the digital Apple e-wallet world, and both is common and is for example from a consumer perspective, it is also secure, and the data protection is very good, and for example, it's a lower pricing compared to other e-wallet solutions, despite the additional involvement from Apple Pay. There's just to give you an example, for a mid-sized retailer, for example, you could save about 50 cents for an shopping cart value of 100 euro. So it's interesting, and it's also easy to integrate for a retailer, especially if a retailer has already integrated or use Apple Pay.
Maybe one of this. I'm, as a so-called silver ager, living in a small village at the mountain of the back side of the Harz Mountains, I can tell you, I still use my physical gyro card or my credit card at the point of sale, because there are no problems with reception of the phone. There are no problems with the lack of electricity. I just tap my card and go. So what I want to say with this is not always the latest technological possibility I have to use to do a safe payments. The basic function of what we have, in this case, the cards world, are fully sufficient to do what I have to do, meaning to pay.
You will only be hit then when you say, and now I would like to do the same online, right?
Yeah.
Here's my card. I tap it with my laptop.
Exactly.
Well, what does the laptop do? It does nothing.
Yes,
That's the only restriction then, right?
Yeah, it is.
But I mean, it's quite interesting, and I think that is a first message. Dear banks, we fully understand that you have a relevance problem, but by the end, you will not be able to solve it at the expense of the customer. Probably. That means you will have to find ways to integrate these things, even if there is a certain danger, as Rüdiger has put it as well, that you may have to step, looking at the interface with the customers, a little bit away, and that there is a second brand, which is Apple. But, and let me now ask a follow-up question, but the banks have come up with a solution in concept. And this solution, from my point of view, is called EPI, European Payment Initiative. To be more precise, it was called EPI, but it's fading out as we see it. What the heck is happening there? I mean, that was the great approach to bring together Girocard and Giropay, the offline world and the online world, to make this XPay first of all, and then integrate it into the European Payment Initiative and have one common scheme for offline and online. And now what happens? Seems like some of the German banks see that extremely negative and seem to move away from that. Comments from your side, please.
Well, let me start. So, I mean, as the FBN is strictly neutral, I will say that this is my private opinion and judgment on the situation. And unluckily, it's not the first time. We had the attempt of Moneo some years ago, where I was personally involved in my business role. And we saw at the end that the diverging interests of both different German banks, and especially national interests between, at that time, Germany and France, brought this initiative to an end. And when I'm looking from the outside to what I see with the European Payment Initiative, it seems to me that history is repeating itself, as it is known from a very famous Swedish song. So again, here we can see that on one side, the German banks from the different three banking sectors we have on one side, and different national interest within the European Union still seems to be a major obstacle to come to a solution where at least the core countries in Western Europe speak with one voice.
Further perspectives from the colleagues here in the round?
Unfortunately, I must, in this case, I must totally agree. Sorry.
Okay, all fine. No.
Same here, and I think whether now Giropay as a German alternative to, now again, we're talking about competitors like PayPal, can expand, that remains to be seen, and it strongly depends on user friendliness and marketing and branding, you know, and all the marketing dollars and euros that they're putting into it.
Yeah. So, and again, I step a little bit out of my moderator role here, and let me allow one sentence of an emotional remark. My heart is bleeding for the fact that EPI is running down. I would find it an extremely important initiative, an initiative that is so important for Europe to gain independence, to gain sovereignty. If you don't control the payments market, you will not control the market of goods and services. And this is an opportunity that we should not let go. Maybe there's still a chance to step back into that. The French really want to do it. I mean, they are strategically thinking, the banks there. Let's hope that we can still get something in place that is close to the original idea. Before we move to the more revolutionary aspects, any other points from your view where you would say there is evolutionary potential? We could fix a little thing and get the world running better, put ourselves more into the shoes of the customer. And again, I mean, the revolutionary thing will come a little bit, metaverse, digital currencies will come a bit later.
From my perspective, one thing to add is we talked about in our pre-discussions how to make credit cards more convenient for online purchases, right? And that was also one of the topics you had. I think there's, of course, the option to go for a virtual card as a representation of your credit or debit card, of your physical debit card for online purchases. So basically a digital twin of your physical card. So that enables you both in the example that Manfred had, but you can also then use it for the online example that you had, Hans-Gert. And this can be integrated into the mobile banking application for the cardholder, for example, to do these e-commerce transactions. So the bank brand and associated security with that brand is brought together in front of the customer. And another point that I would like to highlight is that many people have lost track of what payment cards they are using for what online merchant, right? So, and for what Netflix subscription, et cetera, and some of them have several ones. So to put the client back in control, an issuer can integrate what we call a token cockpit in their mobile banking app. This allows consumers to view where their payment card is stored on file and to remotely manage the life cycle of that card at the merchant or digital wallet from the trusted environment of their mobile banking application. So something really interesting, and that's something that we as G&D are now increasingly seeing a demand for in the market, and that we're also supporting on a global basis even, to put the customer back in control.
Mm-hmm. Mm-hmm. I mean, this is another good example, and exactly we thought about, if we have time to talk about this a bit deeper, credit cards in both worlds, how will that work easier? And maybe as a lead out, before we move now to the more revolutionary world, there's also an instrument, request to pay, which is considered a very important element in order to bring the experience that we have in the online world also to the offline world. Because at the point of sale, the customer would give his information, or first of all, the merchant would give the information to the customer. This is a product you buy, and the customer would say, yes, and this is my account, and here it goes. And the customer pays via instant payment, and the merchant sees it immediately at his point. Yes, the instant payment is here without any push notification. It's coming automatically. And this would be a very nice thing to do. By the way, EPI would have had a great solution for that. Request for payments automatically built into a scheme. And now we do the effort, a little bit cumbersome, a little bit of too much effort to build this into the request to pay scheme with standards being standardized by the Berlin Group, etc. So we are on the way to provide something here. Certainly, I mean the sector as a whole, but it is a cumbersome way, and a way that costs a lot of effort to go there. This may be just for request to pay, but now let me open another round, and I'm looking into a chat. There is no one who wants to know anything from us. Either we have no audience, or the audience is completely convinced about what we say. Please, dear audience, if you have contrary opinion, just tell us, and we're happy to comment on that. But we will continue, as I said, with our last round, and that is the brave new world. Things are not only on the horizon, but actually in the making. And that is, on the one hand, the user experience coming from the metaverse, for example, the worlds flowing together. And that is payment opportunities that we have. And there is especially, of course, digital currencies. There is the digital euro, which will definitely come. There are other opportunities, as maybe not necessarily Bitcoin or only on the corner, more speculation than payment instrument. So is that changing everything? Will that create the new world that we need? Question into the round. And everyone wants to say something, and no one dares to be the first. Rüdiger, what would you say?
Yeah, with respect to digital currency, so are they the solution to every problem? I think for digital channels, they're perfect, of course. So for the various flavors of digital currency, however, there are differences in regulation, exchange rate, value, security, privacy, taxation aspects, and so on. In the physical world, there are still advantages of cash even. So we talked about the tapping with your card, but even cash, of course, still does have its advantages in euro or dollar bills, privacy and confidentiality in financial transactions, for example. And also we need to keep in mind that we need to look after people that have limited digital access and or lack financial literacy. Kids, older citizens are to be considered. So these issues, I think, are yet to be discussed and solved, especially for CBDCs that will be then used as digital cash and have to fulfill all of these requirements of a legal tender that's being issued by a central monetary authority. So this will be really interesting how we can actually enable a digital currency, a universal digital currency, so that we're not excluding certain groups of the population, for example.
Manfred,
Well,
I think exactly. You have to say something now because you are the one who does not want to be excluded, and maybe you just want to have a physical credit card. What do you do with the digital currency then?
No, it's not the question what I will do with it. The first thing is that I'm convinced that we'll get digital currencies from the different major central banks around the globe. After China has started, there is a push and pull effect, I think, both on the Fed on one side and on the ECB on the other side to come up with something similar. But it is an additional instrument from my point of view. When our Ministry of the Interior, under this situation we have at the moment, advises people to have a cash stock at home to be prepared for any cyber attacks on the infrastructure of the financial industry, we should be very careful if we want to switch too much from having physical money somewhere at our home to be able to pay even under circumstances which are not that nice as we experience them today. On the other hand, I agree with Rüdiger that in the digital world, meaning in the online world, and even if we take the next step into the metaverse, digital currencies will definitely play a role. Whether it will come to a universal digital electronic currency like Libra or whatever it is called at the moment or will be called in the future. So, I mean, privately issued stablecoins, I make more of a question mark because this also leads to an imminent political discussions of who is controlling that and in which interest it is. It's definitely in the interest of the global companies like Amazon and Facebook and so on, but it's definitely not in the interest of the central bank. So there is a very strict conflict, and I think this will, to a certain extent, hinder the generation of a really global, unified digital currency.
Mm-hmm. I mean, there are two very interesting aspects that we should discuss further. One is certainly the question is digital currency for the digital world or for the physical world. The other thing is private versus public. Now for the question, would it be also something for the physical world? I will show you something. This is today's currency. This is also the 10 euro. This is my personal prototype of a card, number 0145. And on this, I have 10 euros. I just loaded, and you may be reminded of something that was called Geldkarte in old times. And this is nothing but a very convenient Geldkarte. And I can load it anywhere. I actually tap it to my laptop, and it's loaded. And I tap it to the retailer who just sells me some Brötchen and gets the €4.50. So there would be probably a way to put digital currencies even into a physical world on a physical card. And I think the ECB has a great interest to do so, because as you said before, it would have to be usable by all kinds of people, even if they do not like the electronic world too much. They may even go to an automatic teller machine, then put it in, load it like with a Geldkarte by that time. That's of course old fashioned. They go to the next retail market here, they get it loaded, they get it unloaded. We could imagine quite a number of interesting solutions that we even put it into the digital world in a rather convenient way. Just as an idea. But before we discuss that, or on top of discussing that, Claudia, are you already in the process with Computalk to create a solution? So could I expect a card for digital euros from Computalk?
A card for digital euros. This, from my understanding, it would be something like an e-money, e-wallet. It has to be something like an e-wallet and comparable maybe with already existing, in combination with already existing banking apps. That's what my understanding is. So from a technical payment service provider, this shouldn't be a problem. I think we would be ready if it is so far.
Good. So we'll do a little grouping then between the ECB, some banks, and you, and maybe other service providers here, who come up with a solution and really present that to the customers. By the way, also the ECB is not eager to put the banks out of the race, just the contrary. They will manage the accounts and they will help to put it on the card, and you will process these cards. So the ecosystem is kind of already developing, at least in our minds.
Yeah.
Any further? Yeah.
But nevertheless, Hans-Gerd, if we have to assume that on a digital euro, the ECB has to maintain an account for everyone who is holding digital euros, then you can ask yourself, why do I need additionally any bank account anymore?
Probably because the ECB doesn't want to give you cash itself, but hand it to you via the banks. It could be. And now I see that we have a real problem now. First of all, yes, we are running out of time. That is our real problem. Therefore, there will not be even a summary. We know a lot is to do, but things are in the pipeline. We can expect some improvements, but there are still open points, such as the digital currency on a physical card. Thank you for listening, and enjoy the next session.
Hello, ladies and gentlemen, again. I'm glad to see you here again for our third session with the topic mobile banking, making life easy, secure, and convenient. Probably everybody of us had the opportunity to listen to different conferences about mobile banking and the chances and the threats and the hurdles, the challenges. According to my opinion, and you might see it differently, I think if we really want to exploit the opportunities of mobile banking, we really have to change our behavior, our way of thinking. And we have to put mobile banking in a much broader sense. Of course, mobile banking can be seen as an additional channel where you reach your customers and you lead your customers to your traditional processes and to your traditional business models. However, mobile banking and mobile payments can also be seen as a kind of a new philosophy. It is not just as an access tool to banking and payment services. And you just have listened to the conference about multi and omnichannel banking in the session before. If you really think about mobile as a new philosophy, we have to think about different organizational behavior. We cannot live anymore in a kind of a secured castle with high walls and an organization trying to keep the customers outside. We have to think about an organization ready to embed the services in financial supply chains of buyers and sellers. And that means, of course, to retail customers, but also in the other end to our business customers. So market participants really have a different understanding when it comes to mobile. And as everybody knows, if we talk about customers, this is not a homogeneous group. We have very, very different market segments. And the market segments different in behavior with respect how they use the technology, how they're willing to use the technology. But it also differs with respect of demands. And it is not an accident, and it's even not surprising that we see a very exponential growth when we talk about mobile banking apps. And if you compare the United States, for example, with Europe, we can see that this exponential growth will probably still go on. And not only having an app on it, but also having more functionality in this app, or even using the smarter technology which is coming around with this computer mobile, which has a lot of technology in place. If we talk about voice recognition, if we talk about the functionality of the camera and so on, which enables us to a much broader sense of services to our customers. It starts probably with really common stories. For example, a cardless ATM withdrawal, where we use the NCF technology or the OR scanner. But it really reaches up to much bigger business, as we have seen in the first session, when we talked about that, for example, at point of sales, consumers will not only differentiate their buying behavior with respect of the price, they might also differentiate the buying behavior with respect of additional information. So for example, the consumer really sees what is the footprint, the carbon footprint of a product. There are information which we could be transported on the same channel as we have transported in the past, only the information of moving money from account A to account B. But this was just a little bit of a scene setting as an introduction. And now I would like to introduce my two discussion partners, Mr. Harald Flatscher. He's Managing Director from the Payment Service Austria in Vienna. And we have Gerald Gruber. He's the CCO from Band in Amsterdam. And as I've been told, both of my discussion partners have played a kind of a ping pong in the recent month, and many of the ideas are very in common. So maybe I will have the role of being a little bit more a critical partner. Maybe you, the audience, can help me a little bit by asking some questions and forward them. I've been told that there is a specific email address where you could put in your question. It's mcg@ malecki.de. And as soon as you have sent in your email, the studio, the people in the back office for our conference will forward this question into my chat room. So I would like to give the two authors a little bit an opportunity to also make kind of a scene setting. And maybe Mr. Fletcher, I would like to ask you to give us a little bit your main ideas. What is making life easy and how to make it secure and convenient when we talk about banking or mobile payments?
Thank you for the introduction. So hello also from my side. Regarding this discussion, I'm very happy to be part of. I have to start with who PSA is, just a brief introduction. PSA is a payment infrastructure provider for banks. So we do not have straight customers, our end customers. We provide all the card payments tool, mobile payments tools, and clearinghouse infrastructure for the Austrian banks, and therefore we have to integrate and secure all these infrastructure parts so that they can be used as the consumers wish to. So this is therefore a natural habitat for me to discuss. And if you look at the payment infrastructure and payment discussions in the last couple of years or even decades, it was always important which infrastructure you're in. So there was a fight whether SEPA payments or credit transfers are more important than card payments, and whether mobile payments must be preferred among card payments, or maybe a ring will be the tool for payment in the future. This all is very interesting, but it doesn't matter at all, because if you look at the principles, technology evolves very, very fast. The usage of technology varies among all the people, not only within Austria, across Europe and across the globe. And as an infrastructure provider, you have to provide an infrastructure that is secure, efficient, reliable, and where someone who wants to pay something or wants to get a service can access his or her money on the account and transfer it in a manner that is safe and reliant to someone who offers this service. So that's the principal view we have on this type of infrastructure we develop. And that's a complex task. Also, all the usability aspects have to be taken into account. And building products with these basic assumptions gives a lot of more possibilities in the future than we have anticipated in the past. Thank you.
Thank you very much. I was just making some notes. So maybe Mr. Gruber, would you like please to add a little bit on the ideas of Mr. Fletcher, and maybe explaining also the special rule of your company maybe in this environment?
Yeah, absolutely. So first of all, thanks for having me. It's a pleasure to be here. And yes, Harald and myself, we've known each other for a while from my previous role with one of the card schemes, but now I'm here representing Bank. We're a fully licensed retail bank. We're fully mobile, we're fully digital. And I have to agree to some of the points Harald made. All this separation in channels and different technologies, at the end of the day, also for us, it's not really relevant. Something we have to deal with, yes, but we are built around, I would say, what our users actually want to do, what they want to achieve. It's up to them to define how they want to live their life and how they want to manage their finances. And our mission or our vision is to give them the utmost freedom to do that. Whatever technology is underneath, yeah, at the end, doesn't really count. Yeah, I would say in the past there's always a bit of a bipolarity or a struggle. Is that either you're secure or you're convenient. Yeah, and you had to make I'd say one or the other would have to give. And I think with the evolution of technology, that is changing. more and more. So we see more and more solutions coming up where you could argue rightfully that they're both by now. If you look at the markets overall, I mean, I think one good example to look at over the last years is two-factor authentication. It was a pain from a user's point of view. If you look back a couple of years, by now there's at least some players out there who've integrated it really nicely in their process, and it's become seamless. So that's just one example. Yeah, and my positioning today for the discussion is clearly on the end user side. So I'm looking forward to that.
So let me start a little bit with the first statement you just made, Mr. Gruber. And maybe you have to correct me. Is it really indifferent what kind of technology we are using? If that is your statement, I would like to disagree with two respects. First of all, depending on the technology you're using to access your customer gives you different opportunities. So for example, with the smartphone, you have a lot of technology embedded in the device, like the camera, like the voice, and a lot of software, which is even developed outside of the banking industry, which could be nicely integrated. And the second one, why I would like to disagree, is about the risk assessment. Because there is a difference whether you have a software solution or you have a hardware solution with respect of, for example, a virus, mail functioning, and so on. And this also includes, which we might also discuss as a third point, the regulator's opinion. Because by far we left the room where the regulators are really indifferent with respect of technology. They really coming up with clear statement, and they say black and white technology. So again, have I misunderstood you when you said it's indifferent? And would you agree with those three differences?
I think if you're looking at things from a technology point of view, you're right, there are differences. If I'm looking at the whole thing from an end user's point of view and what the user wants to achieve, then they don't care at the end, right? They want to make a payment. It needs to be safe, it needs to be fast, it needs to be simple. And whether underneath is a card payment or it's a separate account-to-account transfer, who cares, right? If the end user wants, I mean, we're not doing mobile banking because we think we have to be mobile, and mobile is a new philosophy. We are a pure mobile bank because the users out there are using the smartphones. So we want to be where the user is. If the end users decide they want to bank with, I don't know, their glasses, their key fobs or anything else, then there will be solutions to accommodate that. So I'm happy to disagree with you on that, but I think at the end of the day, it's just a matter of perspective.
So Fletcher, how far would you agree, or do we talk about three different levels? Are we talking on the user level about functionality with respect of business functions or execution of transactions, looking at on the perspective of a banker and a technician on technical possibilities and technical risks? And if you look at the regulator side, we talk about a legal possibility to control and to check. But these really three different perspectives? Or would you say, no, the only perspective which really matters is the customer?
There are some, I would disagree on this as well, because there are also some aspects missing. So all very successful models coming from digitalization in the last couple of years have focused on the users and has looked on the user's view. And as you pointed out before, yes, there are different technologies out there. One, from a technical perspective, offers more opportunities. Like say a smartphone, a modern smartphone maybe have a secure element in it and has a camera and has a fingerprint sensor and has whatever. But if you look payments, if you say payments is there for everyone and everybody needs payments, you have different forms of it. Even MagStripe cards are out there, or my God, cash, of course. So people use all of that. and mandating just the most secure and reliable technology you can buy for money would exclude a lot of people from payment process. So you have to integrate all varieties of payments out there. So, and you have to make them safe, but safe and reliable is not just technical safe and that you can prove step by step who was doing what and where was the problem. That's fine for tracking down problems. And maybe if you're on court, it's good for if you have evidence what happened. But from a business perspective, and if you look what the tradition is more overseas, they simply cover some risks by paying for them. So if a customer has a problem, they have some funds aside where they can refund, give a refund to the customer. So also this business aspect should not be neglected. It's not the history here in Europe. So I'm a technician from the beginning. And I know we like to check and have increased security and more secure certificates and all that stuff. But that's not the only dimension you have to think. And you have to cover and you have to bring payment methods for all of the people, and not all people have the newest smartphone or the newest gadgets available.
Herr Gruber, if we talk about security, would you say that security is quite a different animal seen from the eyes of a consumer, seen from the eyes of a banker, and seen from the viewpoint of a regulator? I think on the highest level, everybody wants to have highest security. Nobody wants to leave his money. Nobody wants to have a bank to be in a risky and a shady environment. But when we really talk about a daily business, isn't that a quite different viewpoint and a quite different definition?
I'm not sure if it's quite or that different, but I agree with you that there is a difference. I would say the end user, as I've argued before, they care of what they want to achieve. Yeah, and yes, it has to be secure, and obviously they don't want to be defrauded. And if something goes wrong, they want to feel sure that their damages, they could claim their damages. At the end, their bank comes up for it. Obviously, as a bank, you depends on how you're set up, but I know banks that are driven by their risk managers, and then they want to minimize the financial risk they want to be exposed to. And then, and it's somehow in line with what Howard argued just a couple of minutes ago. And then, of course, you can employ the highest security technologies, but you'll make it much more inconvenient for the end user. So you'll reduce the cost of fraud and claims at the cost of getting less usage from your users. And I think the regulator is somewhere stuck in the middle. My feeling is over the years they've been moving forth and back between playing more towards the, let's say, and not in a disrespectful way, but the banking lobby or the end user consumer protection lobby, where at the end of the day, I think they need to find their role in the game. I agree with you, Jürgen, on what you said earlier on that regulators shouldn't interfere in technology, because that's a losing game.
Mr. Fletcher, to put myself a little bit in the position of defending our European regulation, and if you participated, you always find areas where you would have liked done things better. But nevertheless, I'm really proud of being part of this European legislation in some respect. And I think we have changed quite significantly the roles and the game rules. So for example, we made clear who owns the data of the transaction, but we also made clear with the PSD2 that the responsibility of having the best technology in place is never, ever the responsibility of a consumer. A consumer really depends on the technology which is offered to him. And therefore, I think it's quite important to understand the PSD2 that we made it quite clear. There is a ceiling where you can kept liable as a consumer. And if this is the case, that we now really change this business, that banks no longer can say, it's up to you, you did the mistake, you did it wrong, your money is gone, it's your problem. That is not true. We have also to educate our Europeans a lot more and saying, no, the PSD2 is telling a different story. If the money is gone, the bank has to refund you up to a certain limit. Do you think that this was a real change gamer? And would it be even a much better change gamer if we would educate the European citizens that they are no longer accept such letters from their banks?
That's an interesting position. I don't think that it was, I know it's specifically for the Austrian market, of course. Maybe I do not have the view on all European markets. It was not such a big game changer, because if you blame your customer being responsible for all losses happens here and there, you would not have customers at all. And the behavior of the banks was not that, at least in Austria, okay? And for the payment products, I can talk about. The thing is that one development I think is or can become a problem if the customer is not responsible and liable at all for anything, for really anything. And there are some nice legislation things that happened in the last couple of months. They do not care at all about phishing emails, nothing, because the bank is liable. So that's fine. I think it would be valuable. Has nothing to do to hassle with security. So that's a different thing. So saving costs, having old technically spoken firewalls or something like this, bad procedures in place. And if that's the case, why people lose money, then it's a problem by the banks. But if you can see also with the two-factor authentication that happens, you have full authenticated fraud out there as well. And now you see the first trials where the bank becomes blamed that they should cover losses even if two-factor was in place with video and all that stuff. So where should this game end?
According to my understanding of the PSD2, the game really ends and starts at the same point. I, as a customer, want to have a convenient and a secure infrastructure. And I, as a customer, have very limited possibility of implementing new technologies. I can change my behavior. I can adapt my behavior by better education, but I have no chance whatsoever to introduce a new technology. So coming back, maybe Mr. Gruber with Bank, if you are saying you want to keep your customer in a convenient environment, but nevertheless, you are responsible towards the regulators. And let's start at the very beginning point when you open an account, when you have an account creation, this know your customer process. So how much of flexibility do you still have in Europe of designing a process when, for example, talking about opening an account, which you would consider is really convenient? And at what point in time you are almost afraid that you provide a convenient service which brings you almost into jail?
So that's an interesting one, because I've been setting up our European branches, virtual branches that is, in the last years, and now operate in not only from the Netherlands, but also in Germany, France, Spain, and since yesterday, Ireland locally. And once you do that, you have to play by local rules, you think. We're actually exploring we're having, let's say, intense discussions with regulators across Europe on this patchwork of rules you have to comply with, because KYC in Germany works different than it does in the Netherlands, works different than it does in France, works different than it does in Austria. And that, I think, is a big hurdle for actually cross-European banking. We're working on a way where we can actually apply Dutch rules to our users across all the countries. Dutch law is similar to what you might know from the UK. It's very, let's say, frictionless. There is no video calls with an agent involved. And it allows us to onboard users within 5 minutes. And we would like to do that across all the countries. Yeah, it's a regulatory challenge, but that's what we want to do. And I think it should be left to the bank to decide, as long as they fulfill minimum regulatory requirements, which processes and tools they want to apply.
Mr. Kruger, may I just add another question? So
Sure.
again, I put myself a little bit in the shoes of defending our European regulators. And my understanding, my perspective is that with the PSD2, we have created quite a lot of harmonization in Europe. And if I compare the situation, especially if we talk about mobile banking in Europe after PSD2, I consider that we have a much better condition that we would like to have the United States, where each state has a different rule. And if you go to Asia, I think the patchwork is even worse. So do I have the wrong perception on this one? Would you say we should have ruled much more in detail? We should have ruled much more into the national independence and making even a stronger harmonization?
So don't get me wrong. I think PSD2 was definitely a step or a couple of steps in the right direction. We're just not far enough, right? And it doesn't really help as a European bank if you're saying that, ooh, in Asia, it's probably even more fragmented. At the end, there is one market that has 1.3 billion people. The US is one market with, I don't know, 350 million people. And in Europe, we have, what, 500 million people spread out across 30 different nations. So scaling for a financial institution like us, which is reasonably young, is much more difficult than it has to be. Yeah, and we're not doing the European Standort business location a big favor here. So I think we should move faster in harmonization. I'm not saying it was a bad thing. I'm just saying it needs to speed up.
Mr. Fletcher, you are now mainly focused on Austria. Austria is an important market, but not the biggest one in Europe. We probably would agree on that
true.
one. But nevertheless, your company is making very good success focusing on this specific area in Europe. So do you think that with respect of mobile business, especially with respect of mobile business, that this national focus is a kind of a significant limitation to your business opportunities? Or do you say, even in mobile, we have to think and we have to act regional?
I don't think that we have to act regional here. We have to act, if possible, global. And the nice thing in payments is the decoupling of payment method you give your customers. That's we offer our banks payment methods they can give their customers and where they can be used. So the acceptance part, of course, is international or even global. So that's all the integrated products in mobile wallets or bankings, also the banking. If we offer SEPA banking or SEPA banking processing for our banks, doesn't mean that someone can't move or send money to the Netherlands or somewhere else. So we built products for our Austrian customers, but they can be used globally. So therefore, no. And from a point of regulation, I agree with Gerald, because one thing is what is in the regulation and then how it is interpreted. And these interpretations make life harder if you want to spread out the service through Europe, because also we look what we can do probably in other countries as well.
With respect of security, I would like to jump now a little bit out of regulation, a little bit more into technology. And let me start with the question of biometrics. So on the one hand side, I recognize that biometrics is, especially when we talk about inclusion, very helpful. Especially when we talk about elderly people, it's much easier for them to put their face in front of a camera instead of memorizing complex password infrastructures. And on the other hand, biometrics has a risk in itself. If my password is stolen, I can change it depending on the process within minutes, within hours. However, if my biometrics are stolen, unfortunately, I can't change my face, even so I would like to. Mr. Fletcher, what?
So now
is biometrics really something which is improving the convenience to our customers? Or do you think biometrics is something which you consider even more dangerous for our consumers?
No, biometrics is the way to go, definitely the way to go in the future. Even if one can't change the face or the fingerprints or whatever, use voice, if it's implemented right, it doesn't, there's some layer in between, and then you can change your pattern that is maybe somewhere stored as quick as you can change your password. So that's a matter of correct implementation and using it the right way. That's one thing. And the other thing I think will be a very important technology in the future is behavioral biometrics, where you gather with local sensor behavior together in a statistical profile that cannot be decomposed to individual biometric features you have, but gives a very, very high assurance level who is using a device or carrying a ring or whatever you have. The only thing you have to have is a device that have some sorts of sensors in it. I think that's some of the main technology providers already use this. Many other are looking into this technology, but I think that's a major game changer, the behavioral biometrics implementations.
Gerald, in general, what role plays biometrics with bank? Do you also agree that it's a big future? How do you get your customers acquainted to it?
I think it's the presence, right? As I said, we are mostly mobile bank. Our users, they want to access their app as easy as possible. They want to authorize payments as easy as possible. So we support basically everything that's made available by, in this case, the hardware providers and their operating systems. I agree with Harald that behavioral biometrics will add an additional layer of security. But I'd also like to remark that the question on where you posed initially is reflects the idea of the possibility of 100% security, and that's an illusion. It just doesn't exist. Yeah, every method has their flaws, right? For the last, I'm in this area now for what, almost 10 years. I've only seen improvements, right? And every time it was the same discussion. Every time a new technology comes up, there's people saying, oh yeah, but there is some corner cases that are not covered and it's not secure, but it's still better than what we had before. Yeah, so I'm fully supportive of biometrics. It's the presence already. There's no smartphone or hardly any smartphone out there without it. And yeah, if you look at the actual cases, I mean, I can't prove it, but I would guess the biggest risk is that somebody cuts off your finger and then uses it to unlock your phone after he's stolen it. And that doesn't happen that often.
Mr. Fletcher, when we talk about biometrics and convenience, is this really the future? So I recognize, I do not even consider it as any kind of a hurdle or hardship if the security measures a bank will apply really depending on my biometrics. So just if I take access to my mobile phone, my old version, I still had to memorize my PIN. Now I just put it in front of my face and the thing works. And probably the security of this face recognition, it's probably even on a much higher standard than putting in a 6-digit PIN. So do you think this is really the step forward to combine security and convenience?
Yes, as I already pointed out before, that's the big game changer, and I think that was also the point Gerald made in his initial statement. Through this technology, security and convenience can be combined together, because otherwise you have Even if you ask people to choose a password, they choose either a simple password, and it's everywhere the same, or they choose complex passwords. They forget, and you're always in forgotten password processes there, and that's not very convenient. And then the service is not a good service for the customers. So from the security perspective, biometrics is an important thing. What I think that makes it even better by using biometrics, of course, is if you have some sort of digital identification, you can use as general as you use payment methods. And because it's a natural concept, of course, that you get a card, an account, or something you can use how you can use your money from your bank, and it can be used at merchants, in e-commerce, and in-app payments. There would be a strange concept if you would have one payment card for the first retailer and another payment card for Netflix and another payment method for each and every service provider. But if you look at identification, you still have to sign up for each and every merchant, and it's natural to have. In Austria, we made a survey. So on an average, Austrians have 29 different accounts, even if most of them are barely used, but they have them, with more or less secure passwords or even biometrics. So that's not a very high user convenience across all the services they use in the net. So not a single service. So each and every one can make can cover registration and dealing with its users. But it would be more natural if I get a digital identity from the government, from the bank, but a general one that I can generally use to log on to services. But of course, also these identity products would use, for convenience reasons, biometrics to identify to the app.
Mr. Gruber, isn't that a way that leads bank into a much higher degree of dependency? And isn't that a way which leads bank to lose the control of the future? First of all, we are depending on devices, technologies where we have those different hardware like the camera or software like Siri in place. We're also depending on a kind of a government decision on identity management. We will discuss this a little bit more in the detail. And we're also depending on much smarter and more well-designed processes like we have it, for example, with Apple. And at the end of the day, you just can embed or you just can buy in what you need for a good banking service. Is that true?
I think what you described is a very good example of an overall economy that relies more and more on different forms of collaboration, right? I think the idea of being in full control of your own fate, which is probably incorporated in traditional banks that used to have everything in-house, right? The whole technology stack in-house, every product made by them, implemented by themselves. But that idea is gone. Yeah, so you might look at it in a critical way, and yes, dependencies increase. Yeah, I am reliant on Google and Apple to some extent. I'm reliant on what the regulators are doing. True, but in combination, if I look at it in a positive way, right? In combination, the service that gets out there to the end user has become much better by now. So it's almost philosophical in a way, right? It's a matter of the point of view you take. And I'm personally a very strong advocate of this whole idea of open banking, because I think banks exist in an ecosystem. There's lots of use cases out there that only come to life when you can integrate across industries, between partners. And I think that is the future we're going to. Does it increase the dependencies? Yes, it does, of course. But it's not necessarily a bad thing.
So may I add something? Just because it would be the same discussion whether you had higher risks in your businesses because you depend on mobile smart devices. You have no shares, I guess, on Apple and Samsung, and you cannot influence their next products. So that's part of the business you have, and that's part of the value chain we have to cover for our clients, the banks. So having everything in-house, developing everything on their own, managing all the users, only my users, is also not the regulator's view, depending on the data. So that's a concept of the past. I agree with Gerald, and it's not in practical terms, it's not there anymore. So it's more fragmented. You have more dependencies, but if you look at it on the positive side, each and everyone can focus on his business. So I think a business of a bank is not managing clients on mobile accounts. So not the bank accounts, so just the username password thing. And of course, I also think that it's not part of a banking business to be to have the best implementation of an ATM software. So there are others that can focus more on that. There are experts there, and banks can use it. Of course, customized for their users. And if the service is not good enough, you can find another one in this fragmented world.
So Flatcher, I would like to strike on open banking and sourcing strategy a little bit later, even more in detail. But let me first ask you a very specific question. You mentioned the importance of the identity management, especially for the mobile business. It's very important. Mm-hmm. And with some respect, I would agree, for somebody who spent most of his business life in a banking environment, we always agreed that this is a very important part of a bank to identify your customers by different means. Yeah. Nevertheless, we have learned last year that our digital minister of the former government in Germany, Mrs. Dorothea Bär, went to Spain, had a big conference and discussed about identity management features. And even the Spanish central bank was really surprised, even not being informed about this meeting. And at the end of the day, we bankers have to recognize, oh yes, we invested a lot of money in VeriMe, and yes, and it was a very hard trip for even the banking community to be invited to the next meeting. So identity management, is it a banking business really still? Or do we have to follow there the strategies of machine-to-machine communication, which is much, much, much more advanced and even maybe much more important than our verification in the front of a mobile phone of transferring 10 euros from account A to account B?
You can also have some different views there. I know that a lot of discussions going on in different settings regarding digital identities. So we started to go deeper into this topic now 6 years ago. And at that time in Europe, there have been around 100 different identity schemes already there. So if I would have had to guess, I would have said there maybe 20, but not more, but it have been 100. And the number increased in the last couple of years. So, and what we have seen in our research is that you need two things if you want to have a universal working identity that creates value also for the business part, for the economy. You need, on one hand, some documents that only can be issued by the state, like a passport sometimes. If you want to open an account without the hassle of having a video KYC process, having a digital passport would help. That's a good thing. Then you have the structures of a state, which are not very flexible if it comes to adapting to different businesses. Because if you go into the economy, and you have various segments, maybe assurance companies maybe would also like to transport an insurance number, and others would more like to have their data not printed on the smartphone or displayed on the smartphone, human readable. They more prefer a QR code or whatever. You need some sort of business infrastructure that can deliver the services out there, including hotlines, including implementation support, including further development and integrating in other businesses. And that's the reason why what we have seen is the best implementations and the best usage patterns developed in countries where state and economy work together. So, and of course, the banks have a good head start because they have identified
So I'm not sure.
customers.
Harald, you were frozen for a little while.
Then you have mobile operator from the scratch. So that's just a natural good head start for banking communities. I think that's the reason. And of course, they also have the trust from the people. So if you give someone all your money and you think it's safe there, maybe you can also give them some data to manage for you. But I think the best models are the government and economy, especially banking industry, work together.
Gerald, if you are making a decision for your bank, what kind of identification management you are implementing? Please go through your head. Whom do you have to talk first to? To your IT department, to the banking authorities, to the banking associations? Or are you talking to your customers?
Are you talking about KYC now? About the KYC
I'm talking
process?
about identifying your customer, maybe also in the KYC process, but also in the daily business after you open the account.
Yeah. I would say the regulatory framework provides the baseline. Yeah, there's rules we have to comply with. Yeah, and above that, it's all about what's accepted by our users. As I said earlier, right? We've implemented different processes for different countries for a while. We saw a very big difference in conversion rates, and we're now trying to apply the same model across Europe. Yeah.
When we talk about trust, which is one of the main banking functions, trust. Do you believe that a consumer, a company, should entrust, for example, his biometrics data to more than one trusted party? Question one. And question two, do you believe that bank could be the most entrusted third party for a big group of consumers?
Well, that's an interesting question, right? I mean, I think at the moment, if you look at biometrics, the data are with Apple and Google, and they provide the service to us, saying yes, this person is the person they claim to be.
Which is exactly my question. So we lost already the main banking function because we lost to be the trusted third party?
Well, I don't know. Did the bank, apart from forcing you into a physical branch and actually showing your face, ever have the technology stack and own all the data? I'm not so sure about that. And again, I don't think it. Yes, as I think we're getting back to the point I made earlier. Yes, so yes, there are more dependencies, but there is no way back. Right? No, I don't see banks implementing their own biometric methods. It's not going to work.
Sometimes people blame me that I ask a question the way that I get the answer I'm looking for. So
okay, try again.
so maybe I'll try a little bit of talking about my thinkings. In some respect, we have to accept certain situations as they are. But nevertheless, if there are the data not in our banking walls, if those data are outside, do we have to think much more about new process designs, making sure that this kind of embedded banking will also need a kind of a sourcing strategy where our banking services are very deeply embedded into the services of Google, Amazon, and maybe Apple? Would that be a kind of a future you at PSR in Austria think about when you say the new process design will always have an inclusion to, for example, the entrusted data kept on the platform of Google and Apple?
There are multiple answers on this, because one is where the data lies, who owns the data. That's interesting. Even going back to the regular idea, it's the customer who owns the data. Why should the bank have the data? So that's another thing. And where you store biometrics data and whether this is important for a bank, or is it important to know the customer? It's the correct one. I identified once. I think that's enough. Yeah, that are different areas. Going into the platforms, neglecting the fact that the platforms are there and they're used would be, stupid. Of course, you have to integrate it, but I think you have to be careful where to store data, but not because of Google and Apple are evil, just because they are American companies and make money. It has to do with Data Protection Act and all that stuff. So it must follow the regulatory framework, of course. I think that technology must build these connections, that it can be used there. So that's as a system provider, but at an extent so that if you look at Apple Pay, if you look at this, there is no such thing as Apple Pay itself, because you always have a card data behind. You put a card that is issued by a bank into Apple. That's also already an ecosystem where you have an hardware device manufacturer, also providing an operating system and the wallet. You have some sort of card scheme or payment scheme provider, having all the elements for payments with this card product. And you have a bank issuing this payment method to a customer having such a device. So that's a very good example for this how things work together. And that's not a bad thing that the device comes from Apple. And the same is using other parts of technology, even if it's part of software or if it's the biometric sensor. The transaction data itself, that's part of the account of the customer, and the bank provides access to the money of the customer. So that's not a big deal, but you have to integrate it in a manner that it works on one hand, but you cannot give away the whole connection to your client on the other hand. And that's of course something that the big players want to do. So getting the whole access to the customer story, but that's a business decision. So I would more refer a business thing, not the technical thing. So that's the new sort of trade-off. So it's not security versus convenience. It is offering services on all platforms versus how much you can, is your client. So where are you in the ecosystem, in the value chain?
Mr. Gruber, I think we very nicely touched now to the final point of our discussion. Sorry, the time is running out again. We'll be talking about the business models and what will be the real future, even if you think about maybe going beyond the classical banking. The one idea would be that a bank will be embedded, the banking service will much more embedded into the network of others. For example, like the card we recognized is a banking product embedded in the Apple environment. And the other way around, it will be also possible saying we're creating a kind of a new ecosystem around our bank account. And some people think about having a banking app, which we're going towards a super app. So what is your understanding of bank? Are you going to provide a super app? Are you going to provide an ecosystem around your account? Or would you think you will bring your customer to those ecosystems where your customer wants to be in the most convenient and secure environment?
I'm not necessarily supporting the idea that these are contradictions, to be honest. If I look at our service at the moment, it is, I wouldn't call it a super app, but parts of what we're doing, of the services we are providing to our users and help our users lead their financial lives as they want to, given this freedom of choice, is achieved through partners, right? Simple examples, right? Cash services, we partner with PaySafeCard. Investments, we have a Dutch partner to provide that in the background. If we're looking into other services that we would not provide ourselves, but they would be given to our users under our brand. but actually they are done by somebody else. In other instances, we are also looking at use cases where we become the secondary party in a service provided to users. It's something I can't really talk about, but we're working on a large project with a partner who's millions of users. They provide some kind of service to them, payment service to them. We're probably going to substitute that payment service. So Bank will become the secondary brand, providing the financial services embedded into a totally different use case. So I know it's a buzzword, but embedded finance, I think, has a great future. And I think the whole integrational aspect of this ecosystem will just become more and more important. Banks need to figure out which role they want to play. There are some, like the Solaris of this world who chose to play in the background. Others like us want to be a consumer brand and play at the front. But nobody out there is able to provide more complex use cases by themselves.
Mr. Fletcher, maybe almost our final statement when we talk about open banking. What kind of strategy are you advising to your banks which you are serving? Open banking, that it means to welcome others to play around on your databases? Or does open banking mean making your banks ready to integrate your services much more seamlessly into the financial processes of others?
That's the wrong question for us. Sorry for that, because we are not providing the open banking services, including financing and all that stuff. But I think in general, that's an interesting and open discussion, and the banking industry has not found a position where they should go at. So to my advice, I think there's more fantasy in integrating the banking services in other ecosystems to serve their customers, using their money and fulfilling the needs of their customers. So as it does not make sense that all the cash machines are in the branches of the banks, so there are also cash machines in supermarkets where the money is needed. So I think also the other banking services should be provided there where the people need it.
So, ladies and gentlemen in the audience, I hope this last hour gave you a little bit an overview of this broad range of very interesting discussions when we talk about mobile banking. And you hopefully have seen that the discussion which we had a few years ago when we talked about a new sales channel, these days are very gone for ages. We need new technologies, and these new technologies really opens up very new business opportunities for banks, and banks who are ready to use those technologies of improving their processes in respect of convenience and security, also helping them to make a daily transaction much more easier, and helping to implement smart bots, for example, 24-hour services, which is not possible if you have the m-banking connected with online an offline session. All those aspects really changing the strategy around the traditional banking infrastructure. I'm very thankful for my two partners in discussions. And as usual, there would be time for much, much more of discussion. Hopefully we will see us soon again. And I would like to continue our discussion and saying bye-bye to our audience and enjoy your lunch. Bye-bye.
Thanks for having me.
Thank you.
Dear ladies and gentlemen, welcome to session 4 of today's IBF European Payments Conference. So our session has the topic co-opetition between fintechs and banks. So my name is Matthias Fischer. I'm a professor of banking at Technische Hochschule Nürnberg or Institute of Technology in Nuremberg. I have the honor to moderate today's session. So when we talk about co-opetition, what is that? How can we what do we understand with co-opetition? So it's the act of working together with a company who is your business competitor in a way that benefits both of you. So fintechs and banks could go for more joint projects in the spirit of co-opetition, blending cooperation and competition. So before we are going to start our discussion on the topic co-opetition between fintechs and banks, we will listen to the keynote of Timo Zwetz on co-opetition between fintechs and banks. Timo, welcome to our session. Good to have you here. You're based in Munich right now, I understand, correct?
That's right.
Good. And Timo is the General Manager Germany at Banking Circle. We will come back to his statements also during our discussion. So Timo is also the head of institutional banking DACH, so Germany, Austria, Switzerland at Banking Circle. Before joining Banking Circle, Timo served as a senior director of financial institutions, debt origination, sustainable advisory corporates markets at Bayerische Landesbank or Bavarian Landesbank. And you also worked for Standard Chartered Bank and for UBS. Timo, we are excited to hear your keynote. Please go for it. Thank you.
Well, thank you very much for that kind introduction and a warm welcome also from my side on this panel. And my keynote, I wanted to kick it off with a story to give you a little bit of background about me. So when I started my journey in banking some 20 years ago, I always wanted to be where the action is. I wanted to make an impact. I want to enable clients. I want to give good and honest advice to benefit them all. So my career started actually in investment banking in the financial markets unit and there in the debt product. That was a product that needed a good attitude, strong personality, durability, and a lot of love for the detail. Nothing that the machine would ever be able to take over. However, the product was over the years being standardized and the platforms became a common feature. The landscape changed. Today, much of this product is automated and it's reducing errors. It's making things more efficient and effectively for the client. So all in all, something for the better. But people are still needed. Technology has and will not fully take over. It's still a people's business, as one of my former bosses used to say. And I agree. But as a person that likes to be on the go, changing to a fintech and living what I loved from the first day of my career was too tempting. I want to bridge with this move the gap between the old and the new, make banking future safe and sustainable. Plus, I want to lead the change and not to be led by the change. To understand a little bit the change here I refer to, I would like to go back quickly in time. So fintechs emerged as a disruptive phenomenon in the shadow of the 2008 financial crisis. Catalytic events and crises spark revolutionary innovation. That's always the case. Just like the acceleration of digitalization that we have witnessed during the pandemic. Fintechs spotted gaps in the offering from traditional incumbent banks and used their expertise to develop solutions to meet this need. Banks had to deal with the aftermath of the financial crisis and did not immediately warm up to the challenge of fintechs. Banks ignored fintechs, classified them as non-sustainable, not compatible with banks. This, of course, led to a period of conflict. However, shifting consumer expectations and growth and innovation on the fintech side caused disruption, which eventually could not be resisted anymore. The fact was that big banks began losing customers, plus has massive regulatory changes and they needed a vision. They increasingly started to realize that the technological innovation provided by fintechs would play a major role in the future of banking. In other words, it was not longer an option to collaborate. It became essential for banks to learn from these ambitious upstarts. Fintechs were here to stay. But the love was not mutual from the beginning. Fintechs initially spoke a language of fierce independence, but it soon became also evident that startups would benefit from markets, the resources, the know-how in particular, the credibility that collaboration with big established players offered them. Ultimately, mutually beneficial relationship develops, and this was overall another push for the development of the fintech sector. As a result, we saw bank acceleration programs, fundings even full takeovers of fintechs happening. And now even the governments are getting involved. So the question I'm asking, is collaboration the future for banks and fintechs? Without a doubt, a strong yes. The fintech revolution will continue. It will become very normal to integrate fintechs and banks' value chain. In fact, when we did some research in 2020 and spoke to 300 banks, we discovered on the Banking Circle site that half of the banks we surveyed already had partnerships in place or planned to work with external providers within a month. And another third planned to have this in the next 12 months on the game. Such collaborations is already highly common and very successful in other industries. Just think about how cars get manufactured today. Most of the components are now coming from a second-party suppliers and assembled in the manufacturer's assembly line to a fresh new product. The aim is to get the best for the customer and work together not as competitors, but as partners. My view is not all needs to be invented and manufactured in-house when there is a specialist out there that can help you. So what are the trends that will further push collaboration and the joint revolution? First one is data innovation and how we collect and use data going forward. Big data is already an important part of the fintech field. I refer to it as a resource akin to oil to keep the machinery running. Whoever owns the data will be better positioned to make decisions, deploy artificial intelligence or robo-advisors. For example, it has become possible to augment quantitative decision-making with neural networks, meaning that organizations such as lenders can analyze the financial data of borrowers to determine the creditworthiness. And now combine this with artificial intelligence, and you can, for example, minimize default rates. Isn't that a beauty? Second one is legacy system with banks. So these systems were very useful and incorporated when the idea of banking was intended to deal with physical paper between buildings, people, geographies, and so forth. This was all before digital money and all the payment systems and architecture we take for granted today were implemented. Our research again showed that 40% of the banks we spoke to said their existing infrastructure is one of the 3 biggest internal challenges. And that's, in my opinion, again, why platform business is so successful and will further evolve. This is a central piece which challenges banks as they need to keep up with the latest developments, bringing them to collaboration with innovative fintechs. My view is that the future of currency and finance will be all about digital disruption of data via plug-and-play software and services underpinned by sophisticated global networks. Change of customer demand and loyalty is another challenge that innovative fintechs are well positioned to deal with, especially in a niche. In most cases, fintechs can move much more quickly than banks, giving their partners the edge. Think about today, customers can change banks quickly. It's a click away on the smartphone to open a new account and move on somewhere else. This is especially valid for the next generation, X and Y, and all the generations to follow. So far, banks have not seen much of this attrition, but it's about to start. Again, in our research, we revealed that high customer expectations are the most common external difficulty that banks are facing. 42% told us that this was on the top 3 challenges. The fourth one is cost-benefit ratio of these new systems and the constant change, combined with data collection, which in my view will be the new gold mine in the future. Are banks set up for this? Do they have the deep pockets necessarily, or would it be smarter to partner? Not to mention the new competition that open banking gives new players, such big tech giants that become competitors in the industry. The last one is emerging markets demographies. The scalability and innovation that fintechs bring with their business models will allow access to new economies and open new ways to banking in areas never thought before. New technology in banking will enable those left behind so far, similar to how smartphones allowed the telco industry to leapfrog development of landline phone infrastructure, or how fintechs and mobile wallets allowed the otherwise unbanked Asia to access payments via their smartphones. Let me conclude. With data and digitalization becoming even ever more important, it will become essential for established financial players to seek collaboration so they can deliver the digital products that will continue to define the industry. However, while I talked up my game, it's of course important to mention that revolutions don't always run smoothly, and the proponents of revolutions are prone to exaggerating their scale. So it's essential to recognize that existing financial architecture will remain significant for many years to come, and indeed decades. The fintech revolution will be a steady process, in my opinion. Banks are increasingly recognizing that they will need to look outside of their traditional industry partners to generate value. And partly because fintechs are offering something unusual and valuable. And banks that are quick to get on board will be within the fintech revolution will benefit from it, from disrupting their own businesses rather than sitting on the sideline and watching the financial industry leave them behind. In my mind, there's no room for prejudice or institutional complacency. The big challenge for established players in the financial space will be their ability to tweak their organizational culture. Accepting this collaborative approach will go against the grain to some extent. However, I'm optimistic. The banks we spoke to confirmed that whilst fintechs can be seen as a disruptive force, they can be important partners that help banks to deliver value-added services for their clients. Plus, also realizing from my own journey, this cooperation is essential for the future. And although a cultural challenge, as in my case as well, it's possible. So with this, I close, and I would like to thank you again for listening and look forward to this interesting debate to follow. I hand over again.
Timo, thank you very much for your keynote. And we definitely will discuss a few of your statements with the rest of the speakers. So now let me please briefly introduce the speakers in my first panel. I welcome Jacob Beckel. Jacob, hi, welcome.
Thanks.
Jacob Beckel, you are based actually in Luxembourg. You're head of institutional banking at Banking Circle. Jacob has a long experience and international career in commercial banking and transaction banking. In 2016, you joined Saxo Payments in Copenhagen, and Saxo Payments then changed the name in Banking Circle. And since 2017, Jacob is working for Banking Circle in Luxembourg as global head of institutional banking. Welcome, Jacob. Second in line, I'm happy to see Matthias Kröner. Hello, Matthias. Hello to London. So I guess usually you're based in Munich. Today you're based in London. Matthias Kröner is a fintech entrepreneur and investor. He actually is founder and director of Trade Light Solutions in Munich. Matthias has a long career in banking. He was until March 2019 CEO and co-founder of Fidor Group in Munich, which is a Munich headquartered digital and mobile bank and financial services technology provider. Before Fidor, Matthias Kröner co-created Europe's first digital bank and online broker, DAB Bank in Munich, and served as its CEO. Welcome, Matthias. And third in our panel is Hugues Mercier. Hugues, welcome to our panel. Thank you to have you in today. Hugues Mercier is the CEO of Omax pour moi, a B2C neobank. He's based in the northwest of France in Brest. Hugues has a long career in banking also. Since 2011, he's working for Crédit Mutuel Arkéa, a regional bank with retail banking and insurance activities. And e.g., Hugues there at Crédit Mutuel Arkéa served as head of payments, marketing, and back offices, or head of payments and electronic data management. And now, as I already said, Hugues Mercier heads a subsidiary of Crédit Mutuel Arkéa, the B2C neobank Omax pour moi. We're going to learn more about that later. So, well, we start alphabetically with Jacob Beckel. And Jacob, Timo just mentioned that the very beginning of the fintech trends was after 2008, after the financial crisis. And he also said that at the beginning, fintechs have been ignored by banks. Meanwhile, everybody learned that fintechs are here to stay, of course. Fintechs have become very important players in some sectors, like the payment sector with PayPal, Adyen, Klarna, or in China, WeChat or Alipay. In other sectors, the fintechs still play a niche role, like in crowdfunding, lending-based crowdfunding, equity-based crowdfunding. They are still in a niche role. Same niche role still in asset management with robo-advisory or automated portfolio management. But I say, well, that niche role can change quickly when you have a scalable business model, when you have a scalable platform. That niche role could change quickly. And Jacob, what could banks learn from fintechs? What's your idea when banks learn to fintechs, when they cooperate with them? What could banks learn from fintechs?
Thanks, Matthias. I think we add, it's clearly put in your introduction to this question that this is kind of an evolution, or as Timo said, a revolution. We started out by servicing the PSPs and the payment companies, market platforms, and so on, which became very quickly a sustainable piece of business, which allowed us then to scale into new silos or new businesses. And as I joined in 2016, we started working closer with banks. There were many banks who in the beginning were just ignoring us, or was kind of saying, this fintech, we don't really have it in our interest right now. But after some difficult talks and so on, we also got a better understanding how to introduce ourselves and how to advocate for a sustainable business case. So the first step in what we were doing were to get to these banks, enabling us to do the local payments, because the big players in this market, some of the names you mentioned, they are looking for the lowest of prices, the quickest of execution. So they cannot sit on the old school correspondent bank and cross-border payments. So what we are seeing now is that we have now really sustainable pieces of business where they are routing our own payments out into the local clearings, and we are servicing these. On the back of that, we started also to approach banks and discuss, are there other business we can do for you? Other things you're looking for? What is your big problem on a day-to-day basis when you look at your payment capabilities? And it very quickly came out that a lot of these banks we spoke to, and that being banks from tier 1 global banks, the really big players in Europe, North America, and so on, but also down to the smaller banks, neobanks, and so on. They all started using this word, which I've heard for ages, and it's not a new word, but it's still a buzzword, de-risking. And in the beginning, de-risking was very much a question of banks looking at the risk appetite. Maybe we should go down. Then it became an argument about the business case itself. or we're not earning enough compared to the big risk we are taking on this bank. But in the longer run, what in reality is behind it is that many commercial banks around classic banks, they have not been able to invest enough to keep their IT, the products, the geographical or their capabilities running. So as it is today, many banks are actually de-risking because they're not able to service clients anymore as per the requirements. So that is a question of banks focusing now on what they're good at their core. And that comes from most likely a business case that says that we have a higher return, but it also comes from an acceptance that they need to scale down, or they need to go closer to what they're good at, because they cannot, based on a legacy IT, continue the development which their clients are asking for. So as a consequence of that, as we are investing, we are going in absolutely the opposite direction. We are investing in geographical infrastructure. We are going deep in the core currencies. So what a local bank in the UK can do, a local bank in the Euro 7 market do, we can do, or we will be able to do in the foreseeable future. And we will continue this development. And that enables us now to sell products, which in the old days, when I was years younger working in Standard Chartered or IBM, that was products which was isolated and only belonged to these big global banks. Only the big ones could do the absolute global players. It is now becoming the FinTechs. And this is now forcing more and more banks. I won't say forcing anymore. I would maybe say raising the appetite with many of these banks to start work with us. And we are seeing that. We have these deals. We are putting banks on products which you would say, but don't you do that yourselves? No, they don't, because they have acknowledged that the investment they have to do is so big that they prefer to scale a little bit down. And we are talking to banks which was amongst the biggest in Northern Europe when it comes to geography, and they're now scaling down to maybe only a few countries. But we're also talking to smaller banks who has not been able to do, so that would be local banks in markets like the Nordics or other countries, which have been usually serviced by global banks or large regional banks, and they're now being de-risked and they can't service their customers. And of course, they're exporting customers out of Norway or Finland or any of the European countries. And they need to service their customers. And that is where we come in. That is what we can do. So the appetite has completely changed. And our team is growing every day, or not every day, but every month nearly, because the appetite for these kind of services, this kind of cooperation, strategic partnership is definitely there. That's what we see on a day-to-day basis. And of course, it's a fun and interesting path to be on, coming from the big global banks where we were sitting as a dominant player, and now starting to establish ourselves as a fintech network bank with raising products, increasing products, time to market is shorter, but also with a geography which is much more interesting. And so that is a bit the day-to-day thing.
Thank you very much, Jacob. Matthias, hi. Yeah, so I learned that your new company, Tradelight, is offering solutions for play to learn and play to earn. So one question would be, wouldn't your new company be a good example for possible cooperations, as you have a very specialized product between fintech and banks? One question, first question. And the second one, I mean, you also served in the banking world, in direct banks. And well, probably you see yourself more with the attitude of a fintech entrepreneur than a banking entrepreneur. Where are the problems of cooperation? Is it trust between banking and fintechs? Can the banks trust the small fintechs? Where is the more, or is it a more cultural thing? Well, please first tell us a little bit about your company TradeLight and the cooperation, and then about these problems one could see between banks and fintechs in cooperation. Thank you.
I have a pretty unstable internet connection over here, I guess. So I'm very sorry if there's a kind of a hiccup sometimes occurring. Nevertheless, let me come back to your questions. So first of all, TradeLight is offering the format of video games on the one side. On the other side, but I'm too much excited about the topic. So TradeLight is super interesting. Whoever wants to know more can come up to me, no doubt about it. I'm normally a pretty big salesperson. But coming back to the fintech discussion, right? It is that, you know, 2007 onwards, 2008 and 9. Actually, the phrase fintech, at least to my memory and awareness, was not around those days, and we didn't care actually whether it's a fintech or not. Those days, we said it's a rule-breaking, web-based, customer-centric, tech-enabled concept that we want to set up. And later, it turned out that people the motivation was to deliver a better solution. The motivation was to deliver a customer-centric solution. The motivation was to deliver a scalable solution. And all this makes it different to incumbent banks, you know? So when you have a look at the banking world and the financial services world, you have to see that actually some players are really almost actively and opening the field for whatever we're going to call fintech, or, you know, give them any name. The name itself and the category itself, I would find to be, well, nice discussion, maybe not that super useful. So it was about the better solution that we want to achieve. And that was the core motivation. And again, you have to see that the financial service innovation, and you have a massive USP in comparison to any incumbent. So that is the environment. The environment, then of course, there's a reason why an industry in general is innovation averse. And it's a cultural reason, I would say, on the one side, and the culture is supported and fueled by maybe regulation. There are many out there taking is amazing, because just look at the kind of pharmaceutical industry. If they would argue the same way, we wouldn't have a kind of vaccine against COVID today. So the whole industry is actually brain lazy, if I may say so. And that's one of the root causes. And yes, I can even go back way years before we even think about fintech. When we started DAB Bank, that was before actually the internet was invented. And we came up with the first European continental discount brokerage concept. And those days, executives and decision makers and board members of the big banks, by the way, some of them are not existing anymore, right? Like Dresdner, like Vereinsbank, like Hypo Vereinsbank, like Hypobank, all of them are for the consumer. The consumer is not ripe for this. This is a very idiotic solution, and so on and so forth. See where we are today. We are in the third wave of brokerage with Robinhood and TradeLight and others. Actually, big banks are not owning a single market share of that anymore. So I look at PayPal, international remittance. That's the situation. So to come back to the question, what are we discussing, right? What are we discussing? This is a kind of defense discussion out of my perspective, and indicating already my view whether collaboration is really working on that. Thank you.
Yeah, thank you very much, Matthias, to London. I have to admit the internet connection is really very bad, but because you have been interrupted 10 seconds, 15 seconds, and there was an interruption, then 15 seconds, interruption, so on. But well, perhaps you could still make it better, yeah, if you don't use the video, I don't know. But I guess we got your most important points. We got them. I mean, you also told us that fintech, is a new wording, but the direct banks starting in after 2000 or in the late 90s, they had been already perhaps fintechs because all the direct banks had been online banks. So, and these direct banks, that's also my view. They are the front runners if it comes to automation, online automation. And fintechs are mainly about automation and scalability of the business model. Yeah. So, Hugues,
yes,
great to have you here. And now we speak to also a fintech, entrepreneur, a fintech founder. Perhaps you tell us a little bit about your fintech, why your bank did create that fintech. I mean, you didn't buy it. I understood you created it by your own. So
absolutely.
In-house development, that's also a decision. We said the decision is always the strategic decision is in-house development, buying or cooperation. For all the three, there are good reasons. And one has to individually decide about all the three, deciding the sector, deciding the timing, deciding the price to buy or to develop, of course. So let us know a little bit about your neobank and why the bank decided to go for that venture to develop this new neobank and not to cooperate, perhaps.
Yeah, thanks for the introduction, Matthias. Before going back to actually what we do, I would like to start by why we did it internally at Crédit Mutuel Arkea. And if we look back in the mirror, the financial landscape or the banking landscape has been driven by two regulatory changes. PSD1, which enabled the ability to do banking for third parties, which led actually to open banking from my perspective, and PSD2 by putting the consumer on top of their data. And linking these two regulatory changes, I mean, open banking and data, made us think about creating this subsidiary in 2017. It's really based on these two moves that we were thinking that there was room for a kind of neobank, I would say, which would actually be on top of traditional banks, which could be online banks or traditional brick and mortar banks, and that would add a top up of additional services for B2C consumers. And these market trends were actually leading us to develop it internally because what we could see on the market did not exist first. So there was no question to buy it. And B, the ability to build from scratch a model with open banking, i.e., we were not meant to develop on our legacy IT system the services, and we could buy them on the market, I would say, or there were some that we considered as commodities from our banking perspective. I mean, a commodity to me is holding an account and issuing a credit card, for example. I mean, to me, it's a commodity because we've been doing it for a million of clients, and we do it for third parties, for Allianz Bank or AXA Bank or HSBC France, for example. So we were actually already at a group level doing B2B activities, being not a bank as a service, I would say, but a traditional bank from front to end service provider. So with true BPO activities. So for us, account and card issuing were commodities, so there were no need to go to third parties vendors that could propose this. But on top of that, having account aggregation with AESP, for example, we were not doing it internally. So we could either develop it, but we would assume that it was becoming a commodity, and then work with third parties like Budget Insight, for example, which is a French player that is moving abroad and extending its European reach. And in the end, we even come to buy Budget Insight. And so we were from the beginning in a collaboration and co-petition perspective. I mean, it was not a competition, not at all. And when I try to propose a new service, for example, I always ask myself, of course, whether there is a market, whether there is an interest from the customer, what's his price, of course. But if I want to build it, do I want to build it internally and develop it, or am I acting as a business provider for third parties, and where is the value I create from selling products to my customers? And we are doing it from credit to life insurance to traditional insurance, and that's where we try to position ourselves on top of traditional banks. So in my case, I mean, and looking back at the mirror, it's definitely not a competition. It's a collaboration internally and externally within the fintech world.
Okay, so I would be very much interested also to know, well, the impact like of PSD1 and PSD2 in your business. So was it rather PSD1 with which the cooperation and the possibilities of outsourcing did start, or was it PSD2? And how do you see now this? How easy it is getting to have an outsourcing project or to use APIs?
I would actually answer both of them, but for different reasons. Internally, PSD1 created an awareness and an openness, a cultural awareness from the management, from the top management, to do things for third parties. Because, I mean, if your top management is not aware and convinced that it's possible and that there is a business sense to do it, I mean, you can have the best idea in the world. If you want to incubate it, it's very unlikely that you will succeed. So it created the awareness. And PSD2, of course, by expanding the account information possibilities for third parties, the account aggregation, the payment initiation, and so on, reinforced that trend. So PSD1 was about cultural awareness, PSD2 was about business opportunities from my perspective, from an internal perspective.
Okay, and let me add another third question to your experience there if it comes to outsourcing. Well, from a theoretical point of view, these outsourcing projects, of course, they look good. From a practical view, the outsourcing providers often tell perhaps to the client that the outsourcing implementation will take 12 months, and in practice, it takes 36 months or even longer. Have you also had already that experience, or well, how could one improve that outsourcing process? Wouldn't it be better to tell at once at the beginning it takes 36 months instead of 12 months?
Well, that's a tricky question. I mean, from what we've seen internally, the answer is probably in between. So it's definitely not 36 months as a start. But the thing is that if you want to build it and take the as-is situation, is probably more likely 12. But the thing is that most clients want specific design to address their clients or solutions, and therefore it expands the budget. I mean, if you take it off the shelf, 12 months, or okay, maybe it's not 12, but it's 13 or 14, but it's close to 12. But if you want some stuff that are highly designed, dedicated, and tailor-made, of course, you tend to go to 24.
Thanks a lot.
It's all about the clients.
Only the clients. Yeah, Jacob. Well, if it comes to these cooperation projects, I would be also interested in how much time does it take for such a cooperation? What is realistic, and what are the problems in the cooperation projects?
I think there's typically two hurdles. I think the sales sequence of the sales circle is actually pretty short, because we have clearly defined products, and as long as the counterparty or the bank we talk to can provide the information we're looking for, we can quickly, within a few days or a day or two, offer them a proposal. Then we, like any other bank, has to overcome the first hurdle, which is the KYC onboarding. Here we are doing a lot of the work, which is typically done by the bank themselves. We are using all the publicly available databases, and we do a lot ourselves to prepare us for that client to be onboarded. So already before we do an onboarding, we have looked into it and checked what is publicly available. So we are maybe 40-50% down the road of onboarding such a client. So we are focusing much more on the regulatory issues, knowing the flow, knowing the client, knowing the channels of payments, which kind of geographies, which kind of industries, and all that stuff. So in a good, efficient manner, with, I would say, a European bank, it will take 2 to 3 weeks to have a bank onboarded. In some cases, when we work with banks, for example, in the US and so on, the time can take a little bit longer. But in general, I would say we can onboard a bank, have them ready for implementation within a month's time. Then comes to the technical thing. If we talk about a good old-fashioned SWIFT connection, then yeah, everything is plain vanilla. We all know what we talk about. So that can be done in a couple of weeks. But we see more and more banks also coming to us want to talk SFTP connections or API connections, and then it all depends of the awareness, the readiness of the counterparty. But it may delay in a week, maybe 2. So in a perfect world, from the first talk until to having a bank live, I would say somewhere between 4 and 6 weeks.
Okay, so of course it depends a lot on the business area to outsource and to cooperate.
Yeah.
If we talk about a core banking system, it's totally other questions.
Yeah.
Just let me try. I don't know if Matthias Kröner is connected again from London. I don't know if the internet connection works again, Matthias. Just give it a try. If not, no.
I am.
Perfectly. So now we hear you perfectly. I cannot see you, but no problem. So we can listen to you perfectly. You know, Matthias, in London you have this sandbox regime for fintechs. In Germany,
not only there.
We do not have such a sandbox regime. Well, what is your idea? It's a general question. Of course, should banks develop their own solutions? Should they cooperate, or should they acquire one? It depends on the sector. Well, what's your view on it? I know your view is also a cultural view. You say sometimes culture of fintech is different to banking, and what's your view on it?
So I would say, and again, sorry for the difficulties. I just learned that I've been provided a wrong password for the Wi-Fi, and I did operate via my hotspot, which was not ideal actually. So apologies again. And see, there's sometimes it's the very simple issues that make it not work. So I think, first of all, it is very much needed that any kind of a company, and also like a bank and a financial services institution, needs to know what is your USP, what are you really there for, and once you identify yourself to be a customer owner, then of course you have to double check whether you think you need to create technology on your own. Whenever you speak to tier 1 banks, it's always that they say we need to own it, it must be on our stack, it must be on-prem, it must be our solution, and we can do it the better way, and so on and so forth. And it's impossible that we partner because you cannot meet up to your expectations and you are not that scalable and so on. I would disagree in general, because I would say, listen, in particular in the world we are living, which is even with an accelerating speed of change, actually, it will be very, very hard for each player out there, no matter what size. It will be very hard and almost impossible to keep up the pace of change. And the change is not only a technical change, it's a consumer change. It's a consumer behavioral change also we are speaking about. The consumers are requesting different solutions. They are living a different lifestyle in a massively increasing and accelerating speed of change. So either you are, to provoke a thought now, actually, I would say either you are a customer owner and you're specialized on that, on customer engagement, customer embracing, customer centricity, delivering the best service at a most efficient price, or you are a technology owner, which allows you to be as best as possible in a specific transaction, in a specific sector, and so on. So I would say one needs to make that bold decision. And it's also maybe then solving the cultural conflicts in such organizations, which are that maybe the business owner and the customer owner of such an organization is coming up and says, I want to have that idea, I want to have that kind of service. And the tech team then is saying, no, yeah, well, we can do this. Let us put that in the priority plan. And actually, we're going to take care of this topic actually in 2025, 2026. So, well, by then the customer is gone, by the way. And I think that is about the situation, you know, and this is just the tip of the iceberg of the whole discussion. I'm not even speaking about procurement teams. I'm not speaking about risk management that kills, or compliance that might kill actually any kind of cooperation later. I'm not even speaking about all this.
Thank you very much, Matthias. Well, we know if we talk about fintechs, we talk about startup companies with 5 employees, 10 employees, and we talk about stock listed companies like PayPal, for example, or Adyen, which are also fintechs. I think, well, one fact is true. When we compare the creation of market value at the stock exchange, or also pre-IPO value by venture capitalists, the value creation in the last 10 years has not been coming out of the banking world. Look at the market capitalization of the banks, but the large value creation was done outside the banking world in the fintech area. All these fintechs, they didn't exist before. They created market values at the stock exchange, or they created with venture capital finance pre-IPO valuations, all outside the banking world. So nobody should say fintechs are not successful. If you look to the market valuations which have been created, it's a fact. If it comes now to the big techs, well, I think it remains to be seen in the future, and I think it is questionable whether these big techs will really want to enter the banking business, the regulated banking business, as the returns in that regulated banking business are lower than the returns of the traditional banking, the traditional big tech business. So I think it has not yet been decided if Alibaba, WeChat, Apple, Facebook, Google, or Microsoft would really like to enter this regulated banking area with a low profit environment. Or if they say, as soon as we have to go under the regulatory umbrella, we are out. So this is still an open question for me. Perhaps I give, who wants to comment? Perhaps Hugues first, then Jacob.
Well, it's there are two things. I mean, there are lots of money available and on the markets for either VC or IPO, and from an affiliate it's difficult to apprehend this trend because I depend on, and I rely on my shareholder who compares these kind of investment through traditional investments done internally. Whereas if I were going on the market, I would be facing traditional fintech peers. So there is kind of a duality for a fintech that is incubated, I guess. So it's a bit tricky.
Jacob?
Yeah, I think a little bit the same as Hugo is saying, but on top of that, who knows who's buying what? We saw a producer of electronic cars buying a social platform the other day. What's the logic in that? I don't think there is necessarily a logic. FinTechs could also maybe be acquired by the banks. So the banks are looking at, okay, either we establish something ourselves, some banks are doing it, other banks sit on the sideline. So that it might be that the banks, instead of doing it, are deciding to buy in. And then we have this scene of the IPOs. Who knows? There will be, I think in the future, there will be a big scene of IPOs. We'll see some of these fintechs, the successful ones, of course, go with the IPO road, but around the venture capital, who's behind that? And that could easily be both the big banks and many others who decide to go to invest in the fintech, that route. So I think there are many options for the future, but I agree with you that growth value is established inside the banking industry, especially in the world of the fintechs, if you could say so, or the financial industry around the fintechs. And we see fintechs going deeper into products and solutions and so on. It's not a question only about payments or efficient FX. It's also, digital currencies, trade finance, trading and brokerage and so on. It's all over the space. It's the complete space. So at the end of the day, I think we will just see maybe a defragmented banking industry where the losers are the banks who doesn't understand to invest at the right place at the right time. And I think that is what the FinTechs has been able to do.
Yeah, thank you, Jacob.
Hey, can I contribute?
Yeah, no,
to
I
this,
give
please?
the word to you, Matthias. Just it's to you because I want to find the curve to Asia. I know you're quite often in Asia.
Yeah.
And
yeah, exactly.
Well, in my research since a couple of years, I also concentrate on fintechs, and I was pretty, I would say, surprised to see how global this trend is. So it's not only in China, Europe, or in the United States. If we look to South Korea, to Taiwan, to Vietnam, these fintechs in all the area, if it's payments, robo-advisory, we find it everywhere in every country. So it's a really great trend. And as Matthias, you're quite often also in Asia. Is cooperation between fintechs and banking different in Asia, or is it the same as in Germany?
Yeah, to be honest, really, I'm getting really impatient on this discussion here. I'm in London at an investor conference of a fund who is just reporting the return figures of fintech investment in Asia, India, and Africa. So this is what we speak here, right? So if we're going to focus the whole discussion only to Europe and to a very saturated Europe and to a very saturated retail market, we are absolutely riding the wrong horse. And I personally maybe would not invest into a fintech, whatever it might be, that is focusing only on whatever the German market and try to solve the German retail problem, because it needs a lot of technical development, a lot of technical investment to come to a proper solution. And once you're not leveraging this on a global scale in a maximum audience, you're on the wrong place. Simple as that. First of all. Second, so this brings you to actually regions in which you can maybe serve even or deliver even better solutions to an audience that is maybe unbanked, that's financially literate, which also counts for the European market, and so on and so forth. So you have definitely other growth options. You have more aggressive players on the banking side. With TradeLight, we just last week had a conversation with a Nigerian bank. guys, wake up on this. This is all I can say. Nigeria is a super hyper dynamic market, actually, and this is just one market of the African sub-Saharan continent. And we in Europe always pretend that these regions are not existing. This is personal perception, which is incorrect. I only have to say that. It's a massive environment over there. It's massively dynamically growing. It's way more tech open than anything that we see, in particular in Germany. It's way more innovation friendly than anything we see in Europe. So that's a perfect environment for fintech. And again, whatever you want to label it on the one side. On the other side, coming back to the exit questions and who's buying what and so on. And will big tech do it and so on? I think as soon as we have an innovation, the next immediate question is, will Google do this? I'm a bit annoyed by this because Google has its own strategy. They are not waiting for us to discuss that. Neither is Jet or Alibaba waiting for this. Those guys are infrastructure guys. Whatever plays into their global infrastructure thinking is actually worth looking at it. And just look at it, how they did it with Google Pay, how they did it with Apple Pay, and so on and so forth. Banks are participating in Apple Pay by being 100% sure that this is a negative contribution margin. And why did they do so? Because they did not come up with an own proprietary solution. And why did they have to do so? Because Apple is representing billions of users. They're sitting on the users. It's for them to decide whether they let us from the financial services industry in or not. And of course, if I would be Apple or Google, I would leave the risk business. The risk I would leave actually to the banks on the books, and the loan origination I would take. So, and then we come back to the valuation. Yes, if you look to the valuation, and there's a great McKinsey study on banking in 2021 by Max Flutoto and the guys. If you look at this, it's equity heavy business that it's not rewarded by investors. Equity heavy business comes with high risk business in banking. That's what it is, right? We know the rules. What is highly rewarded is equity-like business that is actually scaling fast, that is originating the customer, and then maybe replacing or relocating the loan, for instance, the loan asset to the book of a bank. So it's the originator that is actually valued highly and owning the customer, while the risk is sitting on the book of a bank. It's not valued at all, and it's actually pretty easy. Right. Okay. And once we understand that customer ownership, scalability, reach out into market, infrastructure, using and leveraging on the technology that is existing, that is the valuation driver. Customer centricity, net promoter score, customer lifetime value. Those are the KPIs that are driving valuation.
Matthias, I see now the internet is working. The connection is perfect.
Yeah, I'm very happy. I'm very happy.
Unfortunately, I have to stop you. We could talk about these points, customer centricity, AI applications, of course, again, for hours. Would be great to have a next session with the three of you. Would be very happy to see you again. So for the moment, please, I can just tell to the audience, please look up for Trade Light Solutions, more the website, or for Omax, here, Omax pour moi, to learn about it. And we could talk about it if you could transfer your business idea also to Germany. Thanks a lot now to the speakers, Jacob Beckel, Matthias Kröner, Hugues Mercier, and Timo Zwetz for the keynote. Thanks a lot for to the International Bankers Forum and the Malecki Group for the organization. We are going to have a lunch break now from 1 till 2 p.m. And at 2 p.m. we will continue with the session 5 with the title Financial Services Based on Blockchain. I mean, great topic, blockchain and application of blockchain. Thanks to everybody, and bye-bye.
Bye-bye.
Many thanks. Bye.
Yeah, welcome everybody. We want to talk about financial services based on blockchain. This primarily includes the topic around the digital euro, digital assets, and also crypto assets. And I think with this, we would like to start in this entire session, now session 5. We, in some minutes, have a discussion with a couple of experts from the fields. We will present them later on when we are proceeding with the session. But before we are getting started, I would like to very briefly present you some notes as a very small presentation prior to our panel discussion. So first of all, I think it's pretty clear by now that blockchain technology does make sense. So very often people are still asking that blockchain technology is very often not making sense. Primarily, we have the following domains where blockchain technology does make sense. It's the domain around digital securities, digital assets. It's the domain around the digital euro, whether the ECB now uses blockchain technology or not. Blockchain technology makes sense in this domain. We see this very nicely with regard to stablecoins. Then we have decentral protocols like Bitcoin, Ethereum, smart contract platforms, decentralized finance, NFT, and so on. That's a very dynamic and growing area. And then on the horizon, there is a new domain popping up, which is the tokenization of CO2 rights, which is very interesting, basically connecting farmers, for example, in Brazil, who are absorbing CO2 from the air with a machinery company in Germany, right? This is a perfect platform business model which could run on blockchain. And with this, we also have a financial relevance here because, for example, settlement, price discovery and things like this have to be done in such systems as well. The topic around CO2, for example, has not well been discovered yet by the media because it's too new. There are in Europe around 5 or 6 senior startups, if you can call it that way, who are growing very strongly. And I think this topic will also will be very present in the media and with us in the next couple of months. But let's go back to the topic around financial services. I just wanted to outline these, in my mind, 4 domains where you have increasing dynamic going on. We also see that regulation has happened and is happening. For example, speaking now as a person sitting in Germany, we have seen that the government of Germany has set up a couple of very good regulatory measures. For example, the crypto custody rules, which are now in place since 2.5 years. We have the Digital Securities Act coming last year, focusing on debt instruments for now. Then we had the Fund Location Act, which also came last year, focusing on crypto assets and so on. So we see that in Germany, we have very good lawmaking in place. It's also timely, nicely done, because now companies in the financial sector, for example, in Frankfurt, now the dynamic is clearly increasing. But luckily, the laws are already in place, such that companies who want to invest are basically situated in a very nice environment with legal certainty. The same is, by the way, true for Switzerland, of course, for other countries as well. We see also very interesting movements in Luxembourg, now speaking for Europe, and elsewhere. We have presidential order in the US, where the White House is now defining a regulatory agenda for the next coming year. So we see regulation happening everywhere for these domains. It's also, I think, needless to say that at this point of time, we focus on regulation of such asset, allowing rules to be created to allow new asset classes to emerge, like crypto assets, for example. And to be also very honest here, nobody at this point of time speaks of banning these assets, right? We have these topics coming up in the media here and there, but if you really talk to those people who are formulating the laws, who are discussing these with counterpeers in other governments and so on, nobody talks about outright banning these assets. I just want to mention this because very often people in society are confusing regulation and banning. This, of course, is clearly to be separated. So these are the 4 domains. We have regulation on the German level. We also have regulation in other countries. Of course, we also have regulation coming on the European level, namely the MiCA regulation. To be honest, I think the MiCA regulation is primarily good because it has been now written and it will come to us probably by end of next year. That's basically the primary good thing, that this regulation is coming to us in a timely manner, because this then allows companies in the regulated space to see this legal certainty, to then build products within these boundaries and try to create services needed by customers. Yet there are 2-3 very critical points within the MiCA which need to still be discussed. You know, overall, as I said, I think MiCA is a good regime, but there are a couple of things which are going in the very strongly wrong direction. One is the discussion around unhosted wallets. That's my personal opinion. Other people might have different opinions here, of course. And we also had the stablecoin issue that basically MiCA has been drafted as an anti-Facebook law, because at that point of time, Facebook wanted to enter the European market with their stablecoin project. That's why then governments, central banks in Europe said, so yes, you can do this, but please following the following rules. And these rules are then basically put into the MiCA regime. So to some degree, especially the stablecoin rules within the MiCA are created such that they are anti-Facebook rules. This vice versa creates enormous hurdle for stablecoin issuers, such that ultimately right now in 2022, we have a market share of the US dollar in stablecoins of approximately 99%, and the market share of the euro within stablecoins is close to 0. This is extremely bad in my personal opinion, because it is not changing and there is nobody out there who is planning to do euro stable coins. Plus, it's even more bad because it's a very strongly and dynamically growing field. We have 80 billion transaction turnover day by day. This is billions per month. And there is no euro there, there is no Swiss franc there, there is no other currency there except the US. And it also stays like this for the foreseeable future because the regulation is now coming and the rules are made in a way such that therefore issuers, it's just easier to directly go to the US instead of trying to get a footprint in the EU. This is something where Europe will have to struggle with for quite some years. That's in my mind a very, very tough construction error of the MiCA. But besides this and the other topic around unhosted wallet, I think the MiCA regulation is quite good. That's, as I said, that's the 4 domains: regulation on the national level, regulation on the international level. And I think taking this all together, we see that all these domains are developing very nicely. 2-3 more words I would like to mention very clearly in case we are now going back in time. And I think we sometimes should reflect about what we have had in our mind 3 years ago, 5 years ago, 7 years ago. So going back in time for 3 years, 4 years, 5 years, at that point of time, for example, Bitcoin had a price of 1,000 or 2,000 US dollar per Bitcoin. Now we are at 40,000 US dollar plus minus. And at that point of time, we also had the hope that, for example, enterprise blockchain systems would make sense. We had the hope, including myself, that companies like Siemens, Bosch, Daimler, and these guys are also exploring blockchain technology, that they are leveraging enterprise blockchain systems to rethink their business processes, to create new business models, and so on. But now, and that's the interesting point here, now looking back in retrospect, we have to admit that this turned out not to be true. I clearly remember back in 2017, in January 2017, that people from R3 Corda, for example, or Hyperledger, that's names we nearly have forgotten right now, you know, that's the strange thing here. People from these organizations clearly said that within a year, you know, 2017, we will have working prototypes or even version 1 IT softwares, which should then run at scale. Back in 2017, what happened? Nothing. That's the crucial point here. So to be honest, I think it has been one of the big misjudgments to expect enterprise blockchain systems to thrive and to grow, because now after Corona has hit us, I think with the beginning of Corona in March 2020, since this point of time, we didn't hear much from R3 Corda, Hyperledger, and all kinds of industrial solutions who might be interested in operating with blockchain technology. On the other hand side, we had very strong growth in the ecosystem of crypto assets and decentral protocols. For example, within the domain of smart contracts platforms, Ethereum and so on, we saw major developments going away from Ethereum, going towards a world where the smart contract platforms are getting an own industry with market shares being distributed across 10, 15 platforms, right? And this is very interesting. This is something which was not expected, that now we have a very flourishing crypto ecosystem, not talking about Bitcoin, but talking about infrastructure being made through smart contract platforms. That's exactly the functions which was basically created for R3 Corda and Hyperledger, but which did not come true. Now these functions of smart contracts, tokenizations, business processes, and so on are basically being taken over by smart contract platforms from the decentral protocol world. And I do not want to primarily talk about crypto assets here, because the interesting point is that now, for example, speaking for Frankfurt and for Switzerland and other countries, companies are now exploring how to map their financial assets, their digital assets on these public blockchain systems. And this is something, you know, now it feels kind of real that a crazy crypto platform is meeting the traditional format of an debt instrument according to German law. You know, it feels kind of normal, but going back 3, 4, 5 years, this would have been something nobody would have expected, right? That you are letting run traditional formats of the capital market on crazy smart contract platforms made of decentral protocols. That's basically a very interesting observations I had myself last year in autumn. And I was also surprised from this very clear black and white, where is the dynamic happening and where is the dynamic not happening. And the interesting point is, from a regulatory perspective, this is all fine, because of course, smart contract platforms coming from the crypto domain can be regulated, and they are of course regulated. You can create blacklists, whitelists, you can control assets, you can create smart contract solutions where the US dollar is represented on such systems, including anti-money laundering controls and so on and so forth. We just have to accept that these decentral protocols coming from the crypto domains are a very interesting dynamic infrastructure, which is basically lying in our businesses, in our houses, and it just works. We just have to understand that they are also ready to deploy traditional assets like equity formats, debt formats, and so on top of these smart contracts formats, right? So this is interesting, I think, because it unfolded very differently than expected by all of us maybe 3, 4 years ago. And with this, I would also close my very brief keynote speech focusing on the last remark. We have to take crypto assets seriously. I'm not talking about Bitcoin here, but we have to take smart contract platforms seriously. Senior management has to accept that assets will be running on such decentral protocols in the future, especially we here over here in Europe. And I now would include also people from Switzerland with the Swiss franc and people from Britain with the pound and so on. We have to accept right now that these platforms are being used for deploying the US dollar on top of these platforms in terms of stable coins. And we have to be ready for a world where the US dollar stable coins are growing in transaction volume day by day. And from a European perspective, at this point of time, we have exactly nothing to offer against it, because we totally missed the train. This is basically enshrined in the MiCA regime as it's currently being laid out by the entities and the authorities in Brussels, right? Unfortunately, what I just have said is not being seen by the European Central Bank, for example. They write papers about this topic, but there are no clear actions being visible for a potential project of a European stablecoin or a large-scale Swiss stablecoin or a digital pound running as a stablecoin, and so on and so forth. It's exactly the opposite. From a European perspective, we are kind of happy that we have made it such that Facebook left the continent. This somehow made us happy, and in return, we are getting a fully dollarized blockchain ecosystem with a US dollar market share of 99%. With this, I would like to close my brief keynote speech. We will not talk about stable coins entirely. We will also talk about the counterpart like CBDCs and so on in the upcoming discussion round. And with this, I would like to ask everybody here in the room to briefly present herself and himself, giving a little bit of a background about himself, herself, and the company, and maybe also creating like maybe a first statement about the state of blockchain right now. Who wants to get started? Anybody wants to do it on his own will, or should I ask like in a university class?
Well, I'm happy to start if somebody has to do it. So thank you for this great introduction, Philippe. My name is Adrian Tricani. I'm founder and CEO of the company Metaco. We're based in Switzerland and specialized in digital assets infrastructure for banks that are looking to store, trade, and offer essentially digital asset services to their clients. It's about digital asset custody. I'm personally, my background is in software engineering, and I did a PhD in mathematics and finance. Worked in the hedge fund industry for several years, in the banking industry, and then moved into cryptocurrencies almost 10 years ago. So you asked about the state of the market today. Given that we are in this field very deeply today, working with several of the large banks, I would say that the big change over 2021 and 2022 has been the real adoption by banks and large custody infrastructure players globally, both in North America and in Europe and in Asia, to a point where it's no longer about innovation, it's no longer about experimentation, but it's very much about setting up and preparing the infrastructure of tomorrow, for which trillions of dollars worth of assets are expected to move to.
Perfect. That's a very good introduction. Indeed, the company you're working with is also in discussion with quite a number of banks on custody technology, right? Not just in Switzerland, where you're coming from, but also in other countries around the world. Who wants to briefly present himself, herself next? Maybe I can go next. Yes, please.
Well, maybe then.
Sophie, please.
Go ahead, Sophie.
So thanks very much indeed for inviting me to join this panel. It's a great honor to be here. I'm Sophie Blackstad. I'm the CEO of Hive Online. We are the first DeFi for African farmers, and we're using stablecoin and other digital assets to create more efficient economies and access to credit and agricultural inputs for the most excluded people. My background is in building traditional banking systems and payment systems for 8 global banks in 60 countries. And when I was at Citigroup, I had 13 African countries in my portfolio, as well as Russia and Kazakhstan, so quite a lot of interesting places, and really started to understand the challenge that banks face getting to customers who lack financial infrastructure. I've also written a couple of books, including FinTech Revolution, which is about the opportunities and challenges that FinTech presents to the financial system and to developing economies. We do quite a lot of research into the impact of emerging tech on the least developed countries. From my perspective, I think that central bank digital currencies and stablecoins do present a significant opportunity for financial inclusion, especially in countries that lack financial infrastructure. But to Philip's point, there is also risks to currency sovereignty and increasing the digital divide, and particularly dollarization. So that I think is something that we all need to be very conscious of, and as Europeans try to tackle that from a central perspective as well. And Philip also mentioned the problem with enterprise business models, and I think one of the challenges is the tech applies best to distributed business models, which is great for securities and can add some efficiency to enterprise. But ultimately, the key strength is in places where top-down business models don't work, because there's no centralized trust, and that's why it works really great for African farmers, because you're building new economic models without centralized control. But for enterprise, it does represent a change of business model, and that's where they have to reach outside their walled gardens, and that's what I find really interesting is the evolution we're seeing in enterprise, but especially in banking, to start to work more with decentralized structures, even within their own walled gardens. Perfect. Thanks for these words, Sophie. And with this, maybe Vincent, would you like to take over?
Yes. Hi, my name is Vincent Phygital. I'm a senior researcher with ABC Research. We're an applied research institute that tries to help established companies understand blockchain technology on the one hand. On the other hand, we also work with new players and the blockchain community to expand our knowledge about the technology itself. I have a background in financial services and then had a 10-year stint at university in innovation management, focusing on fintechs, and started to get interested in blockchain like 6-7 years ago. And my focus now is, of course, financial services and how you can apply blockchain in that space and what it means for established players. And then maybe building on what Sophie said, it's like what we see is also like banks trying to figure out like this huge decentralized world or wave that's rolling on them. It's like, where's their role in a decentralized world as a intermediary? And I think they think quite hard about that and how they can build business models around a decentralized protocol.
Perfect. Thanks also very much from your side. And then finally, we have Mr. Reichler here. Please also present yourself and your institution.
Yes, thanks, Philip. Thanks for the invitation and the possibility to be part of the group today. My name is Julian Reichler. I'm the Director General of Payments and Settlement Systems at the Deutsche Bundesbank. And this shows all of us from which perspective I'm looking on the crypto asset discussion. The Deutsche Bundesbank is dealing with the issue of blockchain or DLT or crypto assets due to the fact that there are many promises of blockchain and DLT technologies. First, we are currently in a process of digitalization and digitalizing assets. In many European countries, it is now possible to issue securities in purely digital form and potentially also using DLT infrastructures. Philip, you told us before with regard to the developments we are observing. Second, the need for efficient DVP settlement processes is crucial in the financial system. Today, it takes up to 2 days for a financial system to settle a transaction, and which can result in both credit as well as legal risks during that period. And by using a blockchain or DLT technology, this time span can reduce dramatically. And this has also the implication that the credit and legal risks will decrease significantly. And in this regard, we are aware of the market demand to provide solutions like digital or programmable money to facilitate the settlement of digital securities. Third, DLT could help to realize a number of operational improvements beyond the pure aspect of cost efficiency, for instance, by relying on smart contracts. Philip, you already said this, and you already said that at least to our impression that the DLT solutions in the financial markets have strong promises, but at least until now, they have not delivered their huge potential they are promising. And so due to my impression, we are in an early phase, or we are in a starting phase, and due to our impression, we have the risk that all the various projects will lead to some kind of fragmentation. And this is something we have to observe very carefully. And so we are not only an observer as a Bundesbank, but also we are part of the digital Euro project of the Euro system. But maybe we come to this aspect later on, and I can say some words to this then. Thank you very much.
Thanks for this entire introduction, Rob. I think the audience also now gets basically the breadth of the entire background of the people. And with this, I would like to directly start into the discussion talking about the state of adoption. I think Mr. Reichlet just has basically pointed out a couple of aspects here on the current state of adoption. Anybody here who wants to add some aspects here? Maybe Adrien, would you like to add some aspects here, because you're talking to banks and other companies, so you are basically practically doing adoption, so you should know.
I think I have at least a good proxy to what is happening. And, you know, there is the perceived part of the iceberg, which is what is happening in the retail. And, you know, Bitcoin was formally invented 12 or 13 years ago in 2008, 2009. And it started growing exponentially quite rapidly after that. And we started seeing the first retail use cases, some illegal, some legal, in the last decades. And it emerged then as a promising way to, you know, in a way, provide a means of payments in countries or places where it was not necessarily easy to be connected to this means. But Bitcoin was only the sort of first step to a much wider ecosystem. You spoke about DeFi, you spoke about all of these new use cases that we're observing today. But these use cases, although they are today very widely used by the retail and by specialized investors, let's say NFTs or you know, peer-to-peer trading on smart contracts, those are things which a lot of people are using today, but it's still niche in a way because it's either retail or specialized. However, as I mentioned in my introduction, the last 2 years have been surprising in how fast banks are willing to suddenly move when they think that they are late in the game. And I would say until 2020, every bank had some blockchain project in the background, but it was at the bottom of the pile, not much was happening. And there were a lot of excited people within the bank, but not much happening in the end. I would say 2021 and this year, most of the global custodians, the tier 1 banks, now have serious initiatives. Some of them are already live in production. Some of them we know globally are about to get in production. And I would say that once you start having the global custodians on the market, it's only a matter of time until all of the other banks follow, either by having their own setup or by leveraging a sub-custodian, one of their traditional partners on the banking side. So I like to say that there is a trend which is forming currently where banks which used to be doing everything, from storing the wealth, from transferring it, from lending, borrowing, trading, etc., will start to externalize by the law of markets. They will start to externalize part of these services to DeFi, probably regulated decentralized finance, but they will keep the core of the trust, if I dare say, which is the management of the keys, the custody, and the compliance. And we start seeing the first layers of this being settled currently with these large custodians establishing their positioning on the market. Now, beyond this, and I'm sure my colleagues here today will elaborate even much further, but beyond the regulated environments, you see this whole industry of gaming firms or all of these non-regulated firms that have completely different use cases with blockchain technology, which may resemble payments or some things that we see in the regulated financial sector, but at least for now are not, and potentially may grow at a different order of magnitude even than what is happening currently in the regulated sphere.
Yeah, excellent point. Maybe Sophie, would you like to add something here now? Maybe we talked about this previously, for example, also including the narrative of Bitcoin in Africa, because you had some very special experiences there, just complementing our talks here about European observations.
Yeah, thanks very much indeed. And yeah, building on all those absolutely valid observations, I think in terms of the state of adoption generally, we are seeing a shift from crypto speculation purely as an asset class to more use cases and more practical use cases. A lot of those being outside of the formal banking system, absolutely. But the interesting thing I'm seeing in Africa, particularly with crypto speculation, is that, and not just in Africa, but in developing economies in general and unstable economies, is that it is increasingly being used as a more stable asset class and an investment vehicle. I mean, for example, El Salvador obviously has legitimized Bitcoin as currency, which I personally think is a little bit of a red herring, but I think this is symptomatic of the fact that crypto is being seen as an asset class that can be a more stable alternative to a very unstable currency. What we've seen in Nigeria, I mean, you mentioned, Philip, that people aren't actually banning crypto, but in Nigeria they have basically made it illegal for any bank to fund crypto trading, which means that people are effectively not supposed to be using their funds to buy crypto. But what we've actually seen is a huge uptick in investment in crypto as a result of that. And in the case of Nigeria, they are obviously trying to shore up the naira, which has faced some significant stability challenges in recent years and still is. But in fact, this legislation is having the opposite effect, because effectively it's very difficult to regulate something that is outside of the regulated sphere, as Adrian said. And I think the real difference with blockchain technologies is that, unlike SWIFT, which you need to be a licensed institution to connect to SWIFT, anyone can build on a blockchain, and that means that anyone does. And what that means is that we do have potential, and I'm seeing quite a lot of cases, especially in Africa, for people with often very good intentions building what are effectively financial products on top of blockchain without really understanding the risks, without really understanding the exposure to vulnerable customers that they are creating. And I think that is something that regulators really need to be very aware of, not just in developing economies, but also in more developed economies. Because decentralization is happening, DeFi is happening. At the moment, it's relatively small. It belongs to a fairly privileged class of people who understand the technology and don't mind the fact that it's very difficult to use at the moment. But as it gets more mainstream, I think that there is a big risk of exposing more vulnerable people to unregulated financial services, which may be built in the best intentions or may not be built with the best intentions, but either way it's very difficult to regulate something that is effectively a global accessible financial infrastructure with very few controls. Having said that, I think we're also seeing some really interesting use cases in developing economies and elsewhere, which are outside of the financial sector. So for example, identity, traceability of produce, and yeah, I mean, financial inclusion being a big part of it, but also looking at the other types of assets that we can digitize on the blockchain to make it more efficient. I mean, I deal with agricultural economies, and we are digitizing fertilizer and seeds and trees. And this is actually it's giving us the opportunity to take money out of the equation as a unit of account. And in countries with unstable currencies, that gives you a lot of opportunities for efficiencies in small business markets, and especially in agricultural markets. So really exciting.
Yeah, that was a very broad variety of answers now. Maybe Vincent, would you like to add something on the question around status of adoption? Would you like to add something here?
A lot has been said. In the past 2 to 3 years, a lot of pieces fell into place. Like we now have, at least for Europe, like a regulatory roadmap, or the laws are already there. We have the service providers that a bank needs, like custodian solutions, and we got the use cases where blockchain actually makes sense. And what we see there is like more and more retail adoption, and also retail adoption not only from the tech-savvy crowd or like the young techies, but from a more general population. Just last week I talked with a big Austrian museum who tokenized one of their masterpieces, and they said they had tremendous problems in customer support because they had like 80-year-old people wanting to buy some, but of course no clue about the technology, so they had to help them. So I think it's getting broader and broader.
Mr. Reichler, would you like to also add a comment, or should I at this point of time try to summarize all these various viewpoints?
No, I only have 1 or 2 additional remarks to this. First is all what have been said showed to me that it's important to have a regulation with regard to this, and to have a proper regulation for all participants. And with this regard, I'm more or less happy with what we do have in Europe, and especially in Germany. And the second is one comment to what Sophie said, that crypto is a good opportunity to take money out of the economy. As a central banker, I'm a bit alarmed with this regard. I would say that the first best solution would be to provide stable money to the economy, but this is more a step beside what we have to discuss today. Thank you.
Exactly, but I think you're right. But if I may say this, but then also the central banks must provide a stable asset, right? You know, this goes to the ECB, who is not present here, but you know, then please do it, right? Please do it. Then we don't need any other workaround assets, so to say. But not just joking. But let me quickly summarize what we just have said. You know, I think it's very important to basically reconcile all these various opinions, because what some of you guys have said is that in case you look at the website of existing large-scale banks, you don't see yet a very large-scale adoption, right? If you look at the project of smaller banks, then you do see some first products which are arising. So there is some adoption taking place. In case you look outside the traditional European capital market, that was Sophie's perspective from other countries, right? Or the NFT perspective from Adrienne to other segments of the population, then actually there is a lot of adoption, right? So therefore, is there adoption, yes or no? I think it cannot be very clearly be answered. It really relies on the perspective. Are you talking about large-scale banks? Are you talking about younger people, 30 minus, which are not represented in this call right now, but they are right now minting crazy NFTs somewhere for whatever reason, right? So they are doing this day by day. And then, of course, there are also people in, let's call it low institutionalized countries, Africa, Latin America, and elsewhere, where crypto assets might provide a very interesting backup infrastructure in the absence of state-formed institutions, so to say. I think that this question is much multifaceted, therefore it's not easy to provide a very clear answer. I would like to also talk now a little bit about the digital euro, for example, providing a little bit of clarity of what's happening in the central bank world here with regard to the ECB, and also basically the other world here coming from private issuers in the domain of central bank. Maybe Mr. Reichler, would you like to provide a very quick statement about on the status of the ECB? I guess you cannot clearly voice your opinion on this, but probably you can still produce a status of where we are right now and the upcoming roadmap.
Yes, thank you, Philip. Yes, indeed, the Euro system is within the project with regard to the digital euro, and we are not the only one. The discussion about digital central bank money is with more or less over the whole world. And we do have a strong discussion in the community between the different central banks, and so we do have one kind difference between two kinds of digital currency. One is a retail CBDC, and the other one is a wholesale CBDC. The retail CBDC is for the general public. The wholesale CBDC is more or less for a limited circle of participants, basically banks. And what we are discussing within Europe at the moment, or within the Euro area in the moment, is the retail CBDC variant for the general public. We are within a 2 years investigation phase. And at the moment, we are discussing different potential design questions, as well as the economic implications of a digital euro. And what is clear to me is that the digital euro has to be and will be a modern, safe, and pan-European payment instrument in addition to the existing payment instruments we do have. That means in addition to cash, as well as in addition to commercial bank money, which is used today for payments. And if Philip, you already said it, if and how blockchain functionalities will be integrated into a digital euro is not yet decided, nor has the euro system taken a decision if it will issue a digital euro at all. And so we are in the midst of the discussion. And what is clear to me is that a retail CBDC would offer a variety of benefits. It transfers the possibility of the people to pay with central bank money in the digital area. The people do not have to belong only to cash, but they would have the opportunity to use a digital variant, a digital euro. But when it comes to DLT or blockchain in financial services, then a wholesale CBDC would be the more promising and less risky tool than the retail variant. Promising with regard to the settlement, for example, in securities trading, it can be accelerated, and so it can be very much cheaper than today. At the same time, due to the lower time, the settlement risks will be reduced. I already said before, and less risky wholesale CBDC issues. Dealing with professionals, not with the general public, and there are, with this regard, one can accept that all people using the digital euro are highly skilled and do have operational excellence and security. This could be an issue with regard to innovative technology. And the degree innovative technology would be used, and so this could be an advantage for this. And together with our partners in the Eurosystem, we discuss if and how the Eurosystem should provide settlement and central bank money compatible with DLT applications. And the possibility or the possible solution in our focus are either a fully fledged wholesale CBDC based on DLT or a so-called trigger solution. And this is something which would enable us to link tokenized assets or the transactions in tokenized assets with the existing payment systems. And this could be some kind of a bridge technology. And so we do not need for this a fully fledged digital or tokenized digital euro, but we will provide a bridge to our existing target services. And this could be seen as some kind of interim solution. And so these are the discussions we are within at the moment. And I think or the next steps are decisions by the governing councils in the autumn. And I already said we are within the 2 years interim or period, and this will end in the summer next year. And so then I think we will see whether the governing council will decide whether we will issue a digital euro or not. Okay, thank you.
Yeah, perfect. Anybody here in the round who wants to add a couple of aspects here, maybe also with regard to potentially other solutions like stable coins coming from the private sector?
So I had a question actually about to Mr. Reichler regarding the DLT that you mentioned, DLT approach that you're mentioning. When you speak about DLT, do you mean having your own infrastructure, your own DLT, potentially permission or private, specialized for some form of a CBDC? Or do you go as far as to suggest that the central bank may, at some point, either for the wholesale or for the retail, decide to issue tokens on public ledgers, a bit like a stablecoin today issued by a private company, but it would be here by a central bank?
Thanks, Adrian, for your question. Unfortunately, I cannot answer it because there are no decisions on this at the moment. We are in a phase of discussing this, in a phase of different prototyping and experiences on this, and so we have to see, and at the end I think we have to wait to this.
Thank you, John. And the reason of my question is that we already see today that it's much less about which protocol you're using. Most stablecoin issuers, they already issue on multiple protocols at once. They go on Ethereum, but they also go on a layer 2 protocol like Polygon, and potentially they go also on Solana. And so it's, in the end, a stablecoin is very much about trusting the issuer that there is some form of collateral or value. But where you issue it is more a question of technology. How much do you trust the capability of the technology to withstand attacks and essentially guarantee the proper accounting? So I feel that, and it's just my opinion, but I feel that once central banks in general start getting interest and getting concrete about issuing stable coins or CBDC, they may realize that there are different use cases which require different blockchain. Maybe the main use case of cash today being some form of privacy, some form of offline transactions, highly scalable, would probably not be completely compatible with public blockchains. So for this, there may be a dedicated infrastructure which is highly performant and provided directly by the central bank. But in combination to this, the central bank may very well decide that they would also issue some additional tokens on Ethereum, Polygon, or whatever performant blockchain out there. So yeah, therefore my question. I was interested about this. Thank you, Julian.
No, it's a very interesting question, Adrian. If I may add one point here, it would be very progressive if a central bank would do this right now, of course. But I think it's a very valid question whether it would make sense. And I think there are two very interesting benefits here, because the infrastructure is already there. Developing this type of smart contract would not require years. And then very interesting, I think, is that the key question is, why would it make sense? It would make sense because on blockchain systems, as we know them today, you have multiple assets on one and the same platform, such that you can do trading across these assets. For example, purchasing a stock with euro, you can make this trading done by smart contract, such that you do not need to have clearing houses anymore. You are using the function of the smart contract to get rid of clearing houses, including the risks clearing houses involved, and so on and so forth. And I think this is the key point why a digital euro in this form, as you have just proposed, Adrian, would indeed make sense, at least to think about it. And another way would be that you can transport this type of euro across, or Swiss franc across the entire globe, from Europe to Japan to Argentina, wherever you want. This sounds good, but it also has disadvantages, because then you have to identify people across the entire globe. And I think that's not easy for institutions to do this, or to basically be forced to do this, to diligencing many people where money then can flow. But I think it's a very interesting model to think about this, indeed, especially because delivery versus payment would be done without clearing houses, simply done by smart contracts doing this. That's I think that the key point, which is sometimes forgotten. Any more remarks by maybe Sophie and Vincent?
Yeah, if I could just add, I think one of the key challenges that blockchain faces today in general, and stablecoins in particular, is interoperability. I think that the industry as a whole is getting to the state where interoperability is less of an issue. I mean, I'm personally not an Ethereum fan, because of the fundamental proof of work that's underlying it, and also because of the fact that the language that it uses is not particularly stable. However, one of the great benefits that it's brought to the industry is this concept of having multiple assets and multiple instruments that can be traded between blockchains more and more. So even though right now I think we're not quite there, I think in the next 3 years, we will get much more interoperability, which will make stablecoins a much more practical international instrument for multiple use cases in multiple areas. And something I'm seeing in CBDCs in general is that, you know, as you said, Philip, many different countries are choosing many different approaches, and you know that's not going to go away. We're never going to see a single agreed protocol for every country. But once we achieve interoperability, they're going to become much more useful as assets.
Yeah, interesting remark. We are now having a couple of questions left. One question would be, where would you think that blockchain assets, you know, regardless what, could be used in the future primarily? Because when you roll back a couple of years, you know, a couple of years ago, we said that industrial use cases are prone to come on the short term. You know, IoT use cases and so on are prone to come. And I personally think that they will come, but companies like Siemens, Daimler, Bosch, and so on, with Corona and home office and now Ukraine crisis and so on, they also had other priorities, which is understandable. So therefore, these things might take a little bit more time, supply chain stuff, logistics stuff, and so on. But there are also other ways where we now see that very interesting use cases are emerging. Where do you think blockchain assets, blockchain technology might best be suited in the future? As I said, a couple of years roll back, we said it's industrial use cases, it's settlement of securities within the financial sector and so on. And we now see that the reality turns out that the dynamics is going a little bit elsewhere. Yeah, where are use cases primarily in the years to come? Anybody wants to get started?
Well, maybe if I could start again.
Well, I think one.
Sorry.
Just one interesting use case or what trend that we're probably going to see is a closer integration of the cash flag and production systems. And I think blockchain can help a lot there. If you have a supply chain, which is basically a system to record information, and you can integrate that with the payment side of this goods flow, I think we will see a lot more in the coming years.
Yeah, I agree. Sophie?
Yeah, I completely agree with that. I mean, we're already seeing more and more demand for digitizing assets, commodities, you know, carbon, as you mentioned before, and the ability to trade those assets on an open blockchain, I think is going to be a big use case for it. You know, there are already quite a few blockchain use cases which are doing traceability in supply chains, and particularly for ESG reasons. They haven't really taken off yet, largely because consumers are not yet that aware and not that interested. But I'm beginning to see, particularly with the new ESG regulation in the EU, that there is more and more pressure on organizations and particularly commodity trading organizations to include that in their supply chain. So I think that's going to be a big case. The other area I think is going to get more and more interesting and more important is identity. And we haven't really talked about this, but there are already some very interesting use cases where blockchain is being used to help people build identity. We do that in a small way, but it's increasingly being used particularly for people who don't have access to traditional types of digital identity, to get on the formalization ladder, which gives them access to financial services and all sorts of other things. So I think that's really, really interesting. But from my personal perspective, it's the commodity trading and digitizing the barter economy, which is, I think, the really interesting use case. And to Mr. Reicher's point, we are going to have to find a way that works with formalizing the financial aspects and making sure that the central bank doesn't lose out and doesn't lose sight of it. But in countries where the central bank has no reach into those spheres already, I think it's actually a good bridge for formalization rather than an alternative to formalization.
Yeah, interesting point. Well,
so I think that DeFi has shown that many of the services provided by the banking industry can be replicated or at least simulated or emulated in a decentralized and peer-to-peer fashion. One which is still largely missing, there are initiatives, but they are not working at scale, is uncollateralized lending. it is still very hard to borrow assets on a blockchain without having over-collateralization by a factor of 2 or 3. And I think this is still a place where banks are much better. They take more risks in a way. With digital identities and therefore e-reputation on the blockchain, we should expect that such systems become more accessible. And there starts to be a market on the blockchain where you can borrow, but not potentially without a collateral, and potentially against future cash flows, which may depend on, I don't know, your future salary or such contingent. And I think this may be a little revolution in terms of getting even more liquidity, better yields, better rates, etc. The other segment, I would argue, is one that I already mentioned, which is NFTs, but NFTs apply to intellectual property much more widely than what we see today. In the end, today we think about pictures of monkeys and cats when you think about NFTs, but the reality is that it can apply to anything that somebody produces, whether it's music, whether it's paintings, art, or whether it's videos. And today, a lot of this is externalized to large companies, which take a big part of the cake. And the technology of NFTs, coupled properly with regulations, actually can remove some of the intermediaries or make them less relevant and bring back a big part of the value to the creator itself. So I think this is going to be a big shift also.
Yeah, let me try to reconcile these views. We had quite a number of use cases where I think we do see some dynamic in the future. We had the CO2 topic from Sophie and also from myself. We had previously speak about gaming. We had the NFT topic. To be very honest, I would not see that NFT stuff is art at its best, right? It's not art. But what is it then? It's, in my mind, it's digital status symbols for the young generation, right? When I was young, I had a Levis jeans and maybe a watch, things like this. And the young generation, they do not care about such materialistic things. They might prefer an image of an ape, right? It sounds kind of crazy, but viewing NFTs as digital status symbols for the young generation makes very much sense in my mind. And if you view it from this perspective, it's an endless market, right? But it's not art, or mostly not art. Then we didn't talk about tokenization of securities, but I think it's also a trend which is there, putting debt instruments, equity instruments, like one after the other on blockchain systems. We see this in Switzerland, in Germany, and elsewhere. It's a tedious process, but it works, I think, also well. We talked about identity and DeFi and so on and so forth. Overall, I think those use cases where individuals are involved, you talked about the creator economy, they are more easy to put at scale, because always when large-scale organizations are there, banks, industrial corporations, and so on, then the process of adoption apparently slows down a little bit. So I think we have to always distinct between use cases involving individuals, peer-to-peer, and large-scale infrastructure holding companies. Then it might take a little bit longer. To then recap this session, what did we talk about? Just that you don't, and that we don't forget it. We talked about the status of adoption, that it's not a clear yes and no. It depends on the perspective, and it's an international perspective. Other countries are there, where the answer might be entirely different than for German corporations, for example. We talked about smart contract platforms like Ethereum and the others. We talked about the central bank digital currencies and their private counterparts, stablecoins. We talked about what blockchain systems might be used for in the future, and we also talked about failed expectations from the past. I think it's always important to reflect on failed expectations because then we can learn from it, where the future will guide us in this very, very, very exciting and dynamic area. Thanks for everybody being here. And then with this, I would like to give the microphone back to the organizers. Thank you very much.
Thank you, Philip. Thank you all.
Thank you.
Hello, everybody. Welcome to the session of the European Payments Conference on CBDCs. Today, we will talk about the adoption and acceptance challenge. And before starting the conversation with Dr. Surameki, Kimo, with Dr. Winter, Heike, and with Dr. Herborg, Raul, I will leave the floor to Mr. Balz from the Bundesbank to introduce the topic with his keynote speech. Thank you very much.
Well, thank you very much to the moderator, ladies and gentlemen, and of course also distinguished panelists. Thank you for your warm welcome, and thank you for giving me the opportunity to deliver the keynote speech for the panel on central bank digital currencies at this year's European Payments Conference. I can remember quite vividly that last year's European Payments Conference. It was a time of positive outlooks. Almost 1 year later, at this year's conference, I'm again speaking to you in a virtual digital format. At the same time, with the ongoing Russian war on Ukraine, the geopolitical as well as economic prospects have radically changed and worsened compared to last year. We have come together today, however, to discuss European trends in payments with regard to CBDC and the digital euro in particular. At least in this field, we see some rather positive prospects. A potential digital euro would offer a huge array of opportunities. And whilst it also comes with considerable challenges for central banks as well as the financial industry, there are promising avenues which could be pursued in order to mitigate the associated risks. In my speech, I will shed some light on the challenges ahead and lay the groundwork for the subsequent panel discussion. Central banks worldwide are evaluating the opportunities and challenges associated with the introduction of a central bank digital currency. The status of initiatives on CBDC varies. However, few countries have already launched a CBDC, with the Nigerian e-Naira as the latest example. Other central banks are on the pilot stage and preparing a possible full launch. The Chinese e-currency, e-yuan, certainly is the most prominent example here. With the aim of strengthening the position of the Chinese renminbi in a digital future, as well as making electronic payments more resilient, China most recently carried out field tests during the Olympic Winter Games in Beijing. By the end of 2021, 140 million respective digital wallets had already been issued, according to our colleagues from People's Bank of China. Also, it remains unclear how many of these are used regularly. By integrating the e-yuan as a payment option into WeChat, the dominating digital payment service in China, adoption is likely to rise, however. Another motive for considering CBDC is possible efficiency gains in cross-border payments. The Project Dunbar, a partnership between Australia, South Africa, Singapore, Malaysia, and the BIS Innovation Hub, aims to explore the challenges and benefits of a common settlement platform for cross-border payments between multiple central banks using the digital currencies. And similarly, the MCBDC Bridge project aims to improve cross-border payments by looking into the potential of common interoperable platforms for multiple CBDCs. Project partners from Hong Kong, Thailand, China, the United Arab Emirates, and again, the BIS Innovation Hub have already successfully set up a respective prototype platform. And to give you one last example, the United States is less advanced in its considerations, but seems to be picking up speed. In March, President Biden signed an executive order to assess the risks and benefits of creating a CBDC, as well as other digital asset-related topics. So let us take a closer look at the potential challenges and opportunities of a central bank digital currency. CBDC would be a third form of central bank money alongside cash and bank reserves. If well designed, CBDCs could combine the proved efficiency provided by modern digital processes and payments with the safety provided by a central bank in a single means of payment. Consequently, we see various possible benefits of CBDC if well designed. CBDC could offer access to a safe, instant, and efficient digital means of payment for all population groups, including less digitally savvy groups of society. And it would also be beneficial if CBDC could support offline payments. Then people would benefit from a digital and cost-effective cash alternative to choose from. And CBDC could facilitate the emergence of a new digital ecosystem with a full pan-European reach and the availability of new services, resulting in possible productivity gains, for instance, by providing digital money that could be used in programmable environments. Or more precisely, the CBDC could be suitable for completely new use cases in the Internet of Things. Depending on the design of a CBDC, private actors could offer completely automated payments based on smart contracts. For example, electric car charging could be paid for immediately and without further intervention by the driver. And this calls for new forms of collaboration. Recently, JP Morgan announced a partnership with Siemens, bringing payments and the products closer together. However, if a CBDC were to be made available to the public as a complement to cash, we would have to think the consequences through very carefully. There are various challenges to be addressed, and I will name some of the key aspects. Central banks and supervisors have to address the associated risks to financial stability and monetary policy. One important aspect to consider is the role that banks and other payment service providers play as intermediaries in the financial system. When discussing different design options for a CBDC, the effects of the balance sheets of commercial banks as well as the central banks need our full attention. An outflow of deposits from the banking sector must be avoided, as well as sudden uncontrolled shifts of bank deposits to central banks' balance sheets. Possible countermeasures could be, for example, maximum amounts or graduate interest rates, which could also result in negative interest rates above a certain level. But it should also be taken into account that acceptance of a CBDC could suffer if parameters were set without keeping an eye on the user experience. A CBDC expecting to gain widespread adoption has to be sufficiently scalable and secure. Cybersecurity risks are one key aspect in this context. In order to ensure broad acceptance, we will have to make a CBDC accessible to all groups of society without barriers, but in a secure way. In this respect, central banks face a balancing act between two opposite key risks. First, being too ambitious could lead to a crowding out of private payment solutions and a potential disintermediation of the banking sector. And second, creating an unattractive product would result in non-acceptance by consumers and enterprises. Therefore, central banks aim to strike the balance. The level of adoption of a CBDC should be neither be too high nor too low. An acceptance and adoption challenge. And lastly, the effective prevention of money laundering and terrorist financing is on our list to challenges ahead. In the Digital Euro project, the Euro system is moving forward swiftly, but thoroughly to address these challenges. In July 2021, the ECB Governing Council decided to set up a formal project on a digital euro. In the Euro system, project generally start with an investigation phase. Experts from the ECB and the national central banks have been working together since October 2021 in an investigation phase that will last 24 months. At this stage, the focus lies on aspects such as possible use cases involving consumers, businesses, as well as potentially the government and machines. Functionalities and design choices, also technical infrastructures. Here, earlier technical experience already have demonstrated that from a technical perspective, there would be no hurdles both for account-based and token-based systems, but also in the dependencies with the market and the business options for those intermediaries. And then also, in addition, the legal basis for possible introduction is to be determined. Moreover, the project elaborates on ways to ensure high standards of cybersecurity and operational resilience. Better safe than sorry. And coming back to the adoption and acceptance challenge mentioned earlier, we seek not too much, but also not too little adoption. Market acceptance is key to achieving our objectives and can only be achieved if a digital euro serves the needs of the users. Therefore, the euro system is interacting with all the relevant stakeholders. These include, of course, banks and other payment service providers, as well as consumers, merchants, other enterprises, and authorities. We will pay particular attention to ensuring access to a digital euro for all citizens. Smart wallet is one option. However, we will also consider other means of access, since the euro should also be usable for less digital savvy groups of the population. Even if it is certain that a digital euro would not replace euro banknotes and coins, but only supplement them. And of course, when discussing future payments, we also must take into account the needs of the industry. Here's the keyword Industry 4.0, as well as the financial market, for example, with regard to the so-called token economy. Cooperation with the private sector will be key to ensuring acceptance and wide use. To achieve this, we are also working to make it available within private payment solutions. In my opinion, relying on the private sector and its strong position and broad experience concerning the customer interface makes sense here. For instance, the Eurosystem has set up a market advisory group. This group of professionals from the retail payments market provides advice on the possible design and distribution of a digital euro. The digital euro is also a priority topic for the exchange between central banks and the market within the Euro Retail Payments Board. And at the national level, we have set up a regular exchange, for example, within the framework of our payments forum, which consists of representatives from both the supplier side and the demand side of the payments market. Also worth mentioning is the market research with the help of focus groups, which aims to gain a better understanding of the user perspective. The findings of these focus groups have recently been published, giving additional insights into the payment needs of users of a potential digital euro. Most importantly, participants preferred payment methods with a pan-European reach, high convenience, and a universal acceptance in physical shops and online. In addition, and confirming the findings from the public consultation, privacy protection is of high importance. In this respect, we see the digital euro as an opportunity to maintain trust in payments in the digital era. And in light of the increasing monetization of payment transaction data by private corporations, people expect payments with high privacy standards. Especially here in Germany, responses in a public consultation on a digital euro had showed that individuals pay particular attention to this aspect. Therefore, a digital euro would have to offer the highest privacy and data security standards possible, while still complying with the necessary regulation regarding anti-money laundering and the financing of terrorism. In addition, the supportive announcement made by the European Council of Finance Ministers late February this year has once again highlighted how much a digital euro project is also seen as a political project. Meanwhile, the European Commission just recently carried out a targeted consultation based on which a legislative proposal is to be submitted by the beginning of the next year, 2023. So what is next for the Eurosystem Digital Euro project? We will proceed investigating in order to be able to take a decision on a realization phase at the end of 2023. This realization phase could take 3 years and would include the development and testing of technical solutions and business arrangements necessary for actually issuing a digital euro. Let me conclude. To make the digital euro a success and to win the aforementioned acceptance and adoption challenge, the user needs are key. If we want the digital euro to be broadly used and accepted, it will have to be convenient, available for all relevant use cases, as well as safe and efficient. Let me emphasize once more that the private sector should play an important role here. And finally, the European dimension is key. In order to be successful, the introduction of a digital euro needs to be a common European project, supported by the European public as well as the legislators. With the Digital Euro project, we as central banks want to do our part to move forward at the European level and to bring one of the main symbols of our united Europe, the euro, as our common currency into a digital future. Since I served as a member of the European Parliament for almost 10 years, I know that collaborating and trying to find solutions in a European context is no walk in the park. But recent developments have clearly illustrated that our future can only lie in a strong, integrated, and aligned Europe. And as Robert Schuman already said in 1950, and I quote him here, Europe will not be made all at once or according to a single plan. It will be built through concrete achievements. Also, a great deal has been accomplished in the past 70 years. European integration should continue with further concrete achievements, and the digital euro would be such an achievement. Thank you very much.
Thank you very much, Mr. Batz, for this fascinating and encompassing speech. So we will now move forward with the discussion. Thank you very much. Have a nice day. We will move forward with the discussion with Kimo, Heike, and Raul. I will first very briefly introduce each of them and then ask them what their vision of the adoption and acceptance challenge is. So first of all, Kimo, Dr. Kimo Sarameki, you are the CEO of FNA and a world-class expert in network theory. FNA is a firm that was born after the 2008 crisis to help the financial sector better understand its hidden interconnectedness. Regarding CBDCs, you developed simulation software to assess the impact of CBDCs on the financial sector, with the possibility of changing a lot of different parameters. So a very useful simulation tool. And your clients were, among others, the New York's Fed, the Bank of England, the ECB, the Norges Bank. You have a PhD in operation research from Aalto University in Finland, and you are based in London. Heike, Dr. Heike Winter. So you are a Bundesbank specialist of retail payment policies and systems. You have a PhD in economics from the University of Marburg in Germany, and you are based in Frankfurt. And last but not least, Raul, Dr. Raul Thomas Herbock, you're a serial entrepreneur. As I could see that you were among the first to build an internet payment platform at the beginning of the 2000s. Now you are a managing director at GND, a CBDC division. And in parallel, you also have another firm called Virtual Solution AG, dedicated to enhancing security of mobile applications. And regarding CBDCs, your department at GND developed GND Filia, which is a CBDC solution. Maybe we had the opportunity to discuss this more deeper during the discussion. You have a PhD in business operations from Zengalen in Switzerland, and you are based in Milan. So I hope I did not miss the main points for this presentation. So I will start with you, Heike, if you want to, by asking you the question I mentioned earlier. So what is your vision of the adoption and acceptance challenge that mentioned Mr. Bass during his speech? So just to sum it up very briefly again, the adoption and acceptance challenge is the fact that we need to design a European CBDC solution that is neither too popular nor too unpopular, whose adoption is not too high, but not too low at the same time. So we have to strike the right balance. So how can we do that?
Yes, thank you very much, Victor or Mr. Bam. It's a challenge, and let's say the trade-off between those things is a little bit that we have on the one hand, it should not lead to a decrease of deposits within commercial banks. That would happen when it be too popular. That would disrupt our whole financial system. So this is not what we intend to. And on the other hand, yes, it shouldn't be a niche product, and it should be used widely in the retail payment sphere. And even then, it should not crowd out all the other private solutions that are already on the market. But yes, yes. Let's say, put it like that way, that the digital euro should be a basis, let's say a little bit more the rails on which European rails, I have to understand, to underline, on which private actors can build up their solutions, which should be innovative and customized and yes, successful in the market.
Okay, so definitely a difficult balance to find, if I understand well. So
yes,
maybe Raul can tell us more about his vision of the issue here.
Yeah, well, I mean, our vision of CBDC is very much aligned with what Mr. Balz explained in his presentation. So our vision of CBDC is really to have something that is pretty similar to cash, that provides all the benefits to the people that cash provides as of today. So foremost, universal usage. You can use it in all sorts of payment scenarios. You don't need a bank account. You don't need a contract with any entity. You can pay without disclosing any personal data, but with the additional benefit that it works digital. So that is our vision. Regarding the adoption and acceptance challenge, I don't want to repeat what Mr. Balz said, but also from our perspective, it's pretty much three main challenges we are seeing. First and foremost challenge is really the user. You have to take the user into account, and you have to make sure you build a solution that really caters for all payment scenarios people have. So it's person-to-person payments, payments in a retail shop, payments in an online shop. You might want to be able to do offline payments when you're in a village with unstable internet connection. So all these scenarios for informed people that are able to utilize the latest digital tools, but also for those that are lost less into all the digital tools that they are able to utilize CBDC. So put the people really at the center and make sure you deliver something that provides real benefit to the people. The second topic, from our perspective, to make it a success and to make adoption successful is really that you provide something that is interoperable, that can be utilized by all other market players to build innovative solutions on top. Mr. Balz mentioned, for example, this payment for electric vehicles, but there are many, many scenarios, and the entire industry has lots of creativity to come up with their new innovative business models on top of a digital euro. And what would make here the difference in comparison to existing payment instruments? It would be a payment offering without this critical mass problem. So it would be from day one, it might get legal tender or not, but it's a solution that really even small companies could innovate and provide great solutions on top of it if it's done right. So this interoperability and the foundation for innovation is a big topic. And last but not least, you need an adoption strategy. So you need to come up with a strategy how to roll it out to the people. And of course, you have to move wisely. You don't want it to be too successful, but on the other hand, if you do it and people don't use it, it also makes no sense. One approach might be, of course, the merchants. The merchants might be a really strong lever to kind of motivate people to actually utilize it. So these are kind of the aspects we see crucial in order to get a CBDC in production, which are well aligned with topics that have already been raised.
Thank you very much. Very interesting first intervention. So a key point that I retain is that you put also the emphasis on new use cases, and we will come back on this. So Internet of Things, machines to machines, and also the importance of the adoption strategy, which was actually the first question that I want to ask to Kimo. So I think this is now the right moment to ask the question to Kimo. So according to you, to complete Rao's speech, what should be the rollout of the CBDC solution, and what's your vision of the problem is?
Sure, thanks. Great to be here. So maybe I start with the vision a little bit first, and then come back to the second part. So I built the first payment system simulator 25 years ago, and I've been on the journey of simulating payment systems ever since. So simulations will play heavily in my vision, how we're going to launch a digital euro or any other central bank digital currency. Meanwhile, during the last 25 years, we've accumulated a lot of experience how to simulate other payment systems, large value payment systems, and maybe we come on the large value or wholesale CBDC as well here later. I don't know, maybe we focus mostly on the retail CBDC. I think that's what I'm going to focus first on. So we've accumulated a lot of experience how to simulate this system. So what are the benefits of doing that? Why should we simulate? Like Mr. Baltz, I think, mentioned, that there are a lot of design choices that we can have when we build a CBDC. Are we going to have caps there? Are we going to have interest rates there? Are they going to be negative? Are they going to be positive? What kind of payments are going to first migrate into a CBDC? I think all of these different design choices will have positive and negative consequences on adoption or on financial stability, like Heike mentioned, that maybe there will be a large outflow of bank balances, but those maybe will only take place in certain design choices for the CBDC. So it will allow us to bring the conversation from a more qualitative level to a quantitative level. So will this impact be large, or will it be containable from the different design choices that we might choose for our CBDC? I think a very important point is also that it allows us to think through all the complexities of the problem systematically, because we have to program it, and we have to make all these rules and all these choices in the software, and we cannot just gloss over them like we might be able to do in when we talk about the topic, because let's set that aside. We can't do that when we build the simulation model. We need to think those things through, and then the software will run, and will show us what are the implications of this. From experience, like from other systems, that very small changes in the system design can have very large consequences on the system's performance. And I always say that very small changes how the wallet software is programmed will have very large macroeconomic, kind of has the potential of having a very large macroeconomic and geopolitical consequences, sort of this like butterfly effect from when you have these sort of a complex adaptive systems that payment systems and the CBDC will eventually be.
Thank you. Thank you. Very, very interesting. So maybe you can tell us more about this, the results of these simulations, and what would be relevant in this context, in the context of, for instance, of the rollout. Did you understand that there was a better way for the financial system not to be destabilized by CBDC if you first start with certain use case? I don't exactly know how you designed this simulation tool, but maybe you can tell us more about what you found.
So we published a paper in November last year, but the question we addressed there was more the question of is it possible to set up a CBDC without disintermediating the bank balance sheet? So is it possible that we can have a meaningful CBDC as a means of payment, but without it taking a lot of the bank deposits away? And we found, yes, this type of configuration or an end result is possible, but we didn't actually look into like how do we get into that end result. But with conversations with other projects that we are kicking off, I think there are a lot of questions around like which payments should migrate first. The payments is not a monolith. It's not one thing. There are so many different types of payments, and there are new payments like Raul and Mr. Baltz said. So I think it really needs to maybe look at from past experience and experience from El Salvador giving away money, or PayPal giving away money. How you successful were those? Monitoring like the adoption. Thinking about how Facebook did it by starting with a very small use case in Stanford University. I think we need to, in a way, learn from the past a little bit, and then monitor and continuously adapt our strategies as we go along.
Thank you very much. I would like to come back about something you said, Raul, earlier in your speech. Talked about legal tender. So just for the audience, if you don't really know what it is, the legal tender is the idea of sort of forcing the merchants to accept a CBDC because that's the official currency, like the cash is, like banknotes and coins are in the euro area. So what do you think of this solution to create a wide acceptance of the CBDC? Because it would probably not create an adoption, but the acceptance by the merchants. Is it possible, technologically speaking? And would it even be a good idea to do that? Because it could maybe create such a hype around the tool that it could crowd out private payment solutions. So what do you think about the idea of legal tender?
Yeah, well, whether it's technically or legally possible, maybe we should discuss with Mrs. Winter, with Heike. That's for sure a decision to be taken by the ECB. But I'm convinced that you cannot force this on the people, neither the people nor the retail industry. So the digital euro really has to be convincing from its feature set, from the new innovative offerings built on top of it to be successful. A legal tender would not do any harm regarding this, but I'm very sure that just making it legal tender would not guarantee a success. I mean, merchants have all the possibilities to somehow control with which payment tools their clients are using. On the other hand, if you think about the situation of merchants, probably there are two topics they have in mind. They want to make it really, really easy for their clients to pay, and not have the 10th or 12th payment solution, but very, very easy. And the second topic is for sure the transaction fees, or in general, what the costs of any payment offering, and that refers both to cash and to digital payment solutions as of today. And with the current vision, at least, and I mean, we are in talks with many central banks, and as we speak, we're working on 4 pilot projects. And in one African country, we really have overwhelming feedback from the merchants thinking about that this would be a payment solution that would come without any fees. That's the design. Of course, it has not been decided for Europe finally yet, but probably it will go in the same direction. So these are the approaches, really convincing the players to or provide real benefits to use it. But just making it legal tender is a side aspect, I would say.
Thank you very much. So I will ask Heike what's his opinion on this topic of legal tender, and beyond that, how merchants would be prone to accept a CBDC solution.
Maybe just one amendment. Raul said it's up to the ECB to decide that, or to the Euro system, but this is a thing which the legislators have to decide on. It's the European Commission, the European Council, and the European Parliament who have made up their minds on that. And there is already they are already working on it. There is a public consultation. I think Mr. Baltz mentioned that as well, where they collect, the various aspects of the various stakeholders on this aspect. And one thing which is quite clear, the legal tender it sounds like a very powerful instrument, but you have to look closer into that, and then you will find out that in some countries, for example, Germany is one of the countries, and I think Finland as well. I think France is different, but there you can just skip this provision and say by general terms and conditions. You can say if you enter this shop, there is something written at the door. We will accept only, let's say, pearls or whatever. And if entering the shop, you accept these terms of conditions, and then the legal tender doesn't count anymore. So this is very, in many countries, that's the practice. And at the moment, this legal tender expert working group in the Commission is evaluating, and whether they should perhaps make it that as it sounds or something else. And then the question is, there is a case for cash where they have some need to decide on it. And then in this they can also perhaps make the digital euro also as a legal tender. Yes. This is ongoing debate. It's not decided yet. But with emergence, on the one hand, I think they are let's say, quite supportive regarding CBDCs in general, because as you described it, Raul, they think they can have then something which is possible to use in a digital environment without that many fees. That is their hope. And yes, and we have to find out whether this promise can be taken, because this payments market is not that easy as sometimes economists think. It's a two-sided market, and you have both sides to look at, and the one who offer those things and the other ones who accept it. And the two-sidedness is that there are the acceptance side. On the other hand, you have the payer side. As private persons, we sometimes in a P2P situation, we accept, but normally we just pay. And you have to convince them all. And you also have to convince the suppliers, which are which are among others banks, and might be some FinTechs and other providers. And this is a debate that has already started in Europe. But don't forget, it's a political project, the digital euro, and there is a strong will to come up with something which is really European in the payment sphere. And to this whole package, I think the legal tender would be one part of it.
Thank you very much. Yeah, we will not spend a lot of time to talk about the supplier issue, but of course, there is also the fact that the CBDC could also challenge the usual business model of commercial banks with a shift of their deposits from usual current accounts to CBDC accounts. But that may be another issue that we may discuss later. So I would like to move on to use cases and ask this question to you, Heike, about what the Bundesbank and the Eurosystem has learned from the past implementation of CBDCs all around the world, especially where they have been fully implemented, like in the Caribbean or Nigeria, and where they are starting to be implemented, like in China.
Yes, we try to take some lessons out of it, but it's not that easy, because every country or every jurisdiction has its own motivation to come up with a CBDC. And I think that is a little bit different from the Bahamas, where I think there is a problem with those islands and to carry around the cash all the time. And then you have this Nigeria, and in China is, of course, they have those, let's say, two big techs, which are gone too powerful from the perspective of the leading party or from the government. And then there is also the idea with the social credit points. And so this is also a project which differentiates a lot from the European project. So it's difficult to draw the lessons. We really watch that and try to find out on the technical way how they have done it and what is the role of the intermediaries in all those, I think, 4 living projects. And even if you can say China has not yet rolled out everything. So they are in a very, let's say, extended pilot phase, but it's difficult. So we try to get some lessons, but it's you can't transfer them one-to-one.
Okay, thank you very much. So a bit too early, I understand. Nevertheless, when you look at the motivation of the rollout of the sand dollar in the Bahamas, for instance, as you said, the main problem was financial inclusion because of the lack of financial infrastructure in a lot of islands of the archipelago. So that's why I would like to ask this following question to Kimo. Should we target the same use case in the EU? Should we first target financial inclusion of the unbanked or underbanked or offline people to roll out the CBDC in Europe?
Thanks. I think our in the West or in the let's say in the more advanced economies, I think the motivations for the CBDC are quite different. So probably the use cases that should be targeted are quite different as well. If in the emerging markets where we have large populations of unbanked people, and during COVID they couldn't make any payments because like they didn't have electronic payment mechanisms online, and I think that's a big problem that needs to be solved. But that was probably not the problem that we mostly had in Europe, for example. I think in Europe or in the US or elsewhere in more or here in the UK, I think the questions around CBDC are more around sovereignty. Think about Russia and sanctions on the payment system, for example. So sanctions prove that we can be more resilient. Resilience, I think, is another important one. If you look at Ukraine and what the central bank put out on the first days when the war started, it was mostly around payment systems. Let's keep payments running somehow, like use electronic means of payments. So we need to have resilient systems, and I think the CBDC can bring benefits for the resilience as well. And I think the third one is more around like soft power and dollarization. So cryptocurrencies, they spread out all over the world very, very quickly. What happens if a major economy sets up a cryptocurrency or a central bank digital currency that gets adopted in other countries? So I think that's for some cases maybe it's a threat for financial stability. In some cases maybe it's like an opportunity as well. So I think the motivations are not necessarily related to financial inclusion, but from a user perspective, they might be related to privacy. I think that's a need, for example, that is sometimes mentioned, that do we have private means for online payments, for example, that maybe certain use cases, maybe more of the new use cases that we don't have payments today, or the use cases around how governments can be more smart about spending money with some maybe strings attached to it. So I think maybe these are the major use cases that we should be thinking about, the things that we don't have already, because we have everything to make payments for the things that we do already. So we don't have a problem, such a big problem with that. Maybe there are sort of smaller problems, but the majority problem is not around financial inclusion. Thanks.
Thank you. Yes, absolutely right. The Kantar public study that Mr. Balz mentioned earlier clearly states that in the EU, people are mainly satisfied with their means of payments, and merchants too. So that's why I would like to come back to Raul to talk about maybe new use cases. So Raul, maybe you already have some experience about the rollout of CBDCs for new use cases like the Internet of Things, or maybe cross-border payments, or maybe also decentralized finance, which is coming.
Yeah, thank you. I mean, one little comment regarding the general usage. I still think there's just one use or one maybe a simple sample. If the four of us would like to send us money right now, I don't think it's going to be easy, because we have different tools on our smartphones. One might utilize PayPal, the other one might to do a bank transfer. So I think this possibility of having a universal means of payment, really like cash, that you can use in each and every scenario, but digital, that is something where I would see, even for us developed countries, quite some benefit. And of course, financial inclusion is not a topic, but maybe not everybody can afford the latest iPhone to utilize Apple Pay. And if you talk about children that have no bank account also cannot do any digital payments. So there is, of course, it's much smaller, this topic of financial inclusion, but I would also see it there. And I would still also see benefit for all of us once it's there. And maybe a last comment regarding this, you also have to keep in mind, as of today, we have cash, and we really hope that it stays there for a long time, but it stays a competition to all these commercial payment solutions. And if there would be at some distant point of time no more government guaranteed means of payment, like a means of payment that comes without any commercial interest and is just there to provide a service to the population, which the Bundesbank and ECB does as of today with cash, we are not sure what would happen to the commercial payment solutions and privacy and all these topics. So that's one aspect. Regarding innovation and new scenarios, for sure, cross-border payments are a topic. I would not put it on my prio number one. It's for sure one of the unsolved problems, and lots of interesting studies have been going on, and not only studies, but also pilots. But probably you haven't done too many international payments lately. And you need at least 2 countries to have a CBDC to really get it into action. And we're currently more in a mode where we don't do experiments, but we currently collaborate with a few central banks that are actually working on introducing a CBDC. So it's no longer kind of a technical experiment. And the last part of your question, I mean, what sorts of innovative services are there? There are many, and of course, people talk of machine-to-machine payment, people talk of delivery versus payment, but the closest or those that we are discussing in most detail currently are really kind of this topic of special purpose money. So you could think of a carbon wallet where you could do payments only, or you would receive government fundings that you can only use on carbon neutral purchases. We talk in some African countries or less developed countries about some educational money that you can only utilize for the education of your children. So these are the use cases we currently have really more tangible and that are currently closer to really getting real. That would be my summary on this.
That's absolutely fascinating. Carbon wallets to orientate the spending in the right direction. So this has a new question, a further question about how we should design the CBDC. That's why I would like to briefly talk, because we only have 5 minutes left, about technology choices and maybe also public policy driven choices for the CBDC. And I would like to ask a question to Eike first. There is these 2 options right now. Either we go in the direction of tips, if I understand well, and we use the current payment infrastructure to deliver the CBDC solution for the consumers and the merchants. Or we create a brand new infrastructure based on the blockchain. So what do you think should be done? And I think we already have a solution, because that's the less costly one, to roll out the CBDC solution. Should we use the tips?
I think it's not that easy to answer, because we are at the moment really investigating what technical possibilities we have, and this is a quite dynamic environment. The prototyping has just started in the Eurosystem, so they are working out. One advantage of what you call this account-based solution, what could be tips or would be that we can be comparatively fast. On the other hand, with this blockchain driven technologies, some people are quite let's say uncertain whether this is because the technology might be fascinating, but on the other hand, it's not that deeply proved, and should we build everything on that? And the answer is there are also hybrid solutions that are thinkable. And as Mr. Balz also stressed in his speech, was that we as Bundesbank, we see also the need that the digital euro should be also quite innovative, and or should be that is the idea, programmable, or should be integrated into programmable environments and applications. That is what we would like to have. And yes, at the moment the investigation has started. And we don't have given up the hope that there might be something that could go a little bit beyond the just tips solution. What you call the tips solution. We have it's a complicated taxonomy about that. It's a third-party validated solution and so on. But this is our position at the moment. So very at the beginning at the moment.
Okay, so I will ask Kimo if he wants to very briefly to say what he thinks about the possible tokenization of a CBDC solution. So do you agree with Haik's position, or do you have another opinion on the topic?
I think there are maybe two questions there. One is around the wholesale payment systems, and one is around retail payment systems. We'll be mostly speaking about retail CBDC here, so maybe I focus on that. Just to say that, like, I think some of this decentralized finance and the other topics are in the large value payment system space, where the questions are more around liquidity, and like we've done lots of simulations with the challengers like Finality and ArcGIS Global on how to improve that space. I think the existing systems adapt a lot as well there, like there will be APIs to existing RTGS systems coming up. So I think it's very interesting to see sort of how that space evolves. On the wholesale side, I think on the retail side, sort of like cash-like CBDC, I think it needs to be a token, because otherwise the question is more around should central banks provide accounts to everyone in the economy, and that we could have done already in the past. Actually, when I started the Bank of Finland 25 years ago, I had an account with the central bank, and then they stopped doing that because like they wanted the commercial banks to do all this.
Yeah, do you have more details about this avant-garde? Because that's what they call the avant-garde in Finland, and they call it the first CBDC in the world. Yeah, it's very interesting. So do you know why they finally let the commercial banks take over the project?
Maybe it's a good sort of one of the last sort of notice, because of lack of adoption by the merchants.
Okay, that's interesting to know. That's interesting to know. Okay, okay. So we have some feedback.
Acceptance by the merchants, yeah.
Okay, thank you very much, Kimo.
Important topic there.
Sorry?
Important topic, the acceptance and adoption.
Yes, and yeah, and how can you have not too high nor too low adopted solution? So, is it possible even to strike the right balance? And I would like to talk about further questions, cost of CBDC, but it's now we are at the end of the session, unfortunately. So. I would like to thank you all for your different contributions. It was very fascinating, and I think we could talk for hours about this topic. Can we strike the right balance for a CBDC solution? There are still further work to do, if I understand well about your different contributions. So let's work, and let's meet each other next time, maybe in 1 year, to have a summary of our advancements. So thank you very much to everybody.
Thank you.
Thank you.
Ladies and gentlemen, let me welcome you to the last session of today's European Payments Conference, a session called RTP, Can a Private Platform Address the Chicken and Egg Problem? We're going to approach the topic covering three major questions. Number one, is there a demand for RTP services? Is the time ripe, or is it just another buzzword consultants are preaching, are trying to grab attention, and are trying to make money off? Secondly, if there is demand in the market, why is RTP not taking off? We know the infrastructure is there, we know the rule books are there, and that's almost for a year now. Why is it not taking off? And the third question those two lead to is, can a private platform like Evil Europe solve the issue? Can such a platform bring the traffic to a platform that is needed to make such products successful? I'm very happy to have both sides of the medal on the table today, on the panel. I have Michael German with me from UniCredit. He is within GTB, head of sales products, head of sales of the payment products, representing the demand side. On the other hand, we have Dieter Görten. Hi, Dieter. From SIX, the Swiss infrastructure provider for financial services. And Dieter is responsible for the products and as such responsible for eBill as one of his topics. Before we dive into the discussions though, I'd like to give a brief introduction to the topic. I started with a question, is there demand for RTP services? And there's three angles we can approach the topic from. Number one, what are the corporates saying about that? And what else can I do better than referencing to a study EBA did together with PPI consultancy in Germany on the topic last year. And the results are encouraging. More than 90% of the respondents, and by the way, those were 123 corporates across around 13 countries in Europe. More than 90% of those responded that they can imagine using RTP services in the area of billing. So a clear statement that RTP is something they position for invoice payments, for traditional invoicing, not against the direct debits. And more than 90% responded that they see another use case being RTP in e-commerce. So on that side, I believe we have proof that there is demand. Second angle, what do the banks think? We believe that RTP presents a chance for banks to counterweigh the issue that EPI tried to counterweigh as well. There's a strong dominance of the card scheme providers, of the big techs, of the FinTechs. They're all trying to grab the customer interaction with the retail customers, trying to get into that space and make the most of it. Offering RTP services on the retail side can, and we're convinced of that, can help banks regain ground on that field, and having or bringing the customers back to the account, being able to provide additional services for cross-selling and upselling. And then there's the question, what do the consumers think? Here we can't rely on on studies. We rely on what we believe RTP services can do. And RTP services can provide most convenient forms of payment that are better than anything else we see in the market at the moment. So we believe there is a demand, and the demand is not only from the biller side, there's a demand on the bank side, and demand that might not be obvious at the moment, but once solutions are out there, there will be a demand on the retail side. Then why is it not taking off? About a year ago, the scene was set, the rule book is there, R2P is there, the banks could offer services, but there's no traffic. There's no traffic on EBA clearing. And I just looked it up shortly before the call today. If I'm not mistaken, there's exactly one company that has registered for EBA clearing as RTP. Why is that? EBA clearing did not just set a platform up because they didn't have anything else to do. They did that because about 3.5 years ago, there was demand. Banks expressed that there is demand. They started the working group and developed the service. Yet, no traffic on it. And there's various reasons for that, we believe to see. Number one, the chicken and egg problem. A platform, a service like that can only be successful if you are able to create demand on both sides, create an ecosystem. If you want to reach billers, you want to make them send RTPs, they will only do that if they are sure they can reach a majority of payers. On the other hand, when we look at the payers, why would some consumer subscribe to such a service? Only if there's a sufficient number of corporates being able to send RTPs. Otherwise, I wouldn't do that for one biller. So chicken and egg problem seems to be the dominant issue. On the other hand, we see that, and we've done quite a few pre-studies on RTP services for German banks and some others. There's no case at the moment to be seen. The investment need to build connectivity to the customers on both sides is way too high to do so without being able to calculate a business case. So there's large hesitance towards investing into products. Nobody knows if they're shaking off or not. And then there seem to be a few other problems, technical problems. It's not only about setting up a rule book and setting up the infrastructure. There's more than that to make such a platform live. With that in mind, eBill Europe decided, and some of you might have seen that in the newspapers in December last year, eBill Europe decided to bring a platform that is in place in Switzerland for more than 5 years now, and that is very successful, to bring that platform into the Eurozone and offer the service to the European banks. So, having said that, let's get into the discussion. And I'd like to start with a question to you, Michael. Do you agree with me I mean, you spend most of your time talking to clients. Do you get the same kind of feedback that EBA and PPI got in their survey?
Yes, and thanks for having the chance to be on this panel today, Stefan. I absolutely do agree with what you described. So there is a lot of talk about request to pay. There are a lot of talks about platforms like eBill, etc. But there is also a big but. And apart from the reasons you were all already mentioning, I think there's one very important point, at least what we learn in our conversations with our clients. And you know, you were mentioning when the discussions have started. It was 3.5 years ago. And 3.5 years ago, we had a kind of a completely different world. You know, 3.5 years ago, we would have been sitting in a conference room today. We would have had some direct interaction. It would not have been virtual. And suddenly, you know, we had this pandemic, and a lot of our clients, they were simply confronted with the situation that instead of, like a lot of them would have loved to focus on business opportunity, they clearly had this focused business continuity. And I think it's not only about our clients, it's the same counts for banks. You know, in all fairness, 3 years ago, I would not have imagined that it's possible that the majority of my people would be working from home and even would be successful from home. So I think this timing perspective and simply this crisis situation, we hopefully, at least from the first one, we will get out rather soon, has a tremendous impact on it. So I clearly think the study, the value of the study is clearly still there. There is the interest, and I'm pretty certain that as soon as we all will have the chance to be a kind of back to normal, more people will focus on it again. But you're of course right. You know, there is this chicken and egg situation, and on the bank side as well as on the corporate client side, if there would already be a case that more companies and not just one would have registered, would have signed up, you would have a positive domino effect, and it would be completely probably easy. So on every side, we still have quite some convincing work to do.
Aside from the timing issue, is there a feedback you get from the majority of your customers? Is there a distinct feedback from different industry sectors, or is it all the same?
No, there is
content.
Yeah, there is clearly different feedbacks depending the industries, and also depending clearly the size of the corporates. I think what is currently also discussed in the press is that especially the insurance industry would be very interested in solutions like this, because in a certain way they have similar issues like what we are discussing, that their interaction via own platforms is not that easy, and by having a solution like R2P and eBill, I think it would really go in the direction they are looking for. One industry class where we currently receive a feedback that they are interested, but still they are not seeing as a massive game changer is, for example, the mobile industry, because the invoices that are sent out, they are still perceived as very important because it's a direct touch point with the clients, and it still seems to be easier, you know, if you put some merchandising marketing articles to the invoice, you know, that you have a certain cross-sell potential instead of having just the invoice by request to pay and a platform like eBill. Also, you know, we do believe and get a feedback that all the companies who offer on-demand services are interested in this kind of idea, because you clearly would have this 24/7 approach. And you know, just think about the sporting industry. You know, you have a football game, and you're probably not interested in signing up for every single game, but for example, the World Cup final is something everyone would like to watch. Yeah, and if you could still then decide in the last second, you know, to buy something, I think a solution like request to pay would be a really good solution. And also, you know, for certain high value goods, it could be an idea, but obviously there we immediately get then into the threshold discussion. Yeah, for example, you know, potentially for buying a car, it could be a nice idea, but the threshold is not allowing currently for such a huge amount for cars that potentially could be acquired.
And you're referring to the threshold for the instant payments, right?
Correct.
Yeah. So you see a close link between the success of such a solution with SEPA instant payments. Okay.
I think everything, you know, you have to massage on all these angles that you ultimately can make this a success. Yeah. I don't believe that either, you know, all these kind of ideas will see a boost or nothing.
Dieter, as the responsible manager on SIX side, I assume you are discussing the topic not only with banks but also with corporates in Europe. Is there any similar feedback you're getting? Is it different from country to country, or can you just subscribe to what Michael just said?
No, I would fully underline what Michael just said. I'm definitely on the same page there. And I find it hard to add anything to it. I think when we come back to why doesn't it work, like your initial question, Stefan, and I look at the Swiss experience, it took some time. And we were just chatting before we went into that workshop here, and I said to Michael, maybe we can use that time now also as a chance to prepare the time where we recovering to full normal as to COVID and war and everything happening there. And maybe that's a time where we actually lay the foundation to get a good start then in the market, because what is of the essence is this chicken egg thing. We have to get critical mass. I believe that banks are decisive in that whole thing. We have relationships on both sides. And I think there is one factor which speaks in favor of our solution, which is that we make it very easy for banks to participate by providing the means to link to that system without enormous investments. And I think that's an addition I would like to make. But otherwise, I completely agree as to the needs of the clients there with Michael.
Mm-hmm. Talking about the investment needs, Michael, I assume that also UniCredit has been thinking of RTP solutions, has been discussing what could be offered before eBill Europe came up on the screen. Can you share any thoughts on that?
Yeah, you know, without going too much into detail, of course, you know, we have been analyzing it very carefully, and at the end of the day, I think regarding this kind of solutions, you always have the discussion: is it better to develop something by your own, which is really then 100% fit to the systems you already have and the systems that need to be linked to something like this? Or is it better to have a linkage to a platform like eBill? You know, why we have not made a final decision. And in all fairness, also in our organization, if you have such a discussion, there are always different point of views. Speaking for myself, and especially the sales perimeter, we do believe that a kind of an open solution like eBill has a strong advantage. And then I'm taking up the point from Dieter. You know, the most important thing regarding such solutions is the critical mass. I fully do agree. And simply, I do believe it will be easier achievable to reach this critical mass. And then you can discuss what is it critical mass. Is it 25, 35, 40%? But something in this magnitude, I would say. It's easier than if you try to have it alone and simply hope that some people would like to follow. And that's simply the reason why we currently are in a very deep analysis phase regarding is eBill the solution that we consider as the right one for the German and simply the European market.
Basically, you're saying that that doing that on yourself will probably not be sufficient to provide critical mass on biller and payer side.
Well, you know, that's the one thing, and the other thing is obviously there are investments attached, and what Dieter mentioned, clearly an advantage of this solution is that the immediate investments from a banking perspective are not that high, so the risk for the attached business case is smaller than, you know, if you have all the investments on your side. You first have to reach break even and take it from there. But in this regard, I would like to mention one other thing, what we see as very important to attract more corporate clients. And this is simply the need that it's also really needs to be extremely easy for the corporate client to link such a solution to their ERP system, irrespectively, you know, without mentioning the different names. There are bigger ones, there are smaller ones, but I think this is also a very critical point. If it's really plug and play, then the chances for success are far higher than if it would trigger a lot of investment need and as well as time also on the corporate side.
Okay, so Dieter, you're confronted with the point: set the hurdle low for the banks, set it low for the corporates, and that might be the most the most challenging one. Bring enough corporates and payers on the platform. How do you think you can manage?
I think that's an easy one, Stefan. got Michael on my side already. Yeah, again, like it's probably what we've been saying. Let me in the start add something about our perspective in 6 years. We are bank owned, so it could be something we've seen that in other places, which could be owned by somebody like the big schemes or whatever, who like to divert traffic away from banks. We are basically acting with a perspective in the interest of the banks. So what we're thinking of is 4 corner models. We provide a platform. Here's the first cornerstone. We take the risk to provide that platform. We invest in it because we have done that. We have a platform. You need to remodel it a little for European purposes, but I think that's not rocket science. We assume that risk, and not an individual bank has to construct such a platform. Referring to you, Michael, before, if every bank starts doing that, what a waste, right? And now comes the second part, which is, what does it need in order to get hooked to that platform on the banking side? We make that very easy by providing software as a service, which can be easily integrated. We've shown that in Switzerland. We are linked to the e-banking of 96 banks, the E&M banking, by providing them software as a service, which can be easily integrated there. And we have 2 banks actually in Switzerland who do not use that form of connection, but implemented that by themselves. And I think they're in a position where they would wish they would have done otherwise. And the third one, and that's really difficult in the sense of it needs a joint effort. And now we have the breadth, we have many banks mentally linked to that platform, and now everybody needs to start pushing in the market for the corporates and for the payers so that we get enough traffic. And that can only be reached when we are sort of on the same page about the set of solution we want to provide there, so that we can get into a joint marketing effort there, and reachability on both sides is guaranteed. So yeah, it's about critical mass. Not easy on that point, but everything else, all those elements are basically there or can be constructed within short notice.
It looks like we lost Michael, so the discussion will turn into an interview now.
He'll come back. He'll come back.
I'll just attach
grill me, Stefan, grill me.
So how do you see convincing banks to subscribe to the service? I mean, it's good, it's easy to say, well, we need to create reachability, but why would a bank today say, yes, we want to be part of the game?
Well, in the first place, everybody probably would say, yes, we're into providing digital services to our clients. Now, today, what we see is a pile of paper when it comes to sending out bills and lots of mails and lots of inconveniences and fraud connected to it. So there seems to be an opening. I haven't seen much as to end-to-end digital billing yet, apart from our solution, I should say. Now, here is something which I really value as a payer, which is the convenience connected to it, which can be provided through my bank. So there's a value added, which actually brings me back to my account, because I find that invoice there right next to my account, basically, and I can trigger the payment there. We're expected to do that, and not to receive a bill somewhere and then sort of like put the information somewhere else, and again, all these inconveniences. So as a payer, I'm in a secure environment. I can easily trigger my payments. I have storage for those invoices, so I can recover them anytime I want. So there's a lot of convenience, which brings me back to my account, which everybody out there in the banking sector should strive for, tie people to the accounts to reap benefits there. And on the biller side, obviously, there are two main movements, again, connected to digitalization. I think the lawmakers are moving in that direction, that everybody has to have the ability to do that. We see that in other countries. I think that's coming, that you send in digital bills. So here's a convenient opportunity to kill that bat. And with the same stone, you can provide them means to enhance their cash management. Little known fact, in Switzerland, 95% of those bills which go through our platform, 95% of those bills are paid on the date the biller sets to that bill for payment. So you can actually reckon with that payment coming in when it's due to come in. You have, again, we have no fraud in that system. You have easy reconciliation. You can monitor what's going on with those bills. So I mean, there's a lot which you can offer your corporate clients. And as a bank, again, once you get that installed, you could even go a step further and say, well, listen, now I see all those payment flows there digitally. I can start enhancing my offering to those guys. Factoring is a very close thing there. And you could probably think of many more things in the corporate space where you can extend your offering. But that's sort of the second or third step. I think just the plain fact that you offer something which is entirely end-to-end digital is something novel and something worthwhile on both sides, biller and payer.
Michael, while you were away, I did ask Dieter why he was so positive to be able to convince enough banks to subscribe to the service quite early, so the solution really can become success. And now you're gone again. Seems to be a very unstable connection he's having. Well, then I ask you, Dieter.
Here we go.
So you seem to be very, very convinced you'll be able to bring enough banks to the platform early on to make such a thing successful. You did talk about the benefits on the retail side. Any feedback you're getting on my statement that RTP could be a game changer when it comes to positioning European banks against the card schemes, against the dominance of non-European players? Anything you're getting from your discussions with banks there?
Well, pretty much as I mentioned before, if I look at what's happening is that payment initiation goes somewhere, thanks to RTP2. And here's the same danger that big platforms snatch that away from banks, and that somebody actually receives a bill from somebody through a platform, clears the payment there, that goes to a PISP, and there goes the payment, and the bank is basically not involved anymore except for KYC and effecting the transaction. And I think, again, having that perspective of banks, because we're bank owned, I believe that we bring just that fact that we tie people back to the account, that we bring back to using the account and making that a regular habit. I'm a heavy user of e-bill in Switzerland, and I'm an average bank user. I wouldn't be much in touch with my bank if I didn't have e-banking, which presents my bills there. And I would say, like, on average, I don't know, 6, 7, 8 bills per month, which I have to clear for payment. Sometimes I do 4 of them in one go, but I go back to my account. I log into e-banking. I see what those guys are doing. I'm open to offerings there. So I'm like, that's an incredible advantage.
Okay. Michael, knowing that, great to have you back. Knowing that you're responsible for GTB, I'm still assuming you're not only talking to the corporate customers of yours, but also internally to the retail banking side. It is what Dieter just described, is that driving the retail side? Are they fearing to lose the connection to the customers, or are they still in a position that, well, we have the account, we have the customer, what else can help?
No, first, apologies for that. I think someone today had to have this problems. Otherwise, it's not a true virtual event. So we have proven now to everyone listening that it's a live event. Yeah. So I'm sorry for that. Yeah. But despite the fact that I was unfortunately not able to catch everything that what Dieter just said regarding your question, I think this kind of arrogance that probably was linked to banks for quite some time, that banks are believing simply due to the fact that they own an account, they own the complete relation, that's gone. Yeah, and that's not only gone within the last 1-2 years. That's at least for the decade. Yeah, we, irrespectively of the examples from Dieter, yes, we are absolutely aware that there is a very, very strong fight for our clients. Yeah, it's on the corporate side, but it's definitely on the private consumer side. And there are the big techs, the fintechs, etc., who try to offer smart solutions and ideas. And I think at least the vast majority of the bankers would agree that there is a danger that we could end up with being the KYC provider. Yeah, and sorry, we as a bank, we rather would like to see different, yeah, that we probably use a smart fintech to provide the KYC services, but we still are the owner of the classical services, why we do believe a bank is there. And I can echo what Dieter said, that without having this kind of smart solutions, it will be even tougher, to get in interaction with the current client base. Yeah, if I'm discussing such topics with my father, who's turning 80 shortly, well, he still believes, well, no, there is always a need for a branch. Yeah, and I tell him, well, I don't believe so. Yeah, if you look and what kind of services are used. So, and we clearly have to find solution as a bank to attract the clients. I can state for UniCredit, but I think it's for the entire banking market, that we don't believe that just having an account will be sufficient. There are new kids on the blocks who are offering smart services, and we try to find solution to be probably even more attractive, yeah, and really be into the game, offering the service where we really think we can add value.
Thank you. So let's go back to your customers. The question I wanted to ask while you were away, which obviously didn't make any sense, but I'll ask it now. I mean, such an ecosystem, be it R2P or be it eBill Europe, will only be successful if demand is created on both sides. Yet some banks are either busy with handling all the sanctions, or are hesitant and are trying to see if things are moving on, and want to be smart follower rather than early mover. Do you see an advantage for yourself? I mean, you haven't made up your mind already, but do you see any advantage in jumping on the train very early rather than monitoring what's happening and being a smart follower?
Well, from a sales perspective, I definitely see an advantage, and I do think if you're an early mover, you can capture certain client bases. You can simply make certain experiences that will allow you to be in a better position. However, you were mentioning sanctions, but it's not only sanctions. There are several other regulatory topics. I guess everyone in this conference today is well aware of, that are supposed to happen rather by the end of the year. And so from a banking side, there are certain bottlenecks. Yeah. And then I'm also again by the topic I mentioned before, business continuity versus business opportunity. So would anyone rate such a project right now, especially from a product side, over a regulatory project, which needs to secure that you are also then end of November, December are still able to participate in the payment world? Obviously not. Yeah, and this is one of the hurdles that ultimately, you also for such a project, ultimately you are always touching the same resources. So that means then also internally, and I'm pretty certain that I'm not talking about my institution, but these are the thoughts everyone currently is having, how you can present it in a very smart way that you still have the sufficient resources. Yeah, from the sales point of view, it's a pretty easy decision. I want to have some new products, some new solutions that I can discuss with my clients. That brings me probably also in an advantage position in the discussion, instead of same and discussing some issues with the account statements, whatever that can happen. From the product side, it's simply that we have some scarce resources in the industry. I think we all have learned that we have certain unicorns we need in all the projects, probably people that have not been rated that high some years ago, and now you know how important they are. So this is simply the situation we have to handle. Yeah, but I personally think if you are in such a project early, it has an advantage. But then I'm back to also what we discussed in the beginning. It's important that the investment costs are not too high, because clearly there is this risk to fail attached. Yeah, and nobody wants to be in a situation that you were the one convincing that you have an army of 20 plus people focusing on such a project, and you are presenting business cases of millions and millions, and suddenly 5 years later you are the ones who are presenting it. Of course, you always can try to have a different position than at that time, but probably that's also not the smartest solution to handle something like this.
Okay, so I'm hearing that in general, you do see all the benefits that such a platform could provide, yet you're questioning whether the timing is right in light of what is happening in banks in the payments area at the moment.
Correct. There is simply the combination of effects, like, you know, first the investments everyone had to make to really be virtual and digital. During the COVID crisis, it was the first one. Yeah, then I think nobody of us had only the slightest idea that 2022 would be the year where we have a war back on the European continent. And obviously this is triggering, especially to the payment sector, some consequences, some also additional investments, because the sanctions regime, which is it's simply demanding from a payment perspective. Yeah, and plus you have this regulatory projects that are supposed to go live rather soon, which is making the situation not easy. Yeah, but not easy doesn't mean impossible.
Peter, if I recall correctly, the announcement you made on eBill Europe was that you wanted to collect like banks representing 35% of the launch markets, being Germany and Austria, before you take next steps and go into the investments needed to adopt the platform. Now we're hearing banks, and then we're hearing at least from one bank, but I believe the situation is rather similar in others. We're hearing that timing might not be right. What's your response to that?
Well, first things first. First is I didn't hear from anyone I've talked to so far, and we talked to many people, and you know that that this is a silly idea. And okay, seems to be interesting. Now, Michael comes and says timing is critical, and it's maybe bad timing at the moment. And so maybe we should say, let's look at our timing. I believe, I made that point before to Michael, that we could use that time in order to explore what that solution might mean to banks, given all those critical resources you have, Michael, which are tied up somewhere else. But I think we can hammer out a plan how that should look like in the future, so that everybody really understands what the solution is about, what it means in terms of investment, so that you can have a full-fledged investment proposal ready at the time you think you are ready. And that's not only you, but that's everybody else who's interested in. Now, let me limit that a little bit. I think we made a lot of progress. We believe we're pretty close to getting that third of the market on the payer side to actually sign off something which says we're interested in it. I think we shouldn't sit together in the first phase with 20 banks at the same time. I think that is not a good way to success. We should limit ourselves to very few, 2, 3, who really represent some critical mass and who are really interested and want to hammer that out with us. Comes back to that point, Michael, on the corporate sides, you stand to gain a lot from being first mover, because I think if you are connected to those corporates once and collect their bills, you're connected to that payment stream, and it's difficult for them always to switch, especially if that works. Right? So I think there's much to be gained to be early on in that process. We still have to have those signatures, let me put it that way, to be absolutely sure. And then again, I'm like, having said all that, timing is now a critical point, the resources being tied up, and we cannot push for something and say it has to be November this year or something. We have to adapt to what's going on, still knowing that this is not a silly idea, but seems to be a pretty good one.
Mm-hmm.
So
Stefan, there, I definitely want to support this. Yeah, that that's what we are hearing from the market as well. Irrespectively, if we're talking about our competitors, if we're talking with clients, it's definitely everything but a silly idea. Yeah, and there is interest. This is what going back to the intro of you, what the EBA study is showing as well. Yeah, and therefore I can only encourage everyone that I think it makes sense to look at this idea and to continue to look at this kind of opportunities, because from a banking perspective, there is a lot of sense in it.
Very good. Dieter, it's probably not a coincidence the initiative is called eBill Europe. We did talk about the launch markets. What are the plans with respect to expanding over the launch markets and then going to other countries?
Well, saying launch markets implies there is appetite for more. We would like to be present in as many countries as possible, as soon as possible. Obviously, we cannot overstretch our resources, but we believe that given that we have a platform, basically, it needs some remodeling. I mentioned that. But once we have that, we should be able to scale that also to other countries. So whenever there's interest, we are ready to step in there. So it's not launch markets, but it's Europe we're interested in, because we believe ultimately, it's scale business for us. It's our interest. Many banks, many credit are acting internationally. You should profit from something which is similar in Italy or in Germany. But there's the cross-border stuff which is going on as well, and that should be also enhanced. So I think there's lots of appetite to go beyond launch markets.
Talking about cross-border stuff, Michael, as UniCredit has quite some large corporates working cross-border as well. Is that a topic? Is RTP a topic for them to deal with payments on a pan-European basis, or is that a local game for them?
No, I think, again, there are different players in the market. What is clearly important is what Dieter said, that everyone has to understand if we're talking about potential markets, is clearly it's Europe, it's predominantly SEPA area, where then there is the interest. If you really add a lot of foreign currencies, I think it's becoming really, really difficult. Yeah. So, right. I think there simply for a corporate with an international footprint, such a solution with request to pay e-bill, it could be very interesting. Yeah, but if you just look at certain specifics in the different countries, you were mentioning Italy, you have Riba. In Germany, you still have the Lastschrift, which a lot of people love. Yeah, you have a Dutch standard, you have this standard, etc. So I think if you would manage by this to also have a European standard, there are a lot of treasury centers who would be really happy, yeah, if you ultimately would be able to use the same across Europe. Yeah, so I think that clearly could be an advantage. I would assume, Dieter, what you were mentioning, also then for SIG, it's you have to do it in a certain way, one step at a time. Yeah. Again, it would be nice if you would have 20 countries immediately on it, but that's also, I think, rather not possible. Yeah, but
20 countries in 2 years is fine. I mean, I'll slow down.
Somebody seems to be ambitious.
How many SEPA countries are there? That was actually, thanks for that, Michael. That was a more precise way of framing it. SEPA is our target. Right? Absolutely.
There's one, and then we're running out of time, but there's only one question left on my list. I started out saying that EBA clearing is live. They have a service. The question is rather easy to anticipate. How do you see eBill in conjunction with EBA clearing, with R2P? You see that as a competition to EBA clearing? You see that as somebody who could speed up traffic on the platform? What are your plans with respect to EBA clearing? And I assume you did talk to them already.
I did. We did. Thanks for putting these words in my mouth, Stefan. They're not competition, obviously. No, I think we have something which EBA doesn't have, which is our portal, which can be implemented easy into E&M banking, which makes it so easy for banks to participate. I think that's sort of a missing link there. And then beyond that, I believe as soon as we have established a connection between those two platforms, both can benefit because it enhances reach. And if we say we're dealing with chicken egg, then we're about reach, right? On both sides. So you can connect more banks, you can connect more billers, you can connect more payers on both sides. And then it becomes a matter of identification and all kind of things. But I think interest of EBA, talk about that is there. We're about to talk with them in a bit more detail. And I think we will have a fruitful cooperation there. That's my outlook there.
Okay, so you were talking about linking the platforms. What would that mean for banks? Would they have to register for one only or for both, or how would that work?
You could play that as a bank. If you're registered with EBA and if you're already connected to that, fine with me. And still you could use our recipient side then, implementing our portal and vice versa. So no, you don't have to make hard choices there as a bank.
Well, I think we covered the topic extensively. We see it's not an easy one, but there is some appetite in the market. We need to think about timing, but obviously there is demand there. The success factors seem to be there. Obviously need to be validated in further discussions, but it looks like that could really help RTP to lift off. With that, I'm handing over to Nada Maliki for the closing words of the session. Thanks, gentlemen, for the participation, and look forward to meeting you soon.
Thanks very much.
Thank you.
Stefan, thank you for moderating this session. And also thank you, Michael and Dieter. I think we had a long conference starting around 9 o'clock in the morning. And I do hope that we have chosen the right topics. And it was interesting. And I don't know how many people were watching at the end, but we had about 500 registered participants. And this gives us the opportunity to repeat our conference in May next year again. So we would like to stay in touch with you. Let me once again thank our sponsors. It was EFIS, Bearing Point, Giesecke & Devrient, and Banking Circle. Thank also to all the other speakers and hope to see you soon. Thank you very much and bye-bye.